Board button. Gotta love that. But yeah, well, between us and God, I guess. Well, you're gonna have to take my word that everything was in the in the call today, and that the idea that when we were up there, we were supposed to come down, and that we were gonna come right back up here. It took time, but that's what it was supposed to take. Every trend that was supposed to break in sequence to get us back to where we are now is what happened, and we're loving it. At the end of the day, this is a
It's like an 88
261.
to an 88.
You know, that could be really powerful in an environment like this. I'd love to see it actually do that. Because when was the last time we saw that, right? I mean, it's got to
The
be
spike is
due.
the B point.
The spike. Oh yeah, to the left could be, yeah.
On your screen right here, it's yeah, that left spike there.
But on the
That's the
top though.
point here.
But on the top though.
Yeah, like
So it insinuates that it could go um
way higher.
way way higher. Yeah. Like up here. Oh my goodness, is that the distance that we went down off of the green zone? Because if that's the distance that we went down off the green zone, and that's what we have to do to go above the red zone, I'm done. It's very much the same. You know, when we take it from the inside of the red zone to the outside of the red zone, you know what's funny is in my video that I was making yesterday, which um, I explained that same thing that I'm like, hey, I like to see it out of the bottom of the green zone and the inside of the red zone, not the outside, because most people would think, hey, if something's going to be on the top, I'm going to draw it on the outside, and then it's going to be on the outside of the other part. And I mean, like, there's nothing wrong with that, but it's usually that way when you talk about symmetry in real life with most things. But the reason why is like most people will do it like that, and most people are wrong. So the market makes that the case every day. I believe it.
2 in the W for those who wanted to look at on the exclusive call. I should probably use
Let me
those
look.
cloud W, um, the blue ones that
Oh yeah, if you're gonna
Robert
draw,
uses.
like, yeah. But then again, like, you have to think your time is valuable, and the moment that you're doing this, you're literally wasting time. Unless you're showing somebody. Like if somebody doesn't know and you actually have to show them, like it's so much easier to be like, do you see the W? Like it's there. And I mean like everybody can get the picture. It's like nobody needs to see this. I mean like the W can be drawn like you did.
Yeah, but I
And
just
I'm
meant
like
like to make it look nicer, like if I'm
it's
showing somebody.
true. If you were gonna like, if you were to
Like
show it to somebody,
visualizing myself. Right?
like, okay, for an example, if you were to show it to somebody that's never seen charting like this before, it scares people when they see a lot of stuff on the chart. And I'm like, yeah, like this line right here, I could remove it, but am I looking at this line right now? Like, is it a problem because I leave it on? Would it be an issue if I even had that line on, or is it too much to comprehend now? You know what I mean? I'm like, really? Are people like that? But they are. They can't comprehend the fact that there's two extra lines over here that aren't even impacting the price, but because they're on the chart, they affect people negatively and they draw negative emotions out of it and they start to put walls up that prevent them from understanding and comprehending the information. They choose to neglect instead of accept. And I'm like, wow, you know what's interesting is it's not their fault because they're human. It's what they do. So
Okay, so then if we're um, gonna make this potential W, the blue line that I found, actually the second point touches on the B point
and
and it
that's
goes
like
upwards.
that's way zoomed out, right? Is that 15 minute? Oh no, hour. Let's see.
I'm like at hourly.
Yeah. Interesting. You
See
know,
that big W there? But it's like a 90, it's like a 97 to
well,
77.
what makes me interested about that is like it's like we could look at the volume and it's like is the volume respecting the little bit extra that it did? And I mean, like, let's talk about what little bit extra it chooses to do when it makes a proper reversal. And could it be allowed to do that little bit extra now? You know, that's a really interesting question. Because I'm like, well, it does this little bit extra here, but it was still fine for the reversal. It did this little bit extra here, but it was still fine for the reversal. And I'm like, well, suspiciously particular that the little bit extra seems to have been used somewhere else. This bit here, very similar to this bit here, and this bit here. This bit here is very similar to this bit here. I mean, we can see also similarities in this move here, and the little spike that we had there, also here. I mean, what is it that we get this over here, and this over here? And I'm like, well, is this much allowed to move past the target or the reversal point? Because I'm like, well, at the end of the day, is it not true that that is what it does when it has made the most predominant reversals? So it must be allowed. It couldn't be a deterrent. Most people would think that it was a deterrent because it broke through the level that it was supposed to reverse at, but it broke through by this much. Well, just remember, by breaking through that much and making that the case, how does it not enforce the reversal? You know, making a Wiccan spike at the reversal point this much is actually not so bad. So I'm like, well, every time we come up to a long-term reversal on this time frame, this much could be justified as the real amount of Wiccan spike zone that it really has when it works its best. And I mean, you can expect that to go unnoticed by the public. As simple as it is, they just simply won't be looking for it because they don't find any value in it. Instead, they're watching the news. So it's really interesting. And you can count on it. The gentlemen on Wall Street absolutely count on it every single day. You know, it's very very interesting. I can see their work is very clear. I can see they have absolute respect for the things that I place, and they run into them like they exist. They use them as they're supposed to be used. The VWAP gets a grind. The we're at a new high of day. Anybody that did hedge it was okay. So basically, right. If you hedged it at the beginning of the day and then you found a long hedge as well, now your core is long. Now the the job is to find a hedge, you know, and now you've got more of a distance between your core and your short than you had originally. And you want to make that distance larger and larger because then let's say you get 2 weeks on top of this core, it's not going to be a daily problem that you're going to have to worry about re-entering. But you know that you're going to be exposed for all of the upwards movement from now on out in perpetuity until you sell the long trade. So why not just focus on half of the movement against the trade with less size than you're even taking on the core? So it's not even as risky. So if you're trading half or less than your core, you can really with comfort take all of these downwards moves while you're waiting for your core to progress, and if you see something that's really a danger to your core, well then take more on your hedge. And if you've already taken a few profitable hedges, well, what is it to use the profit contained within those hedges to justify developing a larger hedge for a bigger risk? Right? Really interesting to me. Yeah. It's really interesting. um and having to explain it like that really makes me think about it in a completely different light too, and I'm like, wow, geez, really lays it out. I'm like, what's the argument against it? Oh, the people, have so much impact on the market that everything that they do is just making it work so precisely, and they just recognize all of these lines and all of these targets, and they make it hard for themselves, because they want to make it hard all day to get to the proper reversal point, then to hit every single target because that's easier for most people, right? Not. I mean, like, would you not think that the entry would be contained within the same day, and then we just make like if you had control over the market, would you not be like, all right, you see it coming down, right, and it's here, and it's like, well, buy in there and then have it reverse immediately. You don't have to wait. Who the hell would choose for it to go sideways? Nobody would choose that. You would have it happen now for you instantly. But it's almost like somebody's playing a game against the people that can't deal with waiting. Yet they choose to respond to every single green zone and red zone like it's something that exists, stepping on top of it and conquering it as it moves towards the targets. Very, very intriguing to me. I'm like, the work of the public. Yeah, I mean, not a single individual even has the red zone from last week because they're only thinking about the opportunities of today and how it could benefit them. Not any risks from any other day, not any kind of like when I look at this red zone and green zone, in retrospect, it's absolutely incredible how we spiked out of the bottom like this far like that, and you can see that that spike right there landed all the way in the green zone. Look at how it formulated on the top. Or if I place the outside of that spike, the point is in the red zone. And it's just I mean like the people responsible for that. I don't think so. That pattern's not on Google, ladies and gentlemen. So how are the people responsible for it? So at the end of the day, it's very interesting to me. Now, remember, this is a green zone and red zone of its own, and there's actually one that I haven't talked about right here. Check this one out. Huge green zone and red zone all the way up here. Many people will not have it. Remember how we treated this green zone? So we first ran into it and it acknowledged, well, sorry, we acknowledged it by ending this entire huge blast run that everybody gets to wake up and see, and all the people that can't take the whole day. You want to know what's funny? They get to see this is what happened. They get to see the show of force by the people that took control yesterday. This bar should be here, by the way. The purple zone's supposed to be in the middle. But that's okay. Doesn't change things. At the end of the day, um, we are in a small range that's appropriate to grind in prior to actually breaching the major green zone. Now, before, when we ran into the green zone, we responded negatively to it to acknowledge its existence, to show us that back in the day there was actually a range here, and it generated a big volume node just like we had down here. Remember, we stayed down here. Look at all that volume because of it, right? We were literally there, and that's a huge amount of volume. You could say that we almost had a little bit of a range in there, you know, like it was like that. And it's funny to me to see that when we were done with that range, we spiked out of the bottom and then the top. But wait, isn't that supposed to be a bearish pattern? Well, what's funny about that is it did break the trend, but only by this much, before reversing off the green zone and getting us to where we are now. Now, you want to know what's funny about that pattern? I'll leave that there too. Why not? Is we saw it yesterday, and it was a chop like this, and it had a spike out of the bottom, and it had a spike out of the top. And I mean, just to drag that template over, we're looking at something like that, right? So remember we had this one on an angle yesterday, where that was the middle, and then what we had out of the bottom was also the middle area, and it was also what we spiked out of the top. But is it not true that just like in this schematic over here, sorry, that the spike originated first out of the bottom? The consolidation separated the two spikes, which is the square box. Yeah, sure, it's on an angle, whatever. At the end of the day, it's the spike out of the bottom, consolidation, and spike out of the top. Those are the components of the pattern. Does it matter that it's on an angle? No, 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 not at all. At the end of the day, check out what happened here. We had a giant spike out of the top of this area. Now it's upside down, right? So we're just looking at the same kind of idea. But notice that when we made that low, we had a reversal. It had a spike out of the top, a consolidation, and a spike out of the bottom, and overnight chop led to the reversal. Now remember one thing. People of QQQ don't even get to see the overnight chop. They don't even know that it exists. A lot of people that trade Apple don't even know what it looked like overnight. A lot of people that trade AMD, any stock, they're all choppy and crappy throughout those times. So why is it that the people that do have the impact to move the market like this chose to get things going where no ordinary person could be part of it? Isn't that interesting? So, if no ordinary person could be part of where this move began from, then who's responsible for it? And why did they make it difficult for everyone that wanted to be part of this move down to the very last minute of the day? And and just to like reiterate the overnight post there, I'm just gonna show again real quick. that this is what I said about the overnight thing. This is 406, end of day chart. I'd love to see the blue and white line in action overnight. While the white circle on the top and bottom indicates that spikes are even out of both sides of the range. The white VWAP and the green dashed lines are still valid targets for any positions exposed to the downtrend breaks you see here. So any downtrend break that you see on that chart, all of those lines broke. Any hedges must be protected by this point. You can see we just came down to test that B point on the bottom of the chart, that very, very, very low one there. That was the last B point that the market was interested in testing. And you know what's funny? Look at that white circle there on the top, and notice that the white circle on the bottom is green zone and red zone to the horizontal range too. So it's not like we're just doing spike on the top and spike on the bottom of this small range. This area used to be a range of its own, and it chose to make things even out of both sides before continuing. It's interesting that that's the case. So that's the pattern that we were just talking about there. And basically, I posted as soon as we started today uh, that this was the case. You know, check out what happened. The VWAP was the target. All targets hit overnight. Yesterday, the trade of the day was at the open. Surprised nobody wants that because at the end of the day, it was clear when we opened there was B points that I placed here, here, and here, and here, and we ran up, and the first targets of the day were hit instantly, and that trade held the entire day, and it's still holding now if you still have it. So at the end of the day, um, barely, but still. So,
Off that trend line that I have a trend line up there, John. It
oh yeah,
just hit it and rebound off it. Yeah,
is
new
it is the trend line pointing upwards or downwards?
downwards.
Um,
Yeah, me too, actually.
okay, I guess it's
That's why.
probably a
That's why. Well,
long term.
big spike, but that's why I took that play.
Hmm. Here, sorry about this chart. Let me just take a look. It's got to be this line here, eh? Yeah, I got nothing against finding the highs and persisting with those highs. Yeah, that's it, eh? Gotta be. And I mean that's a pretty huge line. I mean it deserves to be red yellow. And it's not because it has any kind of urgency of breaking or anything like that. We could certainly chop the crap out of it and have negative responses to it, but it is the line that until we break it, we are in a downtrend. And there's no questions about that because like it undeniably is going to contain us or not that it's going to contain us, but it is containing us until we break it. You know, it's going to be considered the barrier that has to break in order to end all downtrends, basically. And at the point that it does break, it's not that it's incredibly bullish, it's that all that we're left with is uptrends. And as soon as those uptrends break, oh geez, is it ever something that can create opportunities? Something that can create the need to break the trend. And I mean, does this trend is steep. I mean, like it having the audacity to break that daily trend by running at it with exerting all of this energy and then having energy to break it too. I mean, like okay, maybe, but it's calling for a retest. It's like, hey, now that we've exerted tons of energy here, we might pause before breaking it, but when we do break it, we come back to test the red yellow line. So any long trades that are taken in the excitement of the break of that trend, it could be something like a decent move, but it's very likely that it comes back to do a retest. It should be allowed, to say the least. And I think that in the process of it coming back to do the retest, a lot of people will sell their long trades and not be able to find an area that's safe to get back in because it will continuously come to overlap them for a prolonged period of time. And it will draw energy out of many people. And I think that this is a plan by the people that orchestrated this move so that they can continue winning. They're not leaving their computers, I'll tell you that right now. Not after all the work they put in here. Not after like and you know what's crazy? Is they fully believe that they're winning right now. 100%. And their results will back that up too. So at the end of the day, there was one clear strategy, and you could say it was probably like somebody was thinking of the hardest strategy for most of the people to go about because they had to persist for through to the very end of the day if they're to find exposure to this, unless you're going to try and trade from 3 o'clock in the morning, which is when the market's not open, you know? So ordinary people, as I said before, are not responsible for this move or this accumulation that led into this move because ordinary people couldn't trade. So then it becomes, well, who did orchestrate the move then if it wasn't the people of the American stock market? Because it was closed, ladies and gentlemen, when this move started. So explain that. It's like I see the cookie jar and the crumbs lead to Wall Street every single day. Who took the money out of the freaking cookie jar? Well, Wall Street every single day. Basically.
Good morning.
Hey, morning.
Morning.
Morning, man.
Go take old furniture to the dump. I got a new couch and stuff, so I'm gonna miss today, but
Good call yesterday on all of that stuff.
Yeah.
You know, I didn't have the courage to hold overnight was, while it's just paper for me, it's like something new. So hey, GG.
Oh yeah, yeah. See that yeah. That's
Right, man. That's right. I didn't see it yesterday, and so I just sort of, like I said, I just
It,
sort of, yeah,
yeah, yeah, yeah. No, I feel that. I feel that. It's like see what happens. And that's like now you get to see the result of like this is your position the same way as the people that have done it the best. So very interesting. There's no better way to do it than that way. And you really think about it, and I'm like, well, how could you have done it better? And I'm like, well,
I wouldn't have personally known that it was gonna rebound like that in the morning. So I don't know. I wouldn't have done that without hearing you say to do that.
yeah, man. Well, in time,
Yeah,
you
right.
will.
I mean, that's what it's all about. You just kind of, I've got to see these things happen to know that they happen, right?
Yeah,
So,
exactly, exactly. Like I say, about the dangers a lot, where I'm like, how do we know that there's danger if we don't know what it looks like? Same thing goes for an opportunity, I suppose. How do we know when to get in if we don't know what a true opportunity looks like, I guess? And the more that you see that opportunity, the more you're going to be like, oh my God, this one again, how can I not do this? You know what I mean? It's like because you understand it so well and you can see yourself a part of it, now you can see exactly how your actions can have a reward basically, and you can write a report about it if you wanted to. You could be like, all right, well, these are the things that I found value in, and this is why there was less risk than there was reward, and why it was a good point, or at least why you would even do it again. Like it's like something that you had multiple confluences suggesting that there was a higher probability that you could get a certain result out of your actions than not, and there was no hope or maybe associated with it. You could define clearly that you were saying, hey, this is the profit target is significantly farther away than my stop loss is, so like I'm risking less than what my reward was, and there's multiple different factors that can come into why you take the trade, and the more factors that you have, uh, technically the better. But honestly, there's some times where enough is enough, and you don't really need to continue looking for confluences because you've got so many already. And
yeah. If I
that's
had set you know, internally, I would have wanted to set a higher stop loss because, it was negative. I
hmm
played long for the end of the day and it kind of went negative and,
hmm
uh, so I just let it ride and put the stop loss at a pretty good extreme, but
oh yeah.
it was nerve-wracking.
Yeah, because it's a little bit difficult to catch it when the reversal is at the very last minute of the day.
Right, right.
I mean, how are you? What do you say? Like, how do you not experience some sort of red on that? It's like, well, the people that called the shots on that move, maybe they get the very pinnacle of reversal at 2 o'clock in the freaking morning. I'm like, who's doing
Yeah,
that?
that's not
It's
me.
that's that's not any ordinary people that want to be awake for the open. You know what I mean? It's like, really. What are they doing? It must be Team B that's doing the overnight session, eh?
That's it. Well, I got to take off. I'll probably be back around close, but yeah,
Okay.
hey, good today. I just wanted to pop in and say that.
Yeah, man, for sure. We'll catch you later.
Yep.
Take her easy. Oh, so let's take a look. So we're grinding the green zone. I mean, and then it's like it's so much easier to deal with when we know it's supposed to be grinding the green zone. And like I said before, if it was a play, I mean, I think it is this makes money for some people, just not the individuals. I think it's a thing that the institutions understand as an absolutely necessity. And I think like a lot of the people will end their day throughout this consolidation. It's very, very normal, and they think that, it's gonna I think it's a squeeze, because like a lot of people, they look at the day and they see it's high, they'll be like, oh, double top, there's a lot of reasons to short it, the trend and everything like that, and they're all just getting stuck in this range, and I think they're about to get blown out of the top. And what's funny is a lot of people shorted the red zone, and they all put their stop orders at the top, and they're going to be buy orders, because if you short, right, you're trying to make money by it going down so that you can buy when it's lower. So to get out of your position, you buy, right? So if you have a stop loss, it's also a buy, because that's how you get out of your position. So if we get 1,000 people to short right here and they all put their buy order right at the top, and you just put a little bit of an order in there because you're a huge institution with billions of dollars, and you just flutter it up a little bit and hit one of their stops, and then it's a chain reaction where the 1,000 people start buying at the high. Now they don't even intend to be like this, but this is how you can create the public to actually make progress for an existing long trade that you've accumulated overnight in an area where nobody else could, and get everyone else to try and fight against you and make them pay for the progress of your trend. Doesn't seem very nice, does it now? But people are just oblivious. They think other people are trading against them, and that the other people, they have just as much of a chance against every other individual as they have. And I'm like, no, 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 no. The plans orchestrated here are absolutely insane, and it's a danger to not understand them. That's the way I look at it. And it's like until you do understand it, nothing should be done, I don't think, because it's a risk, right? Until you see that absolute clarity, and it's like, well, yeah, you're afraid you'll be waiting a long time. Well, how long are we waiting before we find the next clarity? Yeah, there's moves in here. We could talk about this consolidation move for move. I just don't find value in moves this small. And I could. It's not like I haven't. It's not like I just don't want to waste all my energy on a tiny little consolidation when I know that there's going to be more moves like this. And I think the agenda of the people that push this up here, it goes well into today. Sure, they might be having a meeting about it right now or something, but I do think that they're long and they're going to keep making that money. The red yellow line, like I said, it's funny because lately we've been responding negatively to it. It's actually strange that we haven't responded negatively to it as much as we usually would, but instead we got stuck here. Now, you want to know one reason why we could get stuck at a place like this is that big green zone. Because is it not true that the major move that we had stopped at the very pinnacle of that green zone at the top? Now, I talk about the big green zone because this is a bigger range and it's going to be more recognized by more people and it had more volume in it. But you don't want to know what's funny is we also had a little range here too. And I mean, what have we done to that range? Well, we came in and we kind of used it once, and then we kind of bashed through the red zone to try and conquer it, step on top of it. Why is it that in this portion right here, it was working as resistance, and in this portion right here, it's not resistance, it's stepped on top of it, it's support. And I'm not making it up. I'm like, well, how isn't it that way? So,
So yesterday I actually found a yellow zone and I cloned the yellow zone and
mhm.
we've been spiking on the top of that yellow zone.
Oh, I
I'll
remember.
post it.
I remember. Yeah, let me see that. I remember liking those ones. I do like that range. Yeah, I'd go the yellow zones.
There you go. It's in the exclusive call. It's the not the big yellow zone on the top. It's the little one that we're bashing. I actually found the yellow zone on the bottom. You can see the little volume gap down there. And we had a volume gap where I cloned it and I moved it to the top. We had one there yesterday. And it was the same size. So that's why I put it there. And now we're bashing that point.
Mhm. So, oh, but wait, there's another yellow zone, right? And it's on the bottom?
Oh, yeah.
Yeah, yeah, let's get that one in there too. I want to show it. So let's put the whole thing on there and let's see. Ah, yeah, there we go. There we go. That's what I'm looking for. This here. The spike out of the bottom. I like that. Like, I find that it's suspiciously particular that that's how much we went out of this top here. Like, it's like it, back to the front for a second there. And it's like this movement. Okay, so we had a low there. And I'm like, that came out. It tried to be here. Like, it really tried to do that. And I got a lot of respect for that. And also, why is it that this is a specific distance that steps on top of that, and it's also like it stepped on top of it here? Like, I know it wasn't the same thing, but man, was it ever close? And I like that. I'm like, this is the pinnacle of reversal. I mean, how much have we been moving every time that we do reverse? I mean, I can see it here too, very similarly. Like it's like,
The way I'm finding these zones as well is I'll look at the volume gap on like
Mhm.
a higher time frame, and when I see two gaps that are roughly the same size, I'll encompass one gap and clone it, and I'll go look in other volume gaps on different time frames. Like, you know, if one gap is matching another gap, then you know they've got probably something to do with each other.
Oh. So, yeah, okay, exactly. Another thing I was thinking about here too is this red zone, right? It sits on top of this node perfectly, right? And this green zone sits on top of or sits on the bottom of this perfectly. And this is like a medium. I would make this one actually purple or something like blue or something because it's neutral. It's
Yeah,
the
I was
middle
about to
zone.
say
Yeah.
disregard the second green
Yeah,
and
yeah, yeah.
change the color
Make
because
it
that
blue
will
or
fill
something.
out the color. Yeah.
Yeah, make it a neutral color like blue or purple or something that doesn't mean, something, or white or something like that. A white might,
That's
you
perfect.
might have a bar floating in your eyes when you close your eyes if you keep it
The
white.
VWAP is white.
Yeah. I keep the VWAP white because it's like I don't like to close my eyes and see like a bunch of lines floating around because it's so bright it's blinding me and stuff. So I like to keep it pretty dark. The VWAP's okay there because it's a good medium point. I like this VWAP at least for sure. Middle. And your VWAP's in the middle too. It's good. Oh.
And what's interesting too is where we're at right now with the little tiny yellow zone that I've got on the top. There's no gap in there anymore, so we filled it up and made it a node. But I think it kind of looks like we could take that volume node, and if I could take it and slot it in to the bottom yellow, like the small bottom yellow zone, I think it would fit.
Which on this chart or your chart?
The picture I posted, I've got the small yellow zones. One is in the red zone on the top, and the other yellows, like the small yellow zones near the bottom.
Okay, let me take a look here.
In the top yellow zone, the volume node can fit into the lack of volume on the bottom yellow zone.
Like up here? It,
So
are you
that
talking about
small little, yep,
inside?
that one. So the lack of volume in that node,
In that node. Okay.
we're building the volume at the top on that little yellow zone.
Oh,
So
now. Oh, yeah, because it doesn't have the consolidation in there. Okay, I see. So
yeah, so the
now it
top
has a
zone could
consolidation in
fill
there.
in the bottom zone if you were to be able to like take that volume out of there and slot it in.
Hey, that could be like an 80. The 88 to 88 that this is a different 88 to 88.
Oh, we could make another.
Yeah, it's like, well, hold on. I'm like that. This isn't the same 88 to 88 from before because that went past the 88, but now debatably it just went past that 88 to get to another one, which is a bigger one, which would make a lot of sense because I mean, when we leave this range, there's a good chance that we double it at the minimum.
Well, I just did those measuring tool thing that you said probably wouldn't be so great unless you're showing someone to use,
Okay, yeah, sure. Show me.
and it's an 89.
Oh, interesting. See? Okay, I like that. You can check what the actual retracement is with it. But, unless it's working off of one of the retracements that we have, it doesn't matter what it's at, right? So I'm like, okay. But it's funny to see that it is an 89 because it is basically, we would read that as an 88. I mean, like 89, 88, that's the same thing. Like 62, if it's just a little bit of fuzz past the level that's supposed to hold, and that's absolutely fine. But what's going on right now is actually different to what we've done inside of this channel. Like, we've never done this before. We've never managed to break the trend, come back to retest it, and then rival the support of the range. It doesn't mean like that it's not. It doesn't mean that it's even over. But one thing that I find strange is that this range. I know that it's trying to be here, but it's suspiciously particular that that's the same size as the node. I know it's not exactly on the same spot that it was before, but it does have that same size range. Like, it's using, okay, I know I can't show with that. I have to show with this. So you can see that this consolidation here was this big, and you can see this is how much volume that it decided to do. Anything outside of that box wasn't really much volume, and it wasn't for very much time, and wasn't really part of that consolidation. The bulk of it was contained within inside this area, right? And this area is also the size of the green zone and red zone, right? And we can see that that's the area of the green zone and red zone up top here, and also the the size of the node up here too. I mean, it's the same thing. It used the same distance. Now for more time, but damn does it ever want us to know that it is the same size exactly. And I mean, what, are we trying to put the same amount of volume in there? Because it's almost like it's trying to. We've put more volume in here, by the way, because you can see that the red lines up here, that's the POC, the point of control, the level that has the most volume out of any other volume level that I'm showing. Like, obviously, if I zoom out and show this area, it's probably going to be down here that we have most volume because we spent so much time down there, and you can see that change. And now it makes this look insignificant. It's like, yeah, sure, we don't have enough time in the day to do this, so it's like, I wouldn't wish that on anybody. That's a very slow day. If we did that as a open market day, that would be brutal.
I
Like,
found something interesting.
yeah, what's up?
So if we could do an 88 to an 88, so we're at an 89 at the moment. I drew out that tool. I posted the picture in the
Okay,
exclusive call.
take a look.
If we came down to an 88, look where it's at on the volume node.
We came down to an 88 down to here. It would be testing the volume node, right?
Like
Like
right
stepping
on
on top of it.
yeah, yeah.
Okay. And you want to know what that reminds me of is your last picture where we could see. Oh shoot, that's actually another picture. Okay. That's good. That's good. That's good that you have the one that shows the whole thing and then the one that doesn't. One that's zoomed in to show what you're looking at. But that is the overall projection of what could happen with this pattern. Now, what I was thinking was more along the lines of that we actually had an 88 here, um, and then an 88 here, and that the 261 could actually be down here, ironically.
Oh,
Yeah,
I did not see that.
yeah. Yeah, because we've already done an 88 to an 88, so this is kind of controversial. And I mean, it is your red zone too. So I mean, what would that suggest? Could it mean that we could take this, oh shoot, this entire range and double it to the downside? It's kind of intriguing because I'm like,
The red zone to green zone.
I know, and I'm like, I'm indifferent about it. Like, I was looking at it with a bullish light overall, but then I'm like, that 88 to 88. I mean, the power of breaking the trend off of this 88 could mean to annihilate the entire day and double it to the downside. I mean, like, that's like, okay, then should we have a hedge for this environment? Should we focus on hedging? I mean, in the event that this one level fails, the long trades from yesterday can continue going higher. But um, if it does play out, then what wouldn't it be nice to have a hedge that you could choose to manage down to the targets down below? And I'm like, well, at the end of the day, if one is in nothing, I think it's crazy to get involved because I don't like it. It's something that we want to make sure that we're safe to sit through, but I don't think it's a high probability trade. I think that a lot of ordinary people have been caught in this area and they're trapped. And I think it's not going to treat everybody very nicely that's in here and that finds value in this area. Because what has it been giving them? I mean, do you think the best traders in the world have been, making bank on this chop in the past hour? No, people have been struggling. So it's like, and if they're not struggling in their trade, then they're struggling to find one. And if they're not struggling to find one, then they're struggling to sit through it. And if not, then how does somebody find value in this environment? Well, in my opinion, the best way to get through this environment is to understand the necessity for it and to understand that having went through this environment, we will have significantly less market participants to stand in the way of the big machine that moves this this market, in the favor of the people that have all of the patience and all of the integrity to wait until the very very last moment of the day and then stick with it and then sleep on it. I'm like, wow. I mean, who's doing that? You can count on the fact that most people wouldn't, right? So why would the market move so well if you can count on the fact that most of the people couldn't be part of it? I'm like, well, who's responsible? And then I look at Wall Street, more cookie crumbs going to the cookie jar because I'm like, well, where do they get all their money from? I mean, these moves? Oh, probably.
Number on a screen.
Or do you think Wall Street's making all their money in this chop here? I mean, like, probably not. I mean, like, how could they be? It's definitely got to be the big moves. And if it's very difficult for most of the public to be associated with them, well, why does the market find so much clarity in when the people aren't involved with it? And I'm like, well, it's almost like it doesn't respect the people. And I'm like, well, that's not my idea. That's Wyckoff's idea, the composite man theory. The theory.
Starbucks is hurting these days, eh?
Really? That's funny. I feel like that's like, because they want people to think that that's the case because it's kind of hard to believe. Let me take a look at them.
They sued their union workers over pro-Palestine social media
Oh yeah,
posts.
see stuff like that. That's perfect stuff to actually buy into because it's stupid. It's stupid.
No, it's
There's
not. And
nothing to do with the fight or nothing like that, but it shouldn't affect the why you buy into a
it took
company.
like 2 weeks to take it down.
It's ridiculous. Yeah, no, but they had a gap to fill. I mean, these are
Yes.
otherwise considered vacuum zones, and I mean, they do like to get filled. I mean, many of the gaps in the past have been filled here too. And
And
why has it become
Starbucks is
so
actually not
gappy?
even a coffee company
Are they real
anymore.
estate or something?
No, they're more or less a bank because you put all
Oh
your
yeah,
money
that's
there for
right.
Starbucks cards, right?
Hmm.
So actually, they hold over $10 billion in cash in their Starbucks cards.
Yeah, I think I remember you saying, yeah.
So it's not the coffee attraction. That's just to get you
Who
to put
who?
some money on the card
But why? I mean, to do what? I mean, why
to
did
make more
you?
money on the investment.
Do you get like points to buy more coffee or something? Like, why
They
on
give
earth
you
would
second
anybody
points.
choose that? Oh,
Like
because it's
people
more
are addicted
convenient?
to fucking coffee, man.
You
Yeah, yeah. Like you just order on the app and you walk up to the store, just pick up your drink and leave. Like,
yeah,
um,
like
yeah.
if you bank with us, you don't stand in line.
Well, Apple did the
Starbucks.
same thing, kind of. They opened up a checking savings account and giving people a bank card now.
Uh-huh.
And in the first month, they generated like, I think like uh, $100 billion or something, just cash flow into their bank accounts.
Hmm.
Like people are jumping on the wagon fast.
Starbucks. Never forget what happened to Luckin Coffee or whatever the company was called, the Chinese version. Basically a scam. Or they
Like,
got caught lying or something.
yeah, for instance, I was watching that Elvis biopic or the movie on Netflix last night,
Okay.
and basically his manager owned like pretty much 50% of everything, and he named the business Elvis Presley Incorporated, and he owned half of it. And then he ended up making a deal with a casino owner for him to play at his casino, and that he was giving him unlimited line of credit, which to the manager looked like unlimited money to gamble. But to me, I said that's fucking brilliant. How do you get Elvis's income without signing Elvis? Is you give his manager, who's a gambling junkie, unlimited line of credit. I was like, that's brilliant. And in my opinion, I think Starbucks doing like the card loading and you know businesses going other routes. I think that's kind of like the snake oil side.
Hmm.
Like Apple wanting to become a bank to get more cash, or Starbucks wanting to have you load your money online so they get more cash, and yeah, not about the product anymore.
Yeah, it's almost like it's the business of of convincing people to park their money with you for a low return. And if you can convince people to be satisfied with a low return, you could do all you want with their money and actually make a good return, pay them their low return. Seems to be the business everybody signs up for.
But it should be, how do we make better coffee so we can make more money? Not,
Oh
oh, we
yeah.
should hire a banker to start a bank so
You
we can
know,
make more money.
Starbucks needs to come out with a coffee for the people that hate Starbucks coffee.
Oh,
And
that's
they
also what Elvis's manager did. He bought all of the I Love Elvis stuff and put his name on everything. And then his dad is like, "What's this? I hate Elvis." He's like, "Yep, there's going to be people out there hating on Elvis, and we're going to profit off it whether you like it or not." I was like, "Oh man, that's brilliant." I'm like, that whole TV show is like literally modern day corporations.
Hey, John, I drew a trend line starting from around 950 and took it up. Maybe that's why it's not coming down right now, because it's not really close to where the trend line is to come down.
Yep. See, this is an interesting one. I would place this one on the extreme over the original. But I do think that the original's been causing some trouble, but I think the original, it's kind of finished now. This one, it is the uptrend until it breaks. So I do like that one.
Yeah.
I do
Yep.
like
We
that one.
do have 5 minute RSI bearish divergence.
5 minutes. Oh, that's interesting. This kind of gives me the vibe of one of those all day up days, honestly, where it could just keep
It's starting to
grinding the
feel that way
high.
too. Like
Yeah.
we're leaving pressure to move up a little bit. Yeah.
Yeah. But the whole thing of coming back under and using it as resistance, that works when we're in a range, I feel like the most. But I mean, we've done it here and look what happened. Like it came back and tested it from the underside and then just grinded it through. And I was like, well, hold on a second. That was also a red zone and it also had that and it was also high on all regards, but it didn't like I mean it was also high in the RSI, but it wasn't actually high in terms of the short-term movement. Like it was actually low, like lower middle range. So no wonder it could continue doing that. But let's say we were presented with this exact same environment at somewhere that was considered high. Could it work? I mean, well, we do have it now and it is higher. Ironically, when we were doing it then, we weren't getting any of these red sell signal things, which is interesting as well. Not that I really use those, but it does it does tell us that there is more of an extreme being met, and it's that much more of a typical environment to have that negative response. And I mean, it's been very tough on the people that have shorted it. It just basically came up to stop everyone out that had a short position in here. Because anybody that was shorting since it went sideways, they just came up to make sure that everybody was at a loss for a second there. And that's interesting, because they come up to a high and we can find that there's barely any volume there. And all the people find it comfortable to trade inside of this node here. And I mean, this line, it is, coming into the picture sooner rather than later. And I mean, with that line broken, we could see a change in this consolidation. And we do have two lines. Like it's like there's a honestly between these two lines, it's not like a rising wedge. It's not like it's not like um a flat top triangle. I would look at this as a symmetrical triangle in a weird way. It's not something that I'm really looking to make very clear triangle, but something that I respect the barriers like it is a triangle. So I think that when we pass these levels, we're subject to retesting them. And like, okay, this level was just hit, right? So now it goes up here, and anybody that's short, you have to be careful dragging your stop below that level because it's very likely to get hit. Also, like, what about the spike on the top? Isn't that the same distance that we're doing on the bottom? Could that have an impact at coming back to the node? So like, yeah, totally. Might not be worth trading it, right? Because if you're already long, why the hell would you take this, right? Wouldn't make any sense. You're gonna ruin your average price for like a 5-point move just before the risk of the trend break. I'm like, well, we were just talking about that trend potentially breaking, and I mean, I don't think it's gonna break well. It's just gonna scare people when it does break. They'll be worried that it's gonna break, and it'll be breaking a little bit, but it's not gonna move that much, I don't think. We do have B points down here though, and that is somewhat disturbing. Any long trades that have been taken above that VWAP aren't incredibly safe. Obviously this is the average price of everyone that's traded since the point that I've put that VWAP in, and technically anybody that buys above it is getting a worse average price than people for a prolonged period of time. So I'm like, well, if you're in from below, or if you're in from yesterday, you're fine. I mean, coming back to that level is not a big deal, right? Especially if you've hedged it. Especially if you can, if you're in from NQ or something like that, you can take the trade on MNQ. It doesn't even have to be with 10, it could be with 5. And, you could have taken a few off right now and waiting for the rest of them to get down here. Depends on what your risk tolerance is and what your situation is and where you're in from. But, it wouldn't make too much sense to protect a long trade so aggressively and allow and keep it if you were above the VWAP. I'd be more interested in just cutting it and actually trying to hold the short with a stop and profit. I do believe that the short will get knocked out, but um, it's going to take some time. That's why I think the play is holding the long and waiting for the short-term dips to finish. And now, at the end of the day, we could either choose to take those short-term dips, or we could just wait for them. It's not a necessity that you hedge anything. It's something that you have to intend to do. Like everybody that sits down at the computer and they make a profitable trade. You have to really intend on it to be the situation. If you're going to make a trade against it, not many people will just find themselves in a situation where they have a hedge. You have to really intend for it. And you have to work for it. So it's not something that can ever just fall in the plate of anybody. You have to work for it and you have to want it in order to have it. You have to mean to do it, kind of thing. Intend to do. So I just put some fibs on here, right? We do have a B point up here again. I do think that that's valid still, even though we did hit it a minute ago. We're at the 188,200. Like I said about the red yellow line, it's very likely that we do have a retest at some point. So no stop for any short trades should be placed beneath that red yellow line. I mean, it's the recipe for, honestly, a larger triangle potentially. We could see if that might be interest here as well. Because what I see this move doing is merely readjusting the support. I don't think that it's actually a real break, but it's meant to convince a lot of the long traders, like I said, to get out of their trade. Now, it makes it so much easier to hold the long trade if you actually have taken a short trade on a different security and you can benefit while you're waiting. Now, a lot of people don't do that, so this actually stresses them out really hard. Now, like I said, if you're in from any day prior to yesterday or even yesterday, this movement doesn't really matter. And like I said that before we started doing it, you could choose to take that move if you want to. But I mean, like, at the very least, it should be understood. And like I said, if you're in nothing, it wasn't really the case. Like I said, that everybody that's in this consolidation will be pretty much affected negatively at the end of the day, I think. Now, what happened was, is anybody that had the short in this consolidation, which you could say was the right move to be in on, because it did go down out of that consolidation, it did go to the targets, right? But didn't it come back and make everybody into a loser before it did that? That's not very nice, though, is it? And it's like, why would it do that? Why would it make sure that everybody that was right had to endure this loss before coming down? And God forbid they put a stop up there, because they would have lost their position right before they hit their target. Isn't it funny that the market chose to treat the people like this? Now, why would any individual that is short in this environment and correct about it decide that they should become a loser before they hit their target? It doesn't make any sense to me. But but if somebody was playing the game against the people, it would make sense that you would do this to them to make sure that you steal their positions. Because after all, if you're an institution that also sees value in hedging this and taking it down here, maybe you cannot get enough to hedge your position because there's not enough liquidity. And you need people to chop up in this range. And you know what happens when everybody gets a short position and then they all put their stop at the high? You come up and hit that stop and you take their positions from them and actually hold them to the target because they're stopped out. And who's on the other side of that stop? Well, the people that made this move. That's the only way it could be. Because how could it be any other way? Because they were the people that made that move. And they were the people that found value in everyone else getting stopped out, where everybody else was having a tough time wondering if they should get back in, recognizing their losses, looking at their accounts. It was reversing. Now, what's funny is this move, it looks strong and everything like that. It's merely a move right back to the VWAP. This is the average price. And because it's a large move, it seems very, very, very strong. But remember how we've been moving many days. We do this. We have this consolidation and we have taken back all of the excitement. And it's like, oh, unless you found value when it was below the VWAP, when it was not blowing up, then you're allowed to stay in. But if you were late to the party, then the market doesn't want you in, right? Or else, how else is it? Like, it's good to find value in the things the market respects. Looks like this is a 61. The 61 is the golden ratio. We see it in waves and flowers and the Milky Way. Seashells, and in the stock market. And what's interesting about that is you could say, oh, yeah, with the technology we have nowadays, it looks pretty nice and everything. But why is it that when I go back to, um, oh, no, 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 no. Let's go back 12-month chart here. This is before the Great Depression, okay? And we can see that in this environment here, before anybody was using fibs, we were working harmonic patterns. And I think I could have done like maybe 6 months. And the portion and the distancing that we see nowadays is still clear, even back when we look in the Great Depression. Which is interesting because you can see that the market fell from 30 points down to 4 points. And that was the entire index. Value is worth 4 points. That's like a candle now. And it took years to make that 30-point dip. So it's like, what? Pretty intense. But at the times that they were doing this, they didn't have computers, obviously in 1899. And the first retracement that we ever made was a 61. Like, let me just remove this for a second and just draw a fib on here from low to high. Is it not true that it was a 61? Well, they weren't responsible for that. How the hell did they know? And they didn't even know what a candlestick looks like. They didn't even they used fractions, for crying out loud. And you want to know another thing that we see here, or that I see here, is this movement And this movement happened here. We saw that yesterday. This is a pattern you won't find on Google because I invented it. At the end of the day, it's something that we can see has happened since the inception of the stock market. This was the first move it debatably made on the 6-month chart. And they didn't even know it. So I like to work with the facts, and it's not like I'm making it up. It's like when you go yourself and apply a 61 or sorry, apply a fib from the low to the high of those moves I was just looking at, you can find yourself that we use this 61, and it is the golden ratio. And it's like it goes even in depth. Like I found a chart once. I don't know if I can find it again, but it showed the relationship and the portions between our limbs and how it's like our ears curve at the 61% as well, and it's like it's really strange that our elbows to our wrists are like 30 what is it, 38%. And like, hold on, let me find it. And like people might have seen this before, obviously, like the proportions of the body and stuff like that. But here, let me look at what I'm trying to find. Oh, that's an interesting one. But this is the Fibonacci spiral here. And that spiral is found in everything from the way that waves curl to the Milky Way to like oh my goodness. So this that's hilarious. But at the end of the day, the one I was looking for, oh yeah, it was right here. The distancing between oh yeah, 38 and then 61. And then we can see that it's all proportionate, the 38 and then the 62. These are the levels that we're using on the market, right here, the 38, and then we've got the 61, basically like that. And see that guy gets pretty crazy with it, but I mean, nothing against it, I like it. And then, oh yeah, so just to reiterate what I was saying, like that. It's a work of nature, and it curves at a 61.8 degree ratio. That is a 61.8. Why did it work? Not that it's going to work every time you put it in, and that's naive, of course, but just recognize how much it chooses to work. Oh yeah, here's the Milky Way. Interesting, no? And you can even find those things in here, Fibonacci spiral. I don't use this very often because I don't think it's a very useful indicator. But I mean, at the end of the day, it shows that it's relevant. And why I love to use this level. This is fine. And obviously, the other levels are really important as well. But levels like the 50 are just half, so we know that that's not actually a 50. It's not actually a Fibonacci number. Neither is 100 or 0. But it's just relevant to if we're looking at the portion sizes anyways, is it not nice to know where half is and where whole is? Of course. Of course. But it's just nice to have a look at some of that stuff. So, quite interesting. Yeah, they even say that the Mona Lisa has put a Fibonacci over her face. A lot of other famous paintings. I saw that one too. Thought that was kind of funny. But I wouldn't. That's the first time I've ever seen that one. Yeah. Enough of that. Anyways,
Yeah, yours spiked right to the VWAP, and mine spiked just past the VWAP, but where it kind of took off and where that resistance was between the red and the yellow on the volume node for me. Made it kind of an easy sort of entry.
hmm. It's funny. The 61 to the upper side is something of interest. And it's like this is one indicator that I apply on there, and it plots like multiple lines, and they all mean different things. What's interesting to me is that we can choose to understand them, or we can choose to say that there's so much information on there that we can't comprehend it, and that it makes our head hurt. And we'd rather look at a chart that has nothing on it with no indications, or indications that are just completely presented by a computer at all times, or something like that, or it's just cutting corners and not choosing not to comprehend the information. And I'm like, yeah, it's interesting. Because it's funny too, because I was talking to a guy about my video making software and everything like that, which is great. I did I found a software that cuts down the videos from 6 hours to 2 hours, and then I can work with that. But uh, he's telling me that there's going to be people on there that'll just continuously bring you like comments, and absolutely like like, oh my goodness, with the lines and everything. I'm like, I just come to say you can either accept it or neglect it. You know? And those that choose to accept it can reap the rewards of what it is to comprehend this analysis. And those that choose not to will never see what it's like, because they're so dug into their own strategy that they can't see 2 feet in front of them. That's the idea that I have. And what is it to spend a few minutes comprehending this information? Is it too much for you to look at lines? Like, have you never seen a line before? And I'm like, well, geez, 10 lines in one spot. How much does it take to understand each one of them? Do you think they all come with a complex analysis of, like in mathematical calculations to understand? I was like, no, 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 no. I explained the 61. I explained the 50. The other ones are very similar to the 61, except they're not as relevant. They're also Fibonacci numbers in the sequence, but the 61 holds that golden ratio, the golden ratio. So I keep it gold. I keep things that are important generally gold. And when I make them very important, I like to make them red yellow. Now notice that the entire dump that we had on command was actually taken back. The 61 wasn't respected on this side, but watch us step on top of it. Also, notice that when we came out of this move, I told everyone, hey, it's nothing for us to endure a move down to here, but it's meant to get people to sell their long trades because they don't have the integrity to hold them. They don't have the ability to understand that this is necessary. But instead, they do whatever they do. Well, those that decided to continue holding long noticed that this was a ploy against them, and those that folded under the pressure of losing some of the profit now have to find a position back. And where are you going to get in? And do you not think that that's going to be contained within the next retracement? Oh, yes, it will be. Because you didn't hold the very lows, you didn't hold this low, you couldn't handle this pullback. And I mean, it's very, very simple because the rules were very clear beforehand that anybody that took this move could use it as a hedge. You could benefit off of the decline of that move. You could take MNQ on that, and you could profit off of the targets being hit. Every single green dash line I placed on there is hit, as well as the one that we just took off at the high. And how many green dash lines have I taken off today? Exactly. Multiple. So it's an,
We're just gonna get a new high here, or form a shoulder on the right, just like we did on the left, and make it an inverse.
oh yeah, that could be something. Wouldn't be positioned very well, but it would be the pattern.
Yep.
And it sometimes does that, like where it makes bullish patterns at the high, and it'll struggle to play them out sometimes. In an environment like this, I'm curious to see whatever happened to that 5 minute. We were looking at the 5 minute, it was all grinding high. I'm like, did it have a negative impact? Hardly. I'm like, well, you know, this still could be debatably just considered grinding that top line, and anything that we did to the downside, we might be trying to do on top of the orange line, which might be a little bit out there, but look at this move, for crying out loud. Everything that was sold off was bought back up instantly, like it was somebody's plan. You know what I mean? And I'm like, well, it was.
Honestly, the beat point really, it just kind of went through it too.
No, exactly, because it was just a hedge for them. Because it wasn't the target for them, because they're still in long. Their huge position does not end at the B point. That's the way I look at it, because it would have mattered because the B point was actually the 61 as well. So if it was something that they recognized as a barrier, they would have sold something there, and they didn't, which is interesting. Or else it would have felt it, you would think. But instead, this was a ploy at trying to convince everybody that was long to try and give them their long trade so that they can hold it to new highs and so that they could be part of this range. And it was also just another negative response off of the red yellow line, which is very typical nowadays. Everything bought back up to that red yellow line. It reminds me of this red yellow line, one that we used to have. Let's look at how that one first started and how when we first got away from that red yellow line, it managed to break out really hard. And it was like, everybody, look at the power of what it's like to be in for this trend break. After first acknowledging that it was a barrier and running, and we ran into that barrier and it felt that so hard, then came back to it and it felt it again when it ran into it, and then broke out of it just to come back and touch it with absolute precision. And then what's funny is they really made everybody pay for it. They were like, nobody's allowed to be in if you found value in that trend break. And then they did it again where they broke it and then they came back and they were like, you know what? Nobody's allowed to be in again. If you're trying to be in for the break of this trend, we're going to take it every single time and you have to keep persisting. Most people, they're not even going to think about trying it again. Little did they know that they should have persisted, because the next time that it did break the trend, it didn't treat it the same way. It didn't essentially come all the way back. It still came down, but then we broke it, and where have we come back to it now? Now we're literally breaking it and we haven't seen it again. Could this be the last time that we're interested in getting involved with that trend for the foreseeable future? Because after all, it's been very, very difficult for a lot of people, and I don't think that they're going to persist with the same thing that's been hard for them. You can count on the fact that less people will do that. That's why it takes so long in these consolidations, because less people will keep trying. Because all of the people, just like the dude in the comments there, it was like uh basically like, good luck in believing in imaginary lines. You know, I mean, like, well, that's a statement that's going to close that person's mind off for the foreseeable future, and it's a waste of my time to deal with people like that because they don't want to learn. And I'm like, well, I'm not going to spend my time with them when there's people that do want to learn, and I can teach them. And you know what's funny is like you can see the toxicity of their trading strategy bleed over into the way that they talk about mine. They don't even want to hear it because they're so stuck in believing that their strategy is working, yet they're still online trying to figure out what they should do next. And I'm like, well, if your strategy is so good, why are you even on the stream? You know, at the end of the day, that's what I have to say. And I'm like, well, if it's so repeatable, why isn't the market just an ATM where you sit down and implement your strategy? You can make an AI robot do it for you even. That seems to be a common idea lately. How's that working out for anybody that's doing that? I don't think it's working out well. And if it is, it's gonna change when the market does, unless they change the robots. And how do they know to change the robots if they don't know how to trade anymore? Because the robot does it for them. It's called
I think
lack.
these
Hmm.
I think these stops are going to get us a little higher. What do you think?
Hmm.
Okay.
Sorry, the stops that are at the high
The
are gonna
people
get
stops. Yeah, yeah, yeah.
triggered. Yeah.
Give some maybe a little bit of fuel because we're
Well,
away from that trend
well,
line. Like I
the,
just drew a trend line from this last move.
well, I think we're basically pausing here to allow more people to short it so that they can add to the stops, and then we stop them all out at once. Because if they pause it here and everyone's like, oh, it's a double top, we're just letting all the double top people in. Even if we give like a little red candle, that'll get all of the people that, and it's not enough for most people to take profit. Like stocks and options trader, they won't be able to take profit on this red candle. It's likely not going to be enough profit for them. So they're still going to be in. And what's going to happen is on that red candle, a lot of people will chase it. So they're going to be in. And immediately it reverses and knocks out all the chasers, all the double top people, all the people that are still holding from before. It's the perfect plan, and everybody's just completely oblivious to it. And it's the plan of the people that started this move, and they have no interest in losing any money to any individuals, but rather taking 80% of the money off the board today because they're back from Thanksgiving, and they want everyone to see that in full force. People were in their way yesterday, and they put them in their place for today. Continue to stop them out, and the machine will continue to profit for those that understand that this is the right team to be on, the winning team and the long team. What's funny is this line did break and it did get to every single target. And then this line did break and it got to every single target, obviously, as well. There's no B points that remain. This is the newest one. And I'm like, yeah, sure. You know, it's going to get hit. But whatever. We mustn't obstruct it from getting hit, though. At the end of the day, if you're long and you're like, oh, yeah, I'm dragging my stop up, dragging my stop up, dragging my stop up, protecting that profit, and you drag it above that high, you lose your position. So it's no good.
Oh, hey, John, this retracement before it went up actually hit the purple zone. I posted my picture in the exclusive call.
Yeah, let's take a look. So we're looking at the momentum.
The purple zone. So the purple zone is the same
Oh
size,
yeah.
the green on the bottom and the red on the top, and the purple was the that old green zone that I said I didn't know what color it was going to be.
Yeah, it looks blue to me.
So we blasted through, through it like there it was not
Wow,
there,
yeah,
and
it's
then we
purple on
came
that.
back into it, and we just jumped on top of it.
Yes, but yeah, no, I see that. I see. Strange how it's purple on my right monitor, but not
Interesting.
blue. The filter or something. I gotta mess with it. I was trying to reduce the blue, to be honest. Yeah, so I remember also stating that, this was like a symmetrical triangle. It wasn't like a flat top triangle. It wasn't like a rising wedge. It's like something that wants to get tested from both sides. We haven't tested the major downtrend yet. And I'm like, well, at some point in the future, we're going to test that major downtrend, and it doesn't matter if it even goes all the way up to here and then reverses before actually doing it. It could also do it multiple times. So short term, it could test once, and then it could test on a longer term again. Like that's absolutely fine there too. Basically, I think that it's another period where we could be using this as a support. We could be trying to step on top of the node. We could be trying to make the green zone into a support area so that we could go to its respective red zone and then potentially have something come back. Something to stand on when we come back to the green zone, because we've got this node here and we can't take that away, right? So if we come back to the red zone and then come back down here, it's going to feel the fact that there is a node there, and it will be sideways, down and then up, which is also something that helps it come back down to the green zone. And then what's also interesting about that is, as we continue to do this range, if we are to make this range something that we can actually use, this spike could easily form out of the top of the red zone after prolonged consolidation. Boarding line is not the same as it once was.
I have a trend line on there on the bottom from the that spike that I took way up, and it's still a little bit of ways away from it. So she ain't coming down until she crosses it. So it is much closer than that original trend line. That yeah, I think maybe that's why we watched the thing go along the top there for a while before it actually came down a bit.
Oh, which thing? Sorry, the RSI.
I was just saying, yeah, no, our my trend line earlier was further away than when it's I think 950 I had or something started. That one there, yeah, and the thing wasn't coming down until it crossed it, right? So
Oh yeah, yeah, yeah. But the thing is it was specifically a move to this level, and then it came up to
yeah,
a new high. So it really says it was just like it was a counter trend move. And I'm like, well, when I think about it like that, I'm like, well, what about this one? Is it not like somewhat similar? We take a little bit of lenience there. It's almost like they had the same robot put the same amount of shares in, and it moved the market the same amount of distance. Like, wow. I just think that if it was left to the people, I find it very difficult for them to have that much precision. And it just makes me think that this move is orchestrated by those that have the control, and what a better way to be aligned than with them.
I was doing the two logs this morning. So when the 1 minute hit the bottom green line on the RSI and notice the separation between the 1 and the 15 minute. And when you know we're basically going up, when there's that separation, there's always that. It's a high probability trade. It comes up. They both come
Yeah.
off of fit and stuff, but the high probability trade because there is such a distance between the two lines,
Hmm.
and they want to be together again. So
Yeah.
they're
Yeah.
eventually going to go up there, right? So
Yep.
because you're at least going to get 50 to 100 or more points out of the deal.
Yep.
Depending on how long you hold it or whatever. Get the low.
Yeah, because basically it says that there's like a long-term way for this trend to be respected, and it's got that orange line is like dictating that that's the overall trend, and when on the short term it strays away from that mean, it just really wants to find its way back to it. And you want to know what I find really weird about this is that it fell beneath, right? And then it came back up to test it, and it's higher than it ever has been. But this isn't, which is interesting. Um,
Yeah.
and it actually went
So it probably
higher.
had more energy to go higher, right?
Yeah,
And
yeah.
it probably hit all those stops up there, so it probably gave it a little bit of juice to go up. But like I said, the trend line is closer to come down, so maybe it'll hit the trend line and come down a bit. But yeah, it is pretty high.
Well, it's funny because like when it started this dump, the orange line was here and it was like using it as resistance or whatever, and it came down and it just managed to come back to the same orange line, yet it's higher,
Hmm.
which is kind of weird. I mean, it's like it wants us to notice that though.
Yeah.
Yeah, they could be doing the slow bleed and grind from here on for a little bit. So the red zone is what I'd like to see. Wondering how much time it will take, but it doesn't really matter because it will ultimately. A little bit of chop on top of that node must be allowed to, and it's like I don't mind if it comes back to hit it now, or if it comes back to hit it, or if it does both. If it comes here to hit it first and then comes down and hits it, I don't care. It's the same thing. It means that if you drag your stop anywhere above that red line at any time until we've crossed through the red zone, it could get hit. Because what if this range is just used? I mean, it doesn't matter, if it makes 10 gyrations or 7, if it's to use this range, no stop is safe inside of it, for long. It'll get hit. It might protect your position from becoming a loss, but that's what it's supposed to do. It's not safe to assume that it's going to have longevity, or that we should act like it's going to be a keeper for long because it's likely to take it back in the event that it's used in range. And I can't help but notice that we use the bottom of the green zone and really grind the crap out of that. And what are we doing now? We're at the top, grinding that. Now, I wouldn't like to see it grind for as long. I don't think it would be completely necessary, but it has started that. So curious to monitor it and to keep an eye on it and notice how the journey is to the red zone. Basically, we have a B point up there as well, insinuating that not only the red zone is drawing it up there, but a previously untested B point. Also, 16,000 was just met again. Everything we've ever done away from 16,000 is ultimately returned back to it. And anybody that thought that we were leaving it for good was incorrect, because it just ended up coming back to 16,000. So it means that thousands of analysts are yet again back to the drawing board to figure out why their round number didn't offer them any kind of longevity with all of the positions that they have, because they're all long-term traders, most of them. Because God forbid they implement their strategy for long in the short term, the market will show them how much they lose. But if they only buy once every year, how do they know that their strategy's bad? They don't. So they try to keep that to a minimal, because God forbid that they were to implement it for long. It would soon show their results. And I take pride in that. I love the fact that you can work your way to have control, so you're not one of those people. It's like, yet everybody's comfortable with taking action. They don't know. It's like, reminds me of somebody that goes to study to become a doctor, and their first year in, and they're like, you know what? I don't need the other 9 years. Let's go operate on people. Wouldn't do it to other people.
Not these, not.
Yeah, exactly. And it's like, you wouldn't want a mechanic that just quit school, to work on your car, because you'd be in danger. What if your wheels fall off or something? Brutal. Or any kind of professional for that matter. It's be good to make sure that they finished the learning process before they took action with anything of yours. And like the way that I'm making these videos too, it's very, very interesting, because the program, it allows me to like take all of the dead space out in like one click. So it's like it's perfect for people that have really short attention spans, ironically, which I think is going to be great for the internet because it's just I don't stop talking. It's from one thing that I say and you get to see exactly how it relates to what happens instantly. As soon as I say exactly what I think is going to happen, you get to see exactly how it relates to the next thing that I say and you get to see exactly how it played out without waiting. So it's kind of interesting. But I'm still getting used to the program. So I thought, if it was as easy as the other one, I would have had a video out yesterday. But it's more like a learning experience right now. I'm trying to figure out how to do everything that I used to be able to do on my other stuff,
Oh, cool.
and it's okay. But I'm having fun with it. I like the fact that it's easier to do everything I want to do, and it'll be easier for me to put stuff out. I don't have to watch a 6-hour video 3 times in one day because of like first you watch it to find out where the stuff is that you want to make a video on, then you cut that stuff out, then you have to watch all of that stuff again and then again and then again, and then when it's finished, you have to just make sure that there's nothing that's like something like a text thing. Sometimes I'm like I'm like gonna write something in on the thing and I'm like I add the text and I forget to type in there, and I'm like, it just says add text or something. I'm like, yeah, gotta watch it again, make sure that there's nothing like that hanging around. And I'm like, it just becomes like I'm there at like 5 o'clock in the morning with bloodshot eyes watching this video again and again. I'm like, holy shit, it's too much, too much.
You need your sleep, John.
Yeah,
Are you sleeping a bit better these days, or what?
yeah, yeah. Well, last night I stayed awake messing with the thing, but I'm fine because I slept well the day before.
Nice.
And it should be good to. I also was so tired yesterday that I passed out. Like I was ready to play some video games. Everybody was ready to go, and I literally spawned in and I just was standing there for 45 minutes till the game was over, and I literally woke up with like 5 seconds left and lost all my stuff and everything that I brought into the game, and I was like, oh yeah, that that tested my patience a little bit. I'm not gonna lie, because it's like all the time that I put into getting the stuff I brought in, I lost it all, and I was like, oh yeah, well, it's the way it goes. Guess I should sleep more. I guess I needed the sleep, and I'm glad that I look back and I'm like, it could have been something that's actually important, but no. I'll push it to the extreme when it comes to my entertainment, but um I don't mind falling asleep on that stuff, even though it is still a waste of my time. I'm like, it's I'd rather do it then than now. But usually I drink a coffee and push through it at nighttime, and then it's like only when I'm absolutely tired and I can't like keep my eyes open anymore do I get like the most amazing sleep. So I like it to be extreme. And I don't know. It's a sometimes it backfires because I find that I like to sleep for longer and stay awake for longer than there is time in the day. So every day it's like I push my sleeping schedule forward a few hours because I like to stay awake for like 15 hours and sleep for like 15 hours. And I'm like, what? It's just never ending. I don't know. I don't have like a routine. So I'm like, most people they do though, and it's
Yes,
healthy.
I mean, I'm in bed by 10 every night and chill about till about 11, fall asleep at 11, wake up at 6:30.
Yeah, it's
Do
healthy to do that.
meditation for about 20 minutes and then open the charts, have a look, start trading, 7:30 till 2, and then go work out, walk the dog,
Yeah, I gotta do
you know,
that, man. I gotta learn that.
do yoga, all that sort of stuff, and then
And you
I
eat all
simply
3
repeat the
meals
cycle.
probably. You don't
Two.
two?
Depending if I'm
Okay.
trading, yeah.
Okay.
Especially if I'm trading it's intense and we're in positions and stuff. I'm not going to eat until I finish.
True,
That's
true.
close. And then I just every day I just repeat the cycle, and until the weekend, and even on the weekends, I can't even stay up that late because then you're just gonna fall asleep because you used to go to bed at 10 o'clock, right?
Yep, yep.
And so, but I know some people have trouble sleeping and they can't go to bed at that time, but it just works for me. So,
Yeah.
and the dog needs its exercise too, right? So,
Yep.
you know, and I need my exercise because I can't be just sitting at the friggin' chair all day. I gotta be, lifting weights or going for a run or doing something, right? So,
See, what's
and the
crazy
dog
though,
needs flexibility. So,
with me, I'm like at the end of the day, I'm absolutely exhausted from thinking so much. I can't even think about working out physically. I'm like, I would
yeah,
certainly
well, it
go to bed.
helps.
I would certainly
It helps,
sleep all
man.
night if I worked out. Yeah,
Yeah, well, it just helps. I mean, maybe it might help your sleeping too if you
I think it would.
get some
But I have
more
so much
quiet.
fun. I'm like, I can't. I don't want. I'm like, I need that relaxation. I'm like, I need that release. Of like completely taking my mind off of it,
Yeah,
and I just fully
yeah,
focus on like I am the digital person for that moment, and then I'm in that thing, and I don't think about a single thing but that game while I'm playing it or something. And it like it flushes out all the crap and all the stuff I've dealt with that day, and I'm just like, it's like a reset. And then I get so tired, and then I pass out and I wake up again.
well, the
Repeat.
dogs really look forward to be walking right every
Oh
single day.
yeah, yeah. Same,
So
same with
as
mine.
long as it's not -10 or colder, then we'll take the dog out. And but when it gets too cold, I'll just go on the treadmill. And
True,
then I'll do
true.
yoga right afterwards too, because if you're sitting in a chair for that long time, like, you gotta look after yourself, right? It's
Yeah.
maintenance. It's just maintenance, and
Hmm.
or lifting weights. Even when I'm trading here, sometimes during the day, I'm just lifting weights because you know position's good to go, everything's good to go. So I'm just watching the charts and doing some, lifting weights, standing up and walking around and stuff. It's kind of imperative you do that rather than just sitting here being stationary. It's not good for you.
Yeah, yeah. No, I feel it. I feel it. I definitely I have to build those habits more. They're hard for me to build those habits, so it's interesting.
It's discipline, John. You're
Mhm.
showing it in trading.
Yeah. Yeah.
You gotta do it in real life, right?
Yeah, pretty much. It's
Yeah,
harder for me to do it in those things though, for sure. They it's
yeah,
harder for me to deal with the discipline to go and do a physical action, but because I don't see the negatives of not doing it. I see the negatives of not following my rules in trading. They have
hmm,
instant destructive capabilities, and I'm like, well, I can get by with not working out. I can get by with not, doing stuff, and I'm like, well, it's like
yeah. Can't
if I
stay off
can,
either though,
I
because you
know
got
it
the
would be it
you
would be
can
good if I
like a
did do
car
it.
or anything else. Yeah,
Yeah, it would be good if I did do it, but it's like it doesn't affect me negatively if I don't know how the benefits of doing it. I'm like, well, and I can see it when I do work out. I have to just maintain that, and I'm like, all that time that I spend doing it, I'm like, I feel like I'm just like rowing backwards in a way. I'm like, I don't know. Whenever I've been working out, I'm like, I just feel like it's like I don't know. It gives me less energy to focus on my intellect. Like I like to be able to think about things. I don't know. I don't know. I do need to. I think that the walking the dog though is to definitely help. Before I didn't walk the dog or didn't have a dog to walk, so I didn't really get out as much, especially with COVID and stuff like that.
yeah. COVID kind of put everybody in a isolation mode.
Yep, 100%. And it's like this green zone is certainly being used as a support. There's no doubt about that. You want to know what's really weird about this is that it's like it's tried to do a Wyckoff, and I think it's gonna fail and go up after, which is ironic because it's another form of a squeeze. Because I mean, half the people that are seeing, like, I mean, the people that weren't caught up in this consolidation and didn't pay for this push, they're likely trying that same process again. Question is do they have some sort of dip first like they did last time? And I don't think it'll be as big, ironically, but the people that chase this move also, when it moves sideways like this, they get more inclined on taking the profit. So it's like I say, consolidation invites capitulation. The people that have trades in there are less likely to keep them. You know, especially if they get to see it when it pulls back and pulls back and pulls back, and they get to see what it was like to have the higher profit, because they're watching the profit and loss, and when it stagnates for a prolonged period of time, they get more comfortable with taking that profit. And the people that are short, they just keep waiting. They just keep waiting. They keep watching the momentum is declining, except it's literally going to go through the top, and from what I can see, and I'm like, it doesn't matter, because every time that we went up, then like every time that we go sideways, like I expect it to actually have a negative impact on momentum, but it's not like we can't go up after being sideways. So, and it's not like we didn't affect momentum negatively throughout that process. So it's just something that we want to be aware of, that on these all day up days we can really end up going higher. Oh my goodness. You want to know what this is right here? We literally did this first, right? We had a circle, a consolidation, and then it came back to it, right? And now we came up and we are going sideways, right? Let me go back into the chat and just find something really quick. This pattern right here. When we saw that it made the circle and it came back to the circle and it came up and it grinded. Look at it, had a dip, right, too, and everything, but it wasn't as big as the first one. And I mean, I wasn't even considering this when I said that, but the idea is that we continue higher. Like when I first drew that, this is what it looked like. Like I was saying, hey, I was saying the rough schematic that I think can be helpful for understanding what I think is going to lead to. It's showing that each consolidation has a pop. So the circle is the consolidation and it pops out of it. And then it's taken back to the consolidation. So the pop is taken back to the consolidation. That's when we draw that out, it'll look like this, right? And I'm looking for one of the next pops to actually hold and continue higher, just like it says here. And you know what's funny? We've never seen this happen before in here. It's something that I expected to happen, not something that I had to see happen so that it became part of my strategy so I can expect it again because it was somebody else's thing first, but because it was calculated, because it was necessary. That's the difference. And in this case, we've got, I want to look at the B point that's up here because we almost tried to get to it before and it wasn't very successful. Multiple times. And it's this one, which means that everybody that was associated with the big bad dump off of 16K before that really, you know, stirred up the pot, you could say. Why is it that everybody's just bought back out? All of that selling pressure, all of those people that would have given up their long trades to try and fight back into a range, it's obviously just taken so much more time and offered so, like what, back to where we began? It's not really much, at the end of the day. If you think about what we were doing before we got into 16K, we were offering like regression on top of regression on top of regression. And there was that schematic that we looked at not even a moment ago, and how it treated the people that were part of that. Quite good. So it raises a question of, in the past, we've seen that this can create that environment, and it was something that we expected. Um, Another thing as well that I just want to point out is back when that day was formulating, we had another pattern that happened just before. Another pattern that happened just before this one that I was mentioning in this post. A pattern that we don't really see very often, but it was two highs, two highs into three lows. We made two highs into three lows, and what's ironic is that pattern continued to hold with that entire movement there. Obviously, it came back down to grind that same spot overnight. We have to watch out for wicks and spikes. There's a gap as well, so we have to understand that there was B points, and I guess you could say that those B points were never truly tested properly.
It's going sideways to up, and with the MACD and RSI are coming down a bit.
Yep. Well, that's what I was talking about before. I was like, well, it goes down, and it's going to happen pretty much with every single consolidation. And I think that these ones we got to look at them with like a little bit of a hairy eyeball, because like it's doing what it did last time, where everybody that's contained within this trade, they're likely to be led on, but and it's like they think it's going to do this again, and I think the red zone is something that we're ultimately going to see.
Yeah. Okay.
Hey.
Yo, what's up, John?
Hey, what up, what up?
What up? You ever log in a NinjaTrader and it says your license has expired?
Yeah, you gotta just go to uh Helu and platforms and just copy the key there and then throw it in.
Copy that. It's probably better than waiting for an email.
Oh, 100%. Yeah, you they I guess they expire or something maybe. It's maybe they just did a change in systems or something. They asked for it again. But yeah, you can get it on the website as soon as you log in. They give you a free key. The key might just have changed for everybody. I wouldn't obstruct it from coming back to the yellow and orange line as well. It's something that can be tested as a medium level. We may be interested in making things even on both sides, which could involve making this spike on top. Should be quite interesting.
You know that that VWAP there, John? The purple line of the VWAP on the low, that was the low this morning that I put in. I have that purple line. Yeah, from that VWAP. And the top purple line on that that's correlated with that VWAP
Oh,
is
okay.
at the 188.200 of this move
Up
with the
here?
B point. Yeah, yeah, yeah.
And you have it there too, eh?
Yeah, yeah. Well, we have very close VWAP, so yeah.
Okay, okay. Well, because I know. Oh, is it that? Okay, all right. Because I know I put it on
Yeah,
there.
it
I
would
don't
be
know if.
that one, John.
Okay, okay,
Yeah,
okay. As
yeah,
long as it's good to go, then it's good to go.
yeah. I
Oh, and
mean,
you say
it
it's
didn't
the
go any lower.
188.
Yeah, yeah,
So is. Oh, yeah, yeah, yeah. It is. It is. Same thing. Okay.
yeah, yeah, yeah. Same deal. Okay.
Yep. Well, the red zone is as formulated. For anybody that wish to take profit there, you can, and ensure that you make sure that anything else that you keep is safe by this point on. Obviously, no stops are to be dragged within the red zone and green zone because I mean it could be used. I really don't like. I don't really like the idea of sitting here all day, but I do think that we're gonna put this bike on the bottom out of the top of this area, and I do like that 188 200. It could be that because we have this out of the outside, we could get this one from the inside maybe. It might not be so much on the outside of the red zone, but on the inside of the red zone. But we'll see. I think that 188 200 with the VWAP up there is definitely intriguing me because at that point it will be true that it made up, oh sorry, sideways, then down, and then up. And if it goes to that 200, then that's telling us that for as much as it went down, it's went up. Get there, which is very very even. A recipe for an S wave, and that move right there could formulate off of it. Which I mean, it could look like maybe this spike first out of the top of the range, and then like after we respond to the green zone, we could move to make this spike out of even higher. So that's something that we could do. Because did you know that the way that we've been moving in this trend so far, um, we've actually followed the same rules that I put in not too long ago when I was like, hey, remember that chart that we did? We're going to do something that's very similar to what we did last time. Let me draw it in again. Same type deal. Like I posted, notice this pattern? We've seen it not too long ago. Something you won't find on Google. In this triangle, we could see that again up here somewhere. I'm honestly interested in seeing it again. I think it's good. Which is not a big deal, but everybody that shorted in there though was fuel to get through the range because the institutions were like, how do we get our positions to advance through the next highs without losing any of our positions, ruining our average price, or paying for it in any way? Well, getting everybody else to short it and then nudging it up close to their stops to cause a chain reaction of buying all the way up to the target, where we can see that the little bit of red that there is there could be the actual profit taking that that the institutions are some gains. And it's like they're doing that on the backs of people that are getting stopped out because like what are people do you find that most people are going to find interest in buying in the consolidations when they were literally just presented with the same consolidation and the same size, and it showed everyone that it did this when it happened. Now that it's even higher, it has even more impact, right? Maybe you should get 2 instead of 1. Maybe you should get more. Why were they all wrong? So it's very interesting because anybody that got more, anybody that got anything, didn't get the same thing that consolidation gave to them, even though it was higher. So you'd think that if the same bearish pattern formed and it was higher, you would think it would give an even better result, right? But no, it didn't. And contrary to popular belief, a lot of people that thought it was going to be easy for them, like they saw it was easy for the last people. In retrospect, the people that weren't part of it don't realize that everybody that was short here literally became a loser before they were allowed to see the profit target, unless they caught that high. So can you count on the fact that the majority of the people waited 49 minutes and then shorted that high instead of every other one? But you know what's funny is if we look at that volume in there, you can see that this little area that there was had barely any volume. In fact, that is the volume area that has the biggest gap out of them all. All of the people were contained within this blob right here. And that wasn't the best price to trade. You could say that this could have affected them negatively. This provided the opportunity for the hedge funds to get the liquidity that they need for their hedge trade to get to the target, while everybody else was getting stopped out. Then they try this again, this, assuming that this is going to be a move that will benefit them. Now it doesn't even give them a little spike. It doesn't do anything at all. It stops them all out at once and offers nobody anything but the size of the last consolidation. That's all that they came off. And that's all that everyone had to be comfortable with in the event that they were shorting in that consolidation. And I'm like, well, for stocks and options traders, that might not be a good enough move for you to take profit. You might be up $4.50 or $25 on like a position that's thousands of dollars. So you're sitting there sweating buckets over not even $100, and it's it's got a significant portion of the year's work invested into it. Like, well, just how many people is that the case for, and what was the result for them? So you could say that that's not the best way to trade this environment. Why is it so popular, and why even being able to prove that that's not the best way to trade, people will not change. They have to be trained to change. That's what I've understood. Just like like in many things that require training, it's not a bad thing that I'm not trained how to build Barbie dolls, but I could be, if I put the time into it, right? At the end of the day, it's no shame that I have complete ignorance of how to build them, you know, just because it's useless for me, right? Might be useful for somebody else. Well, I'm sure it is, I'm sure it is. But at the end of the day, it's like we can choose to take action on what we know, or we can wait until we've learned. And that's it's one thing is we can see how like following the news hasn't made anybody rich, yet everybody follows the news. And I'm like, well, very interesting to me. And maybe they think that if they were to just slightly change it, just a little bit, to take all that information that everybody's consuming anyways, and if they just changed it a little bit and made it their strategy, things would be better for them. I mean, like, how though? I just don't understand how you can spin the news into something where you can create consistency on a regular basis. And I mean, like, if you're not trying to do that, if you don't intend for consistency, if you're just trying to get that trade that you're on to pay you money because that's what you want, it's going to be really hard to come out successful. That's the way I see it. But if you only take the trades that are, coming to you because they're obviously the trades that you should be taking because you understand them and you can't hold yourself back from being part of it because it is so clear. I mean, we don't choose how many big moves the market gives us, but the ones that it makes clear that we should stay in on for a prolonged period of time, you know, I think the market conditions people. When I say that, I think that it gets everybody used to trading in a range. And everybody used to get to it always comes back on you, always comes back on you. So that when it doesn't, people literally will have barely any of their position size left because they assume it's always going to do what it's been doing to them. And then when it comes down to actually something that we can hold for a prolonged period of time, it's very difficult for people to shake off that last area where it conditioned them that, hey, every time that you go long, it's not going to work for you. Or every time you go long, it's going to be something that you're going to have to buy back into again. Doesn't matter if you went long at the low here and sold it off at a profit, or got stopped out with a profit, and you did that 100 times yesterday. Um, the name of the game was to get exposure to the break of the red yellow line. There was no better way to trade. Yet it doesn't mean it wasn't difficult because you could see the value in being in for the break of the red yellow line a minute into the or 10 minutes into the day. Yet it was difficult for everyone. Doesn't matter if you saw what was going to happen in the future. You couldn't avoid the fact that it took all day. You could change one thing, your ability to have patience for it, and you can also change your persistence. You can choose to persist with it if you want, and I guess that's kind of tying into patience, but because persistence and patience kind of go hand in hand, like you have to have some level of patience and discipline to be able to persist with something because it's a test of your patience when you're forced to persist. At least I could see that being the case. Like it's not something that anybody would choose to do. Wouldn't you rather have it now always? When you're in life tasked with having to persist with something, it's always easier to get it finished now if you can. But if it involves like needing to persist with it, like even if it's something that you're building and you have to sand it down, there's nothing but more sanding that's going to get the job done, And I'm like, well, you can think about it all you want, but really until you pick up the sander and start the sanding, you're not going to get any progress done. And it's like and very similar in this regard when it comes down to an 11 low zone or 11 high zone. We can see the end of it from the beginning, but there's nothing we can do about the time that it has to take to reverse. And it's like when after every reversal, how can we not say that that's what it took? And if it took an hour, then that's what it took to make that reversal. And if we didn't have what it takes, then we couldn't wait the hour. So, and I'm like, what? Really? You think that I couldn't have what it takes to do an hour of anything? That it's going to be failure or success that 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 is determined by that hour? And I'm like, well, hold on. No, well, I got an hour for anything if it means I'm going to be successful, and I won't even get involved if I don't have the ability to do that, right? And what's funny is I think that this process of being able to break down the day into a shorter video that people can watch is going to be great for people that can't be here during the day, and that's what I'm going to be focusing on a bit because I like to make the videos well. I don't want to half-ass it, you know? Like I don't like doing anything half-assed, so it's a process. And that's why I kind of have problems with burning out when I had to spend like 12 hours doing the videos, but now I don't. So I'm like, okay, let's see what's up. And I keep finding things that make it easier for me, so it does motivate me more than ever before as well. So that, hey, this is also a blue line, and under no circumstances are any long trade stops safe above it. It will test that line in time. And it's so important, meant to be white actually, because I can't have anybody missing it. And it's like if you ever see a blue and white line, you don't understand it. I encourage everybody to be like, well, why is that line like that, and why is it so important? Like because important, I get things to stand out if they're important. Like, and I'll try to turn things down. Like lines we're not really subject to thing. And if I make it less visible, it's because I'm not watching it as much personally. And it doesn't mean it doesn't exist though. Is it impossible for us to get to it? And in the event that we do get to something I'm not really watching, it could be on something extreme or extraordinary. And in the event that we come down and end up stretching back to a line like that, yes, it could be very attractive, but only on the conditions that are very, very specific. And I mean, like, this is very specific. It's like it's listening. It's like, well, yeah, the blue and white line, though. I know we've been chopping here for a while, but why is the blue and white line not tested? Like it bothers me, it bothers somebody else, and they make it happen. And at the end of the day, we've got new little green dash lines up here too. So it's falling in a way that insinuates that, yeah, sure, we could go all the way to the green zone and hit these B points, but it doesn't change the fact that these are untested and it's affecting its ability to, like, it would be better off if it actually came and grabbed them before going down so it doesn't have to later. But if it was to suspiciously leave them, then it could come back later and get them. Like I said, in the event that it gets them now, it wouldn't have to come back later. So we'll see. Done 2 of the 3. Of course, I draw these in there. It's like if anybody got exposure off of the red zone test for the green zone, by this point, you want to make sure that it's profitable and safe enough to continue holding. And of course, no stops should be dragged beneath any green dash lines if you are short, and no stops should be dragged above any green dash lines if you're long. Because they are targets that could get hit on the short term range, they're not necessarily like just because it's a B point doesn't mean it's something that you have to go for. Sometimes they're really tight, sometimes they're really risky, but they are B points because you can put fibs on them, because you can say that they are untested, because you can say that they haven't been, what's the word? I don't want to say like they haven't been completed, like they haven't been dealt with, they haven't been they're left untested. And it's not like they all have to get tested. Like I mean, you can split hairs with these little highs down here. It's like, why didn't this high get tested? Why didn't this high get tested? Why didn't this high get tested? And this one, and this one. I'm like, well, no, that one got tested. Still, I mean, what about all those other? And I mean, just because they're so short of a time frame, do we neglect them? Or is it true that, even last time that we did this and we left B points here and here and here, the entirety of that big blast was taken back specifically just to ensure that every B point was tested and that the mean was regarded again? And I mean, like, well, here we go. We've tested all of those B points in the short term. God forbid anybody prevented that from happening. That's the lesson, right? Because you wouldn't want to be the person preventing it from happening. Just like you wouldn't want to be the person preventing these ones from happening. And it doesn't matter if we actually make this entire move out of the top first. Not to say that it's going to happen, but at the end of the day, it doesn't change the fact that these are untested. And what it means is that at any given time, no matter how far away we get from those B points, those that are exposed to the successful trend break can reap the reward of getting to the B points. No matter where it goes, technically the higher it is, the farther it is away from the B points and the more valuable it is to be exposed to the return. But when we are at or are not at a level that is typically used for a reversal, we could expect it to be considered underdeveloped. Where we currently are right now is at an area where you could say it's underdeveloped. Now, why though? Why would it even ever stop here if it always likes the other levels and it shows so much value in them? Well, because something else is in the way. And it's not just this pattern or just this tool that's being used to regard the value here. And I mean, this is the red zone, and it has been known as a resistance barrier that's responsible for getting it down to the green zone. And, it's like, God forbid one was to obstruct that from happening, because that's what it's supposed to do. So I'm like, well, if it doesn't do it, okay, it's not something I really want everybody trading for, but it's underdeveloped at this point. I would much rather like it from a point where it typically reverses or where it was even. Like if we did this spike out of the top and we still haven't hit these points yet, then that would mean that capturing exposure to that trend break, from like this 261, that would be almost difficult to get up there without breaking the trend first, right? And if it has the audacity to continue stretching into something like a level like that, it could provide a really attractive trade with a very, very nice risk reward profile, where essentially the amount of risk that you'd have to take to get exposure to this 261 would be very minimal in considering how much reward you would get if you got to the target. Like, are you gonna risk this much on top of the level that you're supposed to get in? Are you gonna let it go all the way up to here? Like, come on, why would you do that? Would you even let it go to here? No, I mean, that's clearly wrong, right? Why would you even let it go past the 300? Let's put them on, right? So it wouldn't make much sense, right? Because I mean, if this is the designated reversal area, why would we let it continue to multiple levels beyond where we thought it was going to go? Or would we contain our risk around this area? So it's like, yeah, let's look back and let's see if you had wicks and spikes that were common in other reversal areas. Is it okay that we put them on top of this level if it is going to be a very critical, crucial reversal point? Sure, let it do the average spikes that we see everywhere else that we've always used when it comes down to reversing. Is it such a shame that we did that through it? Or would it cost you your position and your exposure? I mean, like, some people, you could be literally so picky, which is not a bad thing, that you're only going to be interested in taking that spike when it's made out of the 261. And if it doesn't make the spike, maybe you don't even want any. Maybe you get one at the 261 and you're trying to get two on the spike. So you know that at the very least you're going to have something for the target, but you haven't added so much risk so that when the spike does happen, it's costing you. You have the opportunity to seize it and to capture that spike. And this is also a hypothetical situation, but it's like, God forbid this situation came to us in 0.5 seconds, would you be ready? Well, if you knew that that was something that could benefit you by it getting to a level like that and returning all the way back down to the B point, it's a nice thing. Now, of course, it's extreme, but in the event we're presented with something that would be that high probability of a trade, I would be interested in that. So it's good to have your eyes on exactly what you would see as one of the best plays here. And in the event that it meets those conditions, well, be all the more attracted to it. And of course, if you're in from the bottom or yesterday, um, what is it to continue holding? Do you have to find out where it's going to reverse here, or where it's going to reverse here, or where it's going to reverse here? No, because you're already in. So what's the job? Is to put that on the back burner and to find out where it's going to reverse at the high, so you can in turn take that trade while you're waiting for your core to continue, and while you're waiting for that to continue running and running and running. Because why get rid of it when you can keep control by taking a short, by targeting the green dash lines? And at the end of the day, like I said, if anybody does have a trade that's from the red zone, to make sure that it's protected, you've allowed it to come back to hit the B points because now they've been cleared. Now we're continuing with the trade after doing the specific short-term maneuver, and we're on our way to the red zone. Like I said before, it doesn't matter to me if we come back and test the red zone here and then do it again, or if we came up to test the red zone and came back here and then tested it like that. That doesn't bother me. But coming back to test that red yellow line is something that has been very common, and I find that it would be insane to obstruct it. Now, it doesn't mean that it has to be easy or quick. We can continue grinding and meet that 261 and then come all the way back to do the retest. The interesting part about that line is it's not getting away from us quickly. Yeah, sure, tomorrow it'll be a little bit lower, but will it be completely out of the picture? No, no. It'll be still roughly around 16,000, maybe a little bit lower. But if we deal with it well enough today, we may not have to. And of course, I could take off all of these lines here, and I do this to try and reduce the clutter because, if I'm not considering any of those levels because they're not important in this reversal. These are the levels that insinuate that there's resistance that could otherwise bring us back to this point. Every single one of these levels has to do with coming back to the 100. The 100 is the green dash line always. I don't put green dash lines on the 127 ever. I never put them on the 61. I never put them anywhere but the 100. And I do this because it represents this B point, or it represents this B point, which at the end of the day is exactly the same as this. And it does not matter where this comes from. Could come from here. But at the end of the day, it's true that no matter what happens, this portion right here, you'll be able to put a B point or put a fib from here down to here, and it will provide these levels that provide resistance to get back down to this B point. Always. Um, basically. And the way that this can be constructed can be completely abstract, I suppose you could say. There's multiple different variants of how we can make a W. Like this is acceptable. This is acceptable. This is acceptable. This is acceptable. Shark. Like it's got a fin out of the water. The bat. The crab. I'm not sure why they made it the crab. I would have called it like a giraffe or something, but yeah. Because the whole thing about a crab is that it's supposed to have an 88% retracement here to an 88% retracement here, and it leads to a 261% retracement. So basically it's saying that this original move here has had an 80% retracement all the way back into itself. So if we go ahead and put fibs on that, we can go ahead and look that, it basically got back to the 80. Like this is the 88, the white line. I mean, it got to an 83. So, okay, that's like close to it, close to the 78. And then it came all the way back down and retraced 85.4% of this move, which is close enough to an 88 for me. And then so basically we've done what's close to an 88 and an 88, and then it's went up to the 261. As a result of that coiled up energy, its ability to more than double is on the table. That's just a little bit of that. And I'm like, wow, if I had to draw that in every single time I made a trade, I wouldn't even have the trade anymore because it would be over before I started it. But it's basically instead of drawing it out like I just did there, what we what we have here is like this: A, B, C, D. Like it's no W, but it doesn't matter because we don't do anything with this. The fibs that we have are placed from the B to the C always, even if it was a W. Like if it came from here, that would be a W, but it's not. And I'm like, well, okay, so it's acceptable for it to do that. And I mean, this is just one way that you can find you can find out if it is in the process of doing one of these patterns, then we shouldn't obstruct it from doing it. Now, can you see the value of letting a pattern form? And what is the price of not understanding some of the patterns that the market makes? Well, you'll be in a disarray if you do not understand the simplicity of, oh, it's just supposed to make a W in this area, or it's halfway through a W in this area, or it's, appropriate to make the M before coming back to the W like we saw yesterday. And sometimes the distance between the two highs and two lows can be found very, very similarly. And the space that it takes to use them also considered very, very similar. The runs that we have that are not contained within consolidations are very, very similar. And like this move right here, we could say could even be used again to formulate the M. But and if the market shows somebody like 100 times that it's interested in making a technical specific pattern inside of a range, and you could say that it did do that while it was there, you could say that understanding that pattern was a benefit to those that traded that area, and those that didn't were at a disadvantage, or those that neglected the fact that there was patterns in general were at a disadvantage. And as I just explained that, I'm like, look at this W into M and how they've changed that. But how is it not the case? Did I just explain how we could do an 88 to an 88? What was that? Right beneath our eyes, we did what is very close to an 88% retracement here and very close to an 88% retracement here, and it did more than double, like we saw in the last. But when it was finished, is it not true that it took this environment here and replicated it on the high? Like I showed in the other thing, and I didn't intend for this to be the case. I explained it and then I noticed it. So it's kind of interesting, because I wouldn't explain it if it wasn't something that was relevant that we could use multiple times throughout the day and understand. And look at how badly it did it here. Is it not true that the confines of a W require us to go down once, come up, and then meet that low again? And it doesn't look pretty, but it's true that this downtrend had to break to get us up here. And when we made our move up here, it did come back down to this low. And then it chose to make that move again up to a new high. And when it made that high, it plateaued at a point that could be considered the A point. And it did come down to meet this low, made a new high before making the the distance right back to that B point. And what we're left with is a W into an M. And for that entire process, we understood the value of putting the B points on that point and the value of putting the B points on this point. And it just basically did a smaller version of what it's just done. Except the sideways consolidation we could see has involved bleeding out. You want to know till where? 61. I've seen it so many times. Understand the 61 is incredibly valuable. Now, what did we decide to do? We decided to use the green zone and red zone for the first time, and what retracement did it decide to make shortly after? Suspiciously particular, the 61. So it must recognize this is a range for it to spend all the time making a W and an M, because what does it show in a W and an M? It shows that we've made a effort at creating a support area out of the green zone and a resistance area out of the red zone. Because when we make an M into a W, is it not true that we have to cross this point 1, 2, 3, 4 times? And the same has to be done up here? And how if we're crossing the same point 4 times, making it equal on both sides, is it not a consolidation? Because to me, I mean, the definition of a consolidation is being confined within barriers and using them to trade within a specific area. Like we're basically doing that in a confinement area until it's finished and until it breaks the trend or breaks the trend, it's stuck in that consolidation. And is it not true that that consolidation at the very minimum doubles, if not triples? Every time that we've done it before, doubles, if not triples. And then we take this one and it doubles, but didn't triple. But it's acceptable because it doubled, right? So I'm like, well, at the end of the day, it's still following the rules, right? But watch, next week, do consolidations double? Well, we'll have to be in line with the market to be able to determine that. Because it's not something you can plug into a computer. Just like the doctor would say, it's not something that you could say is the same with every human body that they see every day. There's going to be slight differences. There's going to be, a generalization of how you're going to deal with everybody, sure, but you're going to have to understand the specifics. Just like with every mechanic that sees every car, you could bring them, how common do you think Ferraris are brought into the local, rundown mechanic place? I mean, do you think they would be able to figure it out instantly? No, they'd have to maybe look at it and look at the specifics, and they understand the general way a car works, and they should be able to figure it out. But I'll be damned if they can work on it like they were working on the Honda a minute ago, right? So I'm like, and it's it's interesting as well because you can, a lot of different things like small machinery and stuff like that. You can assume it would work similarly, but then we have technological advancements which change the specifics of how those machines work to make them better. And if you don't understand those specifics, don't be surprised if you can't use the machine. And I'm like, well, that's why there's training and updates that we have to do in order to learn more about the human body, to learn more about the car, to learn more about the machines. I'm like, well, it's not like we're not learning more about the things that we do every day. And to assume that, you know, it's going to be done the same way in 10 years is, maybe sometimes it can be done the same way as it once was, but is it going to be every time? No, there's going to be more variables as there always is in the future, just like there's more cars and there's more humans and more problems with those humans. Like, did somebody have to figure out how to deal with COVID 100 years ago? No, because it wasn't a problem for them. They had something else. And it's like now the cars are getting more complicated. The market's having more people. There's more money. There's more interest. There's more companies. There's more volume. So it's just good to, and like I don't challenge that much. I'm just like that's an understanding for me. So I don't like it's on the other side of that is confusion. I'm just like okay, then I can keep that, and I can not have to worry about it. I can know it's not going to affect me in any way. I'm just gonna keep that as the way that I understand it, and it keeps me not seeking answers or wanting to try and experiment with things or wonder about stuff because the way that I think about it is a way that works. So don't break it if it ain't, or don't fix it if it ain't broken. And every single ideology that I have is based off of my experience and results that the market has given me from thinking the way that I do about it. So I keep an open mind very regularly because I accept the changes the market makes, but I dare to go against the specifics that I that the market specifies to me, and I just relay them. And they're not the same thing every day, which is interesting because when you think about learning how to do something, it's not like you're learning how to build a chair the same way every single time. But it's like you're learning how to navigate a different map. Like there's a certain way to read a map, and like you can give somebody 10 maps that doesn't know how to read a map, and it's not going to matter to them because they're all going to interpret it in their own way. But to the person that understands how to read the map, you can give them many different maps of many different places, and they will understand the terrain and everything properly, and how to navigate the best way, the quickest way, the safest way, and you know, and to recognize everything that the map is intending on showing those that want to traverse the area. So I mean, it's the very same way when I look at this as an area, and it's pretty much full of opportunities and dangers, you know. And it's like, well, to understand what those opportunities are, what the barriers are for the prices. So when we break a trend, it can move into multiple different barriers depending on the momentum that it has. All things that can be checked, you know, like every barrier that we have can be identified. It could either be accepted or neglected. And then when we look at what the things are that it chooses to respond to, why is it that they are all the things that we have on here? Why is it that it chooses to use things like this? You know, and do most people have that line in there? No, 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 they don't. They would take this off in an instant because it's not the way that Google says to draw a trend line. So, very intriguing to me. But instead, when I see this trend line tomorrow, I'll be damned if I don't recognize it and remember exactly what it did on this line. Just like when I can see a line that comes from another day, like I can see that this one was a long-term trend. This one was another just a trend break, basically not anything more, but just a trend. It was a longer-term trend, but still, nonetheless, it broke, and very similar to some of the other trends that we have going on. I noticed that it came back down to step on top of that trend. So, you know, is it valuable to keep things like that? Well, it can be for some time, and you know, eventually we'll be far enough away from it to assume that it would be, you know, too much to expect it to be used in the day. You know, because it's too far away or just outside of the realm of the market's average movement, that it would be too extraordinary to expect it to be used. So we wouldn't expect it to be used then, because it would be too crazy to expect it to be used. Just like I'm like, well, it's too crazy to expect this line to be used again. You know, like this line, it was already kind of like fading out at that point. I was like, yeah, you know, like we're not going to keep a focus on this line, ladies and gentlemen, because it's like, look at it. How far away is it going to be tomorrow? It's nearly going vertical, you know, and it's not coming to the price. As the price goes sideways, this goes farther away. So every moment that we expect that it's going to come to it, we're kind of doing ourselves a disfavor, right? You know, it's not really good to assume that that's the play. And I mean, in the event that it did get to a line that was that crazy to get to, or that much of an out of out of the way line, I mean, I wouldn't be surprised if it held. But we can't expect that it's going to continue to do things that are that extraordinary on a regular basis. And to put ourselves in a position that would be affected negatively if we didn't get that extraordinary event to happen is never a good decision. So And you could see that the way that it respected this blue and white line, I made it very clear that it was going to be something that we're going to return back to. You can see that it's returned back to it from both sides, spending roughly the same amount of time and distance on both sides of the blue and white line, acknowledging its existence and its importance in the range. And it's not because everybody's got it, contrary to popular belief. And it's not because everybody has this red zone either, because at what point today did it identify this as a red zone? You know, because it was already there before for the people that survived the previous environments. The people that were around when it was using this as a red zone, it just shows that like basically they're testing whether or not people were working, whether or not people recognized that it was worth drawing analysis on this day. Because that's what it takes, in order to see the resistance of today is to have been working on a day that might have been a different range. And a lot of people, they leave holes in their work and they come back and they're wondering why they don't have trend lines that work properly, is because the market's respecting things that it's already that it expects people to have. And I'm like, well, at the end of the day, it pays to make sure that we understand some of the most core trend lines, and the things that are at least long-term levels as well should be marked in and specified as something that stands out, and something that's like this major red yellow line that is the downtrend on the longer term chart, and it stands out as clear as that way. And that's good. It avoids confusion, and that adds to the the confirmation, because if every line was the same color, we would have to go back and confirm that it truly was the line that we thought it was. But because they're color coded in a specific way, we can see that they can be really useful, contrary to popular belief. Again. And still testing the blue and white line from above is absolutely acceptable. Just like that.
Making an M here, John?
It could be trying to. I think it's kind of a little slow though, so I'm curious about whether or not it actually wants to wake up for the M. It does have a little bit of a trend here. I'm curious about the way that that's constructed, because it's like we have this giant spike here, and it's kind of separated by an S wave. And when I can see that that's the case, that is 5 waves altogether.
high. We almost hit the 161, so maybe we're just gaining momentum to get up there and hit that 188, 200.
Yeah, the bigger
I mean,
one. I did take it off. I'll
yeah.
put it back on.
I mean, it came down to a very short term 188, 200 with this consolidation, and the RSI is just kind of hovering around the middle. It's kind of weird because we're not in the middle of this move.
No, it's acting like it
You
is.
know, we're by. Yeah, isn't it?
Yeah, it's like it's got the slow, like the muddy middle kind of. And what's funny about that too is because like it is in the middle of what it used to consider a range, and it used to be the middle. And I mean, that's one thing. I mean, it really is going off of what it did here before when it was in this area.
Equilibrium. Yeah, yeah.
Yeah. I can hear one of the fans in my computer. I gotta clean it. Do that at some point today.
I get a little blower thing that I just plug in and it recharges instead of buying the cans all the time. Just blows it out.
Oh, really? So it's like a compressed air, but it's rechargeable.
Yes. Yep. Yeah, you just
I know.
USB thing, and you get them on Amazon. I'm pretty sure.
Oh wow. Yeah, I'll have to check into that. No use buying the other thing anymore. This spike was the one that we had originally here, sorry. It was the distance of what we chose to make the nodes in the future. Also the distance it made away from the original consolidation, which is kind of intriguing. The distance that we have away from the blue line. Not quite on the bottom, but maybe originally on the bottom. And it is the other spike that sits out of the bottom of the other green zone. Now, of course, the larger green zone does have a larger spike, but there are two spikes, and which one of them can come first is the question. Because I do believe that if we do the smaller one, we'll be at the 188-200, and it will also be the upper VWAP band. Yeah, but the way I see it, it's like a 60-40 on the green zone. I'm leaning towards it, but by no means is it a high probability trade, and all of what does come down to the green zone will be bought back out. So if one gives up their long trade to be able to just buy back into the green zone, don't be surprised if it comes back for you multiple times as it traverses the range. And if anybody's got exposure below the green zone, you'll see the benefit in having held it, even if it decides to make just a slightly newer low and slightly lower low and slightly lower low and then slightly lower low and then leave it. It's like everybody is forcing themselves into working if they have to, if they want exposure for the continuation. And it's so much easier just to keep your stop at the extreme and instead keep the hedge or hedge it and target that level and wait until it's knocked out. You can see just like the market's listening. You know, we're making a lunge down there. It's meant to scare everyone out of their long trades. So just like the last move. And curious to see about the gap that we're in right now. It has a node that's slightly lower. And if that could pretty much send us right back to where we are now, if not higher, because there's a little bit of a B point to test, just like we had a minute ago. It's deja vu with this point. What happened in here? Debatably happening in here. But it's definitely not an area that I think is going to end up being, the best spot to have traded it. It will always be before, and it's likely that the entire day yesterday's trade will continue to hold. And if you focus on trading against it, you don't ever have to worry about when it's going to come back up because you will have exposure to it. And at the end of the day, if you focus on shorting, you don't want to drag your stop within the path of hitting any of these green B points, but it's not your loss if they don't get hit soon, or if they don't get hit from these people, or if they don't get hit from the green zone just as you want it, or if it takes 11 lows to get all the way back up to the red zone, because it doesn't matter, because you can just take profit in the green zone and wait for it to continue. And it's not like there's no better play than to do it that way. And in retrospect, I'll go over it again when we're finished it and tell you how there was no better play than that play even before we've done it. And I'm like, I see it that clearly. There's no better way to do it than the one way the market wants it done. Just like there's only one way to fix many problems that we can see. You know, the best way. There's we can get half of this move if we want. Yeah, sure, that's still correct. You're still doing something right, but it's not the best way to do it. Best way to do it is capture the whole thing and to have seen its need and the necessity for that thing to happen in the first place so you can position yourself for it to happen. That's the idea. And until you can do that, nothing should be done, or else you're settling for less, right? And if it has to be all day that you wait for that thing until you find it, well, then that could be the case if you're just starting out. But as you learn more and more things, there's a higher chance that you'll run into something that you can find value in. Therefore, you don't have to be waiting as long. But it all starts with the ability to turn that patience and to have the discipline to wait. It's like funny enough, you have to have discipline and patience, basically. The discipline to wait for only what's good for you, or so the patience to wait for only what's good for you, and the discipline to only implement your rules the exact way that it should be done for that environment, to capture the entirety of the move before it happens because you've seen the need for it to happen. And it's like if you worked for a firm and they came to you and asked you, why are you doing what you're doing? And you can't answer that question. And I mean, like, why would you do anything for yourself any differently? It's a matter of holding ourselves accountable. You choose how long your days are, but you choose how much of an understanding that you're going to have out of the moves. We can choose whether or not we accept or neglect what the market has to show us. And I'm like, oh, after all the consolidations I've sat through, I can tell you pretty much exactly on the time that we're going to be finishing consolidations. And if you don't think that that's valuable, then don't wait through consolidations. Have it so that you don't know anything about consolidations or what they can do or how they end or what they're used for or anything like that. But because it's not benefiting you actively in this moment, it's like saying that, hey, I'm going to set all my soldiers up and stuff like that, and I don't want to, see how they perform or anything. I'm like, well, it doesn't make any sense. You want to make sure that you are actively invested in everything that you've planned for, set up, and then you have to manage everything properly so that everything falls into place exactly the way that it should, because there's only one way to win, and that's to make sure that everything falls into place in favor for you. And if you don't have that in the case here, you're going to end up with disarray or confusion. And I mean, that's not a winning strategy. I mean, you can't say that you'll be, you'd be worried. Let's say you won 5 times in a row off of disarray and complete confusion. You're going to be thinking, oh geez, man, I really don't know what I'm doing, and if I do something, it's just around the corner from me like failing because I don't understand what I'm doing, and soon enough it's going to catch up. And I mean, the power of it is understanding that you have acted on things that you understood in the past, and you can find those situations again in the future. It's just, do you have the discipline and patience to wait for them? And that's it's the like the I often every day talk about things like that, because it's like, to me it's motivational, but to somebody that doesn't have any direction or any kind of idea of how they can benefit themselves or how they can implement a strategy even better, how they can create consistency, it'll worry them. It'll be like, oh geez, well, if I continue doing what I'm doing, he's right, I'm not going to end up having control, because somebody that has control is going to come through the door and take whatever I have from me. And I'm like, well, I can't live my life like that. I can't have anybody rely on me if that's going to be the case. Nobody could trust what I have to say. Nobody could believe anything that I do. Nobody would I couldn't even say to anybody that they should even think about what I have to say, Like, I wouldn't be able to bear what the results would be, how much of a negative impact it would have on people. But it's not like that. It's like, try to follow my rules and see what the benefits are. Because every single day you can see that they're the rules that if I was to change them, I really couldn't make it any better of a plan for the people. Like yesterday, it took all day to get the best trade for today. And if not, how not? And I mean, what did you have to do today if you worked all day yesterday? You have to do anything today, or was this entire day free for you? Did you get the whole benefit of the entire day straight up to the red zone, and every single target that I put in there was hit, right? So everything that you have now is just beyond the profit. You've taken the profits, and what you have left is the house's money. It could go back to zero. What you've been paid is what you've taken off. If they want to give you more, that's a bonus, right? And you can accept that more. You don't have to close off what you have left. You can totally accept more. And I mean, you've endured this pullback. If it happened again, would you not be able to deal with it? And why not? If there's a target there that's designed to get hit from the red zone, is it allowed to? Well, why wouldn't we allow it to? And do we find value in buying up here? Because if we sell, I mean, where else are we going to have to buy? I mean, if it does come down, then yeah, you'll have another opportunity. But if it does come down, and I mean, if that's good enough for you, it's not good enough for me. Not good enough for me, so it shouldn't be for you. So it's called, we have to hold ourselves accountable. Doesn't matter if we've made enough money for ourselves. It doesn't matter that, like, it's like, do we want tomorrow to be easy? And I mean, clearly the people that call the shots, want us to look more than just the short term, more than just the long term. They want us to be versatile. And when you are versatile, you can take pride in it. It's something that you worked hard for, something that you intended for, and something that nobody can take from you. you know, and the people that aren't versatile, they fear it because they're like, oh, I don't want to go through what it takes to be that versatile, you know, trader. I was gonna say warrior, but it is like that. You know, you want to have that kind of, you want to build on your skills every single day. You don't want to be met with surprises. You want to be met with understanding, you know, because it's very similar in other dangerous situations too. You don't want surprises, ladies and gentlemen. You end up dead or something usually. So it's like you want to understand what's going to happen clearly and implement your plan successfully because there's one way to do it right, and that's the way that you're doing it. So that's the name of the game. And if you're willing to work for that to be the case for you, then you will reap the benefits of what it is to have control and what it is to understand, and to what it is to take action on that understanding and to keep that control. And if what other way is there to be successful if there isn't, like, if you know, people that haven't been successful in trading won't know that process because they've never even experienced it. They don't know to work for it. They don't know to push for it, right? So it's kind of interesting. Kind of interesting. That just made me think. It's like only if we could see ourselves at our full potential we be more inclined to put our our current entertainment aside to be able to fulfill our true potential, to see the true value that we could have, to be able to do everything that we possibly could. And I'm like, or do we settle for what we have because we don't know what we could do? And I'm like, well, only if we imagine ourselves to be able to do more, you know, would we ever try? You know, and I'm like, well, you have to believe that you can do something, even if everybody can't show you that, or everybody is failing at that task. I mean, you know, how did planes get created? People died many times trying to fly. So many times. Yep.
Yo, John.
Yo yo.
Yo, I know I asked you this before, but
Yo, what's up?
let's say that I have like a long on MNQ and a short on MES, and I
Okay.
start wanting to play a little bit. Would you do like M2K or MYM at all?
Okay, and MIM.
Short little moves?
Check out it. Okay. Yeah, I mean, you could. I mean, this is an index that has a mind of its own, and it's not really something that you would really trade against the market or with the market or anything like that. It's not really good to use for hedging, but it plays its own patterns out and does its own thing and moves on its own terms, and it's a little bit more erratic than, like, it's basically 2,000 small cap stocks that are basically, you know, some of them are like penny stocks, so they, when they're dead, and when they start moving, they start freaking moving. And it's like, you know, that's the vibe I get with this, you know. It's good when it's moving though. It really is move. Like, look at all the W's and M's that there were here, and look at all the B points that have been filled. It's like this was a W, came down to it, and then it made like another W in here, and it came down to it, and it also made an M. It came up to it, made a little M in here, came up to it, made another M in here, came up to it, while it was making a W in here, came down to it. I'm like, wow, okay. There's nothing there. Well, there's something there at all given times. Now, it's not like what it was given here, but it's smaller. But you can still see the same kind of principle applies where here it was an M. You know, here you could say it tried to make a little bit of a W before making an M again, but this one was like an all-in-one. Reminds me of how we can make an M that turns into a W. And I'm like, well, if I showed a grade 3 this, I'm like, what letter is that? Well, it's a W, and that's an M. So it's an all-in-one at the end of the day. And we can get that kind of pattern and that kind of movement inside of consolidations and so on. And you can see even on the very, very smaller scale here, we're going W into M like that. And we do another M right here, like a W right here. I'm like, I just see it everywhere. It's like even this whole thing right here is like a W, like 88 to 88 kind of W, crab, where we do like this. Pretty similar. Have in there. Like it went to the 261. It doesn't just double, but a little bit more. So like, 261, 300 area, roughly. I haven't really looked at this one much in a long time, but I used to trade them every day. There used to be like a religious move in the morning where every single day they would have volatility and it would be really predictable. And it was like everybody would show up for the volatility and it would die out significantly. Like it can go pretty dead pretty fast. Take a look at some of these other charts we got going on.
Yeah, I pretty much. I mean, it's definitely not too bad to sit on your hands sometimes, but I already
Yeah.
had one contract going each way, so I just kind of wanted to do something, you know.
Yeah, yeah. Because, even if you have an even amount core and short, if you increase the amount of distance between your core and your short, it means if you close both positions, you retain all of the profit between them. And the farther and farther that you can actually increase that distance, doesn't matter if you're increasing it on the high or the low, but if you're moving it in a range like this, and you started out, let's say you shorted here and then you came down and you hedged it here, and now this becomes your new core because it's the longer term trade. This gets knocked out. Now you hedge it up here. Now it comes all the way back down. This gets knocked out. You hedge it again. Now this becomes the core, it goes all the way back up where this gets knocked out, where you hedge it again. And then it comes all the way back down, and then you hedge it again, and effectively each time the profit between this level and this level is increased to the point where instead of having the difference being 48 points between the two trades, you've actually locked in 133. If you decide to close both positions at any given time, you get the 133, not the 48. So it's interesting. You can have a little bit of a bias with it too. And it's like, let's say you started with NQ and then you started with 5 MNQ. And then it came all the way back up, you'd have less. So you couldn't get even less here. You'd have to pretty much start scratch. But at the end of the day, if you understood that it wasn't going to come all the way back up to this point, and you understood that this was supposed to be something that was supposed to hold for the long term, you could take smaller moves back up using 5 and still be contained within the core trade. And sometimes, you're left with these moves right here, and you can take this on MNQ as well, and you can continue to go. And this just seems to be the average counter trend move. And if you can find value in getting back to each one of these B points underneath and taking profit on them while you're benefiting out of holding this NQ from the top, no better way to do it than that way. So it's like every single cushion building trade goes into the fact that at the end of it, it is the easiest to manage the minis against the micros, using the micros to hedge the minis, because you can break down your core position into 10 different increments where you can choose to say, hey, if I've got NQ as my core and it's coming up and I say, oh, I want to take half the risk off, you can buy 5 or short 5 MNQ, where you know that even if you're wrong on that 5 MNQ, you still have the value of 5. So it's just like you're turning half of your position off for that moment. But it's funny too, because if that 5 comes down into a profit, you can drag your stop into profit. Now you're waiting to see if your NQ gets knocked out, that's absolutely fine because you still got 5 from the top. And you can actually afford to get your NQ back a lot safer because you've got 5 from the top. And all the profit that's contained within that 5 can go into risking buying back that NQ, because you don't sell this until you've got your NQ and your stops in profit. You don't ever have to sell it until it's stopped out if you don't want to. And it's like the options that are there are absolutely crazy. You get so many different options. Because let's say, for instance, it came up and you wanted to use like 8 MNQ because you were absolutely confident that it could overlap your position. And it's like, let's say, for instance, you're really adverse against going against your position, and you're like, I know it's gonna have a little dip, but it might not. Say you take 2. And it's like, what if you're wrong on 2? It's just 20% of your position. But yeah, if it dips down a little bit and you're able to sell that too, well, that's an extra 40 bucks in your pocket that you never had while you're waiting for this move to happen. So people don't do that because the last thing that they would assume is that their holy, baby of a trade that they've been holding and they've been feeling so good about is they're going to trade against it. They can't even bear to sell it. So they watch it come back down in the next retracement. And I'm like, well, to me, the first thing I'm thinking about is opportunities against the trade while I'm in it. It keeps my mind really open. It doesn't make me block out ideas that could affect my progress of my long trade because guess what? I'll make money on it while I'm holding. And is there a better way to do it than that way? Why do the hedge funds name themselves after it? It's just like I can go on and on.
Freaking A, man.
Yep, because
So pretty much,
Mhm.
like, because I definitely can't use MQ right now. That'll
no. So you want
But
to build a cushion,
so I
so
pretty much just replace the MNQ with MES,
yep.
and your hedges are gonna have a little bit less leverage, but like it's still you're still making money.
Yeah, exactly. And that little bit less leverage is not so bad because it's not like you're getting the same amount short that you have long. It's like you're doing a little bit less. It's like you're getting maybe 6% of your, it's like you're getting 6 contracts against your 1 MNQ almost, or sorry, yeah, it's like you're getting that same kind of less risk associated with being in an MES because it doesn't move as hard and so on. It doesn't offer as much when it does make the same move as well. 0.12% is what it managed to come off, and the Nasdaq managed to come off 0.24%. So like if you were to put $100 in both trades, you're going to be making more money. On the Nasdaq because it does make more moves throughout the same time that both indexes are given. So I'm like, well, if you're wrong on MES, it's not going to hurt as much as well. That's another thing.
Yeah, for sure. That's also kind of why I was trying this like Russell trade out because it did actually pan out, so then I could kind of like raise the stop up a little more.
Oh yeah, so like that's another great point. So like if you take trades, like let's say for instance, if you're in from a core position at the bottom and you did hedge it successfully here, you did hedge it successfully here, you did hedge it successfully here, and here, let's say all of that profit amounts to like how much points captured on top of your core while you're waiting. So you're able to capture another 83 points if you took all of those trades while you're waiting for this one to continue higher. And I'm like, well, with that 83 points that you've captured on those hedge trades, you can adjust your stop to the very low to make sure that it has to come all the way down to get you out. And at the end of the day, yeah, sure, this trade will be reflected as a loss, but it will be contained within the profit that you've made hedging. And it's that much more likely that you're going to stay in because it's that much harder to get you out. I mean, this is a strategy that we can all use in order to get more room on the trade that we want to see go the farthest. And do you think that the hedge funds are aware of this strategy or no? That's another major thing. Of course they are. Of course they are. They freaking named themselves after it, for Christ's sake. we got to make sure that we're not neglecting the thing that the people that have all the money that have been doing it for the longest, that have the biggest teams that are renowned as the highest on the on the food chain. I was gonna say, but yeah, it is the case, and I have a lot of respect for the methods that they use, and it's like you have to want to do it. You have to, intentionally do it. When you do it correctly, then you know that you have that control. And I'm like, well, it's worth fighting for that control. We're going to get the change of the hour soon. I wonder how that's going to affect the consolidation. It is true that we did move from the red zone to the green zone. And we just had a pop off the green zone. The B points down below are still untested. Having not come off of any kind of respectable fib yet, though, we've just basically fallen off of the 161, not the 188, where the 188 would be a little bit more of a threat, I think. Especially having not hit the B point yet, which we could do, so no stops are safe above it. You know, it's like, what I say about this range is I'm like, alright, no stops are safe inside of the range because God forbid it's to be used. How is your stop not going? How is your stop going to survive? I mean, it doesn't matter if it's long or short. If it's got to stop, if you've got to stop inside of this range and it manages to use the green zone and red zone at its extreme once, how do you survive with a position inside of this area? By putting your stop in the extreme. Well, you have to put your stop in the extreme. Yeah. At the end of the day, let's say for instance, if you're in from just the edge of the green zone, you manage to get it to the red zone. You know, you can't really put your stop at a loss. So if you were to hedge the red zone and make some money on it, you could justify using that money to put your stop at the right spot. A lot of people don't get the opportunity to do that, so they're sweating buckets over whether or not that trade's going to become a loss. And I'm like, well, it's unnecessary. Because at the end of the day, if the core becomes a loss, well, if you have a hedge from the top, it's not like you're left without the extreme. And you can manage that extreme and keep that extreme, and until the market makes a new extreme, guess who's in? From the extreme, which is contrary to popular belief because people don't even try the extremes because they don't believe they can catch them. They're like, never catch a falling knife. What is that supposed to mean? That you're never going to catch a reversal? Don't even try? Interesting to me. What was yesterday if not a falling knife? And was it clear? Because it was in the chat. So I mean, at the end of the day, it's about a matter of understanding. If you don't understand, then it's a matter of like, you know, people get emotional when they don't understand. And if you act on that emotion, you become even more emotional. I mean, like this seems to be the way. Maybe not for everyone, but damn, it would be for me. I tell you, enough for me to not take action on anything I don't understand. It's like I wouldn't pick up a power tool that I didn't know how to use in fear of me being able to, you know, hurt myself or other people. Until I read the manual, no chance. Same thing with like firearms or like anything that can hurt me. You know, it's just not worth the risk of not understanding. It doesn't matter how cool it is. You know, I don't care if it's a fighter jet or whatnot. You know, damn straight, I'm going to school for years if I'm going to learn how to fly those things. Because if you're wrong, you're dead. You're dead. And I'm like, well, I don't. That's not a cool deal, you know. Like for what? It doesn't even pay you. But people are strange, you know. It's very interesting. You could do it in a video game with no risk. And the video games undeniably can make it more fun. Like they can do things that we can't do in real life, and I mean with no risk. And I don't get a thrill out of doing things that are risky, obviously. So a lot of people do, though. I mean, I don't share that though. I think I look at it as a danger for me and the people around me. Because people rely on me. I'm like, if I did that, it'd be freaking insane. Wouldn't I just I couldn't sleep. What's weird about this is we do have a downtrend, you know, and I mean like it's ever so slight, yet it's like it's gonna break as a steep trend, although it's not steep at all. And sure, between the two yellow lines that we have here, it is a triangle. And does it ever remind me of the weird triangle that I put in earlier that didn't look right at all? It reminds me of this triangle here, where it has like this weird longer bottom and like this weird flatter top, and I'm like that kind of triangulation is happening here, where it's like at the flatter top and the weird longer bottom again. I just can't help but notice that. Now, the last time it did this pattern, it had incredibly negative impact. Doesn't mean it will again in the future, but I'll be damned if I don't recognize that to be the case. So, just like we saw before, does it mean that the same thing's going to have the same impact? Well, why is it the case then that this consolidation here was roughly the same size and time as this one? This one was even higher, and it went up instead of down. The things that are like, if we're supposed to be buying low, selling high, and buying low, you would think, with people given the opportunity to sell higher on something that just worked for them on going down, you would think that it would be even better at coming down. And why did it take all their money? Really interesting to me. But it's not like it wasn't expected. Here, I'll show you. When we were at that point right there, we were looking at this to be the case. Like we saw it before. Notice this pattern? We've seen it long ago. Something you won't find on Google. This environment sideways, and then we went up. And look, what's funny is everybody that was shorting in this area that assumed that, hey, they're going to give me this, they still haven't seen a profit yet. They're still all short. They're still sweating buckets. And they're hoping that the green zone fails to be able to get them money. They don't even know about the green zone, but like I'm just saying that it's like wow, it's like I wouldn't want to be hoping the green zone fails. It just seems like a position where I'm like, it's like going against the grain kind of thing. And for what it does have like if it does have any kind of failure aspect to it, I suspect it will be bought up as quickly and vigorously as the last one. One thing that we will have to deal with by the end of the day, unless time freezes or the market halts, we will have to deal with both of these lines coming to an end. Or one of the lines for sure. But while we're contained within this area, like it can play some games. Because like I said about areas in the past, this is not going to be the best place for people to have traded it. So don't be surprised if it treats people like crap. Like I say, just because the market dishes out crap doesn't mean you have to eat it. And it's true. We can wait. Like fishing, we can choose whether or not we take a small fish or if we're going to be patient for a bigger one. And, we don't get to choose whether or not they come, but when they do, we get to choose whether or not we take it home and eat it, and this is the same. You want to eat the little moves, you're going to be tired and worn out by the time it comes down to the big time to catch it, the big fish. And I mean, they come less frequently. There's less of them, sure, but boy, are they ever worth understanding and waiting for. Because they're the ones that, having caught them, make it easier for a prolonged period of time. And it's like you couldn't say that to be the case with all the short-term moves because it doesn't make it easier for a prolonged period of time. It makes you work all freaking day if you choose the short term. You're just constantly just, where am I going to get in? And you're looking and you're looking. It's so much easier to be like, okay, where is it going to cause a threat for me? Am I gonna? Is there a threat here? And it's like, okay, you've caught the idea that there's going to be a threat. It's the red zone. Now it's come back to test you, but you're still in from the red zone. Now you're waiting it for it to break the red zone because anything it does off the red zone, you can profit on if you've hedged it. So it's a matter of patience. If you touch it, you lose almost. It's one of those things. Like it's like the next person to take action, is the loser in the environment. And I'm like, well, because you've already got something that's protected you and set you up for exposure in whatever direction it decides to leave this triangle, you're going to be in from the extreme either which way because you've decided to take value in both of those positions. And until you can increase the distance on your core, you're going to wait for the hedge to work as an insurance policy. In the event that it falls through the ground, your core is no good, you don't just lose all that profit. You still have the extreme. And I'll every day I will do different explanations of hedging because it's appropriate every single day that we go on. And there's appropriate hedges that can be made for any kind of core position that we've captured early on in the day, and doesn't always have to be a multi-day thing, but an intraday thing. And yeah, I always like to keep the mind busy when I'm in these consolidations, because you know what everybody else is doing? They're feeling dread. They feel weakness, and they think about quitting. And I'm like, I cannot share that same kind of attitude. It's toxic to me, and my success. So it's like I focus on exactly what it is doing, because this is what the market chooses to do, and I accept it. I understand that this is necessary sometimes, and it always comes to an end. Or else we would still be doing this from the last time that it didn't end. But you know, the past 5,000 consolidations that it's made this year, and the past 100,000 consolidations it's made in the series of time, they've all come to an end, or we would still be in one of them. At least one of them. But every single range this size has always ended. Every single range this size has always ended. Every single range the size of our entire day has always ended. So it's interesting when people assume that the trend is your friend, because why is it that no trend is still anybody's friend unless they're in from the one at the beginning? And it's like understanding when those trends break and what value they could provide on the break is far greater than whatever's left in any current trend. And that's the way I look at it. And now we're provided with more trend breaks than we used to. Before, the market was very, it was, back in the day, if you go back to like the 90s, we're going to see a lot of these. A lot of this. It was that easy for a lot of people. And now the market doesn't dare to do this. Because this is what's on Google. This is what it says that the market does. This is what makes people money. This is what's easy for a lot of ordinary people. And you know what, when I saw it change? Robinhood. Meme stocks. People taking it a joke. And then the market turned around and slapped everyone in the face, I think. And essentially it's like, all right, cheat sheet out of the window. Head and shoulders fail now. Rising wedges fail now. All of your favorite patterns, we're going to make them fail 70% of the time until you expect them to fail. Then we're going to show them working again. And it's basically, we're going to look for the volume where most of the people assume that a pattern's going to work and ensure its failure. 2023. The beginning of the year, I said it was almost like they made sure everything from the previous years did not work. Now, what's funny about that is, why would somebody that's been trading for 20 years change what they do that's making them money? And why would they wake up one morning and say, hey, the way that I do things has to change and I'm going to do it differently now? Does a mechanic do that? Doctor do that? I mean, they'd be crazy too. What have they learned and why have they learned it if it's just come down to that? Unless there's need for the change, right? But if you just decide randomly that you're going to change things for no good reason, why would you do that? And why wouldn't you change everything on Google then? Nobody cares. Interesting. So why would we take information from people that don't care about us? Because it seems to me that people put stock trading information out on the internet to benefit themselves, not to benefit you. Why, like all of those analysts on CNBC and stuff, don't forget, they don't know you. And they don't care. How can they care if they don't know you? And at the end of the day, how can they continue to provide results that treat people negatively and sleep well at night? I don't know. It's what it is to be a bad person. Yeah, but that's my opinion. And it bothers me to be a bad person. If you are a bad person, you should want to be a good one. No? I mean, like, what the hell? But if people are ahead and it's affecting other people negatively, it's really interesting, because they won't think twice. They'll just assume that's what they do and they'll work with it. And I'm like, well, it takes discipline to not be that way. That's the kind of discipline I like to focus on. It's hard for me to put discipline towards like working out and stuff like that and having a sleep routine and everything like that, but damn does it ever matter to me to be disciplined for the people around me and for the people that rely on me and so on. So I put a lot of energy into that. And it's like having went through this consolidation knowing that many people couldn't motivates me, you know? It's like so many people went to school, they're in Harvard and stuff like that, and just imagine if you could see like a telescope or some sort of like crystal ball where you could see them all every moment that every single one of them capitulated and decided to go turn the barbecue on or something like that. It's like, you know, that 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 would motivate me if I could actually see them in that moment not being able to deal with this consolidation because they lack so much of an understanding that they assume it will never end because it is the case that it's treating them like this. Yet I can prove to you that every consolidation of this size has come to an end to get us here because we didn't consolidate it in any other consolidation up to this point. We moved here, you know, and it's contrary to popular belief, it would seem. Because this consolidation is going to last forever and we're never leaving it, apparently. And I'm like, well, what did I tell you about consolidations? What do we wait for? They double at the minimum. That's what it's worth waiting for. And I say at the minimum because it doesn't have to just be the minimum. Remember how many times it's doubled and it's went to the 261 or beyond? You know, so it's like we do that in this trend too. So if we've done that and more than doubled the past 5 previous consolidations and maybe, you know, just doubled, you know, a couple of them or something like that, we could say that there's a chance that we actually do more than double because it's normal to do more than double. So if we assume that it only doubles when it's shown us 5 times today that it's done more than doubling, could we expect that maybe our position that we choose to leave the consolidation could do more than double? And I mean, like, first of all, I could see that this consolidation doubling wouldn't even make it even out of both sides. So it's already insinuating to me that we're going up and we're seeing that spike that's out the bottom on the top of this range. And effectively, you want to know what could happen right after that? We come right back to here. So anybody that's bought right into this range, they see that huge spike, it comes right back down to stop them out. And anybody that's in from the actual low is fine. They endure the whole process and watch as everyone fights and fights and fights for something that they had the discipline to keep. And I'm like, well, hedging makes it really interesting too, because when you hedge with less than your position size, you see the value in what it is to be on the team that you chose to hold. You know, you chose to hold long because you saw value in the upwards movement, and you try to fight against it with a hedge, and you see how difficult it is because it's tough to fight against the trade that you knew was the right one. So yeah, it's going to be short-term moves that get taken back really quickly, and you better take profit fast because your core long is making that money, and you want to make sure that you don't really obstruct it too much from being able to progress because it's just a matter of time before it does. And we can keep that protection high while we're waiting through that time by keeping a hedge and ensuring that that hedge is safe by putting a stop in profit and keeping taking some profit off makes it really safe to keep hedging. And if you've repeated the process of hedging multiple times, you can sometimes even gain as much on hedging as you have on your core. Like, let's say, for instance, in a hypothetical situation, or here, hold on. In a hypothetical situation where, let's say, you had a core position, right? And it was here. And you went all the way up to this point here, or let's just say all the way up to this point here, and you hedged it. You know, let's say you have 1 down here, and you hedged it with 2, and you're able to take off 1 here, and you come up and you hedge it with 2, you're able to take off 1 here, and it comes up, you hedge it with 2, you're able to take off 1 here, and it comes up, you hedge it with 2, 1 again, and again, and again, again. It's going to mean that if you've taken all of those trades as a profit, the amount of profit that you've stacked up on even just doing it 4 times, you've already made money. More money than you have on your core. So what is it to continue holding this? If you've already racked up this much profit on your hedge because it's allowed so many gyrations in the sideways consolidation that you're able to rack up this much profit and retain a short position the entire time, that it's unsafe to hold the long, that it's chopping to hold the long, and every risk that it ever throws at it, you turn it into an opportunity because you can, because it's part of your arsenal, part of your toolbox, part of your strategy, you could say. And I'm like, well, yeah. And if the majority of the public try to implement the same thing, the market will respond to it, and I'm confident that they will get swatted right back down. So it's not a matter of like all of the people flocking together and understanding the same thing. It's a matter of all the people losing the same way, and we have to understand how. Because the people that win do it very methodically, and they understand how their day is going to look before they even begin, because it's part of their plan. Where the individual doesn't believe that this could be the case, that somebody could have that much consistency, that somebody could have that much understanding in the market. It's unbelievable. Sometimes you have to have a loss, they all say. So they accept it, and then they become losers. But if you don't act on anything you don't understand, and only act on everything you understand, well, you can write a report about everything that you've done, and you can say, well, I understood it this way. And if it moved this way, you can say, hey, I took on less risk than there was worth reward. And the risk that I was taking was contained within the last reward that I had, and I'm focused on the next trade. What's the response to that? How do you tell one of your traders that they're doing the wrong thing? I mean, what are you supposed to say? We'll get back at it there, sport. It's like that's the way I would think of it. Pretty much like at the end of the day, you pushed everything that didn't work for you in the past. You understood it. You accepted it. You understood that the reward was more than the risk, and everything. Not always is every trade going to work out for you, but you'll understand how you can move on and how you can focus on what is good for you, and and how it's contained within a good risk reward profile, how that can make it safe, where one gain can pay for four losers, and then you work on your consistency. You work on your patience to wait for something that's a lot higher probability to be a gain, and you continuously do this. And when a loser does come around for whatever reason, you could wake up and push the wrong button one day, and instead of clicking buy, you click sell. It's like if you trade over 1,000 trades a day every single day for a year, and you haven't clicked buy instead of sell at least once, it's very, very interesting. Especially if you're a scalper. If you do over 1,000 trades a day, it's not a huge deal if you do that. But I mean, I'm just saying, it's not like it's never happened or that it can't happen. Like it's just like, but will you be able to deal with it? Is the next question. Well, I would say, well, of course you would be able to. Because would you allow a mistake like that to affect your last 20 gains, even if you close the position and it took back one of your gains? Are you going to feel about it, or are you going to move on? Becomes the question. Are you going to dwell on it? Or are you going to think about the next opportunity? And it's like, well, if you're so focused on what it is doing and what the next opportunity could be, where do you have time to think about what just happened? Where do you have time, and how is what just happened going to affect your next opportunity? And could it be said that at the best institutions, if you're sitting there dwelling on your last opportunity, you could actually get into trouble with that, do you think? No, because you're not thinking about anything but your own experiences and not what you could be doing to make the firm money. So you're ineffective at that moment. It's kind of interesting. And you wouldn't want them to see that. You wouldn't want them to see you looking down at your keyboard in frustration or anything. You wouldn't want that because it would show lack of control. And that's not why you're there. Is you're there to have control. That's what you're paid to do, right? And you pay yourself in this case to have control and to hold yourself accountable. And you can feel good about it when you do. But it scares people that don't have accountability. When they hear me say things like this, I wouldn't doubt it that they think it's a negative thing because, it's hard to do. But I mean, like, I dare you to just do it and see the rewards of being disciplined and putting the time in and having the answers and not stopping and not acting on anything until you have the answers that you demand, until you're satisfied with them, and exactly until you see it clearly. Because you can clearly see I see it clearly. So why would you take any action on anything until you have, remotely some sort of clarity on that thing? Doesn't mean you have to understand every single pattern I've ever seen in my life to understand the pattern we're in right now. I can explain most of the patterns that we're in, right? Like, obviously right now it's a really crappy pattern. I have no inclination on being part of what we're doing right now, but it's going to change contrary to popular belief. And if you're already in from any point that we've talked about, you're literally just waiting for this point to come to an end. And I tell you, we literally did make progress on it. Like, look at what we're doing right now. Is it not true that we made this kind of consolidation in here, and we did make a spike out of the bottom? And that spike out of the bottom is suspiciously trying to formulate by showing us that it's testing on the other side, respecting this area as like one of these little ranges, like I can draw in here, that has a spike on the bottom that respects the outside, and then a spike on the top that also respects the outside. Yeah, sure, it's tiny and small and everything, but what if something's wrong with it? Could it shine a light on exactly what could be wrong with the next major one that we do? Maybe it shows a hint at the characteristics of the attitude the market has to leaving the triangle. I know it's a big triangle, but it involves a lot of small movements. We can either accept it or neglect it. But it's true that this is the way the market has been trading, and we can understand that it's been very choppy, and throughout the confines of this area, this choppiness has coiled up energy for the break of one of these inevitable trend lines. Remember, before this triangle started, I told everyone it's going to end with one of these breaks. And I said, unless time freezes or the market halts, which is less than 1% chance, honestly, we're going to see one of these lines break. Because it's 1500 there, the end of the day is over here. So how do we make it to the end of the day without breaking one of the yellow lines? Can we do that? 'Cause if we can, it's new to me. I don't think we can ever get to this point unless we're like, oh, you know what? We're gonna try and go backwards and go around somehow. You can't do that. We're gonna have to go this way and break out. We're gonna have to go this way and break out. We're gonna have to go this way. But this point will be crossed by the time by the time that we hit 1509, one of those trends will be broken. That's a fact, and I can tell you that as a fact, which is interesting because some people are still guessing whether or not that's going to be the case. And I can tell you that this consolidation right here is subject to coming to an end when we break one of these lines, which could be at that time. So to me, I'm like, it's insane to assume that this consolidation should be the end of somebody's trading day, but it's the end of probably about 1,500 people's day, just because they can't take it. Consolidation invites capitulation. And it, obviously there's people that want to be here that can't be here and everything like that. I'm not talking negatively about those people ever. I'm just talking about the people that literally fold to go watch TV. Like, what's wrong with them? I mean, they don't deserve any money. That's the way I look at it. The market shouldn't pay them anything. And I'm offended when they do get paid, and I'm looking for that money because I understand exactly what it's worth to work for it, and they don't deserve it, so I'm out to get it. Right? At the end of the day, that's how it's ending up working. Like, if you're looking from a third-party perspective, it's like, well, they wonder why they lose the money they didn't work for, and it's like, oh, market's a tough place. Don't expect it to be easy for the people that want it to be easy. If you understand that it's hard and you embrace that and break down the difficulty into a series of small, easy, little strategic methods, it can make it easier. Just like it's harder for like the mechanic. Like, you would think it will be hard for the doctor to work on the person if you've never done it before. Just like it's hard for for me to work on a car when I've never done it before. I've never worked on a car before. I have no interest in doing that at all. I will always pay somebody to do that. There's always going to be somebody that's better than me at doing that, and I understand that. I'll never even try to even get close to the level of intelligence or knowledge about building planes or something that people do out there, or boats or something. I mean, I don't know how to do that. And I'm not the guy for that. But you know Oh yeah. Yeah, they're getting ready to take that off there too. I almost removed it, and I was like, yeah, that's not hit yet. But it's trying. And I'm like, well, hold on. This 161, which is all mighty and everything like that, to come back to this B point, why didn't it do it? Why is it the case that not a single one of these levels was responsible for the return back to this one? Could you say that it's still in play? Perhaps the level that it always likes to respond to, ironically, the one that hasn't been tested yet, the next one might actually get us back to this level. Because the whole time that it's been doing this, people have been shorting at levels that are up, you could say premature to the actual reversal level that it's chosen in the past many times over. Now, just because, and it's also the one that it's chosen to fail many times over as well. But I'm like, well, how do we ever get to a 261 if we don't get through 188s and 200s? Now remember, we came from an 88 to an 88. Could we go to a 261? And you want to know what's funny? Is the 261 is the minimum. It's 261 to 361 on a crab. That's the D point. It can be a 361 as well, ironically. So just to put that out there, hey, well, this B point is hit now too. But how she goes. The end of the day, the triangle will have to end whether we're here or not. We have to survive the time no matter what. And you want to know what's funny? Is it doesn't have to make it all the way to the tip. But it can. If it does, well, we know that it can't make it anywhere past the tip and still be in this triangle. So God forbid, it's this triangle that's making us chop like this, because without it, we might be interested in moving. And what did we move like before we got stuck here? Could we move like that? And it's like, why not if not? Because all of the contained energy that we have in this consolidation is very similar to what we had to produce some of these major moves in the morning. That's very debatable. It is very debatable. I'm debating it. That's an argument right now where I'm like, okay, it is a different time of day. So you could say that maybe the open volatility had something to do with the bigger movements, sure. But it's also true that throughout the time of day that we're at right now, it's appropriate to be falling off in the ATR. This is the average size of the candlestick. You can see that at the beginning of the day, we hit upwards of 16 points, the average candlestick on the 1 minute. So for every bar on the 1 minute chart, 16 points was the average candle. So now it's fallen to 5. And you can see the difference. Like, look at how big these candles are over here and how small these candles are over here. Notice how much pullback there is into each candlestick over here. There's maybe not as much, right? Like, you can see that every candlestick still has some overlap to the other ones. Like, the one that follows it and the one that comes before it. Usually, most of them are overlapping. Now, wait a second here. It's like they're furious about overlapping here. There's no candle that goes by that's not significantly overlapped. Like, there is a difference. And I mean, we can, just by acknowledging that, we understand the environmental change. It's like, well, do we treat the market differently when it's moving slowly? Well, we should, because does it offer as much to the people associated with this movement as it did the people associated with the open and the bigger candles? Like, even when we were moving like crap, we were moving well, like it's kind of an interesting one. But when we were moving slowly, and what it was considered slow earlier was actually fast in comparison to now. Like, if we got this triangle again, oh my goodness, I remember saying that earlier. Let's take a look. I completely forgot about this triangle actually. And I think that okay, that angle that it used there, what is a triangle, okay? Do we see the triangle as just a simple shape that has to be pasted or copied over top of levels? But do we see it as what it's named as? A triangle, triple angle, three angles. Now, this one I'm drawing in here, am I supposed to start it at the top or the bottom? Because it doesn't matter. I don't draw it in. I'm not gonna say it doesn't matter. What it matters it matters in a different way. Because what it is a distance, and that's a fact. I don't try to treat it like it's an angle that we're going to be able to use and respond to in the future, but these ones, they are. They don't have to be used, obviously, and by this time over here, do you think it's easy to use either one of those levels? By this time over here, or better yet, tomorrow, how likely is it that we're going to use these levels? Well, first of all, look at how freaking far away they are. I mean, like, good luck with that, right? So it would be kind of crazy to have them part of our expectations. But while we're close to the triangle and while we're contained within the triangle, oh, are they ever the most important barriers? Because until they break, we're doing this. And I mean, how not if not? Because this is the pattern, this is the channel, and this is the way it channels with the pattern. Or we could argue that. I mean, I'm just like, we can. I would take it up, but I mean, it would it would be a waste of time on the other party's side, I think, because it's clear, and I don't try to bend it, right? I don't try to apply my strategy over top of what it's doing. I accept what it's doing, and I strategize around what it's doing. What is the best strategy for the environment becomes my question. Not what is your strategy and does it fit into every environment? And yeah. It reminds me of like you're like a and I try to keep it very positive, but it's like you're an explorer and your job is to traverse and explore a very dangerous terrain, like a jungle or something. Yeah, you have the skills to be able to do it and everything, but you have to be careful. You don't know what to expect every day, but you're going to expect more jungle. At the end of the day, you don't know what the jungle's going to bring you. You don't know if it's going to be good or bad or it's worth something or a drag. It could be raining on you. It could be terrible environment to be moving anywhere. Shouldn't have done anything that day you know it's like it could be the same here, where it's like, oh geez, you keep finding opportunities, you keep finding things that compel you to continue searching and exploring for new things, but yet you have environments that don't offer you things, and we can choose whether or not we want to go stand in the rain or not, right? At the end of the day, it's good to understand sometimes the crippling nature of how bad it can be for the people that are stuck in the mud. And if you're not stuck in the mud, it's your choice to be there. But just remember, the last time that you were stuck in the mud, you didn't have the opportunity to go sit in front of the computer or sit in front of the TV. You were stuck there until you fixed it. So what's the value of having understood that experience before you were stuck there? It's a huge thing to me because I'm like, well, yeah, sit through this consolidation, have it not impact you negatively, be bored with it, but see what the result is so that it's not a negative thing for you next time. Understand it. And I'm like, that it makes a lot of sense for me. That's the way that I see it. We're in the red zone, by the way, and it took forever. And anybody that literally caught the green zone to the red zone or the red zone to the green zone, undeniably, I did not draw this range today. It is being used like it was drawn today. I couldn't draw a better range myself if I was to put one in today, because this is the one that it respected. And the thing that's interesting is these people were around when it was made. And everything that they've ever sold off past this level since they started this consolidation, they bought back up. And what's funny is a lot of people have recycled their long positions from really, really, really good prices at the bottom to be in from around this area. And I'm just shaking my head. I'm like, it's not good to do that. and it's not good to learn that one the hard way either. But we can keep control in the short term by having an intraday core position and finding a hedge for that core position and maintaining control. But we can see that the market is truly moving in favor of those that really stick to the core idea of these are the targets, and unless you're in for them, you're doing something wrong. I'm like, whoa. I'm like, that's true though, because how not if not? And I'm like, everybody that wasn't positioned for those patterns has been undeniably in it's a harder way to do it. But you pick your hard, right? It's like it's I remember that quote. It's like it's hard to be broke and it's hard to get rich. It's like what are you gonna do? Are you gonna work hard to get the money that you deserve, or are you gonna stay in that tough environment and deal with the hardships of not having worked for what you deserve? And it's kind of interesting to me, because you know what I thought, like when everyone was studying everything, I studied like what I could do for myself. I studied personal development. Like if you look at my bookshelf, it's all books that can practically change my actions to be able to impact how I think and act when I'm presented with certain situations to be able to get the most beneficial result out of them. And you want to make it habitual. Like, some of them they even say you want to like write things out and repeat them to yourselves in the mirror every single day. And you think it's funny, but it's true to the point where you should be able to remember exactly what you're supposed to be doing. And if somebody ever asks you like what is your plan, you should be able to tell them. You should it should be very, very clear. And that's the that's the way it should be with every trade, because nobody deserves anything less. If you don't have that, then what are you? Confused, right? Or lucky if you're getting anything beneficial out of it if you don't intend for it. The best way to have it is to intend for it. With this triangle, we're going to come back to test it. We can already see the attitude of the triangle changing as we're breaking the confines. Now, you want to know what's funny? This line, it's broken. And it's true that it is broken, and we can never change that. Ever. So, it never has the value of breaking as an unbroken trend again. So we can't treat it the same way. Sure, it can test and stuff, but is it acting? Is that okay? Is a retest the same action as a break? No, 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 no. It's exactly the opposite, if anything. It's coming down to use it as a support after it was a resistance. And again, it's like, okay, that's a small move. Some people might find comfortability with it, and I'm like, no, 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 no. There's more risk associated than reward with that. Where are you going to put your stop if you short here? And it's like, okay, if it doesn't test this level and it carries on to an actual barrier like the 188 200, what do you think an appropriate level to get back to for the first initial response could be? Maybe the level that's left untested. And then we start to look at levels um like what do the past retests look like, and could we make something of similar size to those? And I'm like, well, right now we're not even the same size as one of the previous breakouts, and look at the size of that triangle versus the one we have now, and does it seem appropriate? I'm like, not really. I'm just putting that out there. So I'm like, this was a triangle, as a matter of fact, and it chose this as a spike, but then it was capable of producing a move this size. Like, where did that come from? Was that because of this consolidation? And what do you think this consolidation could do if this one did that? I mean, like, not just this. Like, come on. So, I mean, that's very logical the way that I see it. I'm like, we couldn't expect it to be such a little, thing. And I mean, like, sure, we ran into the first barrier. Is it interested in coming back to the triangle off of the first barrier? Because there wasn't much of one there. At the end of the day, like I say, it's something that I think should be allowed to happen. It's a little bit risky to try and find yourself part of a move like that. Because one, it's not a very big move. You have to take on a risk. If you're not taking on very much risk and you're not taking on very much reward either, I mean, what is it worth it? Or are you going to wait for something that's better? Because at the end of the day, the big risk right now is that regardless of us returning back to the triangle, I don't even care if we make this whole spike out of the bottom. This whole spike right here could be destined to come out of the top of the red zone. And does it matter that it happens from here? That would be the green zone too, ironically. Suspiciously particular. But I do see us continuing.
On the 1 minute, that's for sure.
Suspect on the 1 minute? Yeah. Yeah, we're screaming through these levels on the short term. It's definitely a controversial level right here. That blue and white line, um, it definitely was in conjunction with a retest here. But out of every consolidation, I swear I come out with a better mental understanding of how I can withstand the consolidations. Because I'm like, what? Did it not end like every other one did? I'm like, well, of course it did. And it doubled at the minimum, did it not? I'm like, well, until I say that that changes, it's going to be the way. And it's not like every consolidation is going to double, but, you know, how else do we leave them if we don't? You know, literally think about it. You know, if we make a consolidation and we don't double it, how do we leave the consolidation really? How is it not just a spike and wick out of the top of the consolidation? You know, how do we ever get into another trend again if it's not going to double the consolidation when it does end? Does it mean that we're infinitely going to respect the confines of that consolidation? Because if we don't, I mean, we're doomed to double. And I mean, like, what's the price of working our way through the consolidation? Well, being in for the doubling, or else it'll never double again and it'll never move again because it's stuck in that range forever. That's just the way it's going to be forever. You know, at the end of the day, if there's another way we can think about it, how is it that every other consolidation isn't doubled and every one that is set to be a consolidation in the future is set to double, or we're done with every single movement we've ever made, doomed to be set within the confines of one consolidation forever? And I'd love to see Wall Street make a bunch of money off of that. Just no more assets continuing in the history of mankind ever again. Everything stays stagnant at the same level. All of the 100 companies in the index just somehow make it so that we can retain one consolidation forever and never having doubled it again. I'm like, well, it's unbelievable to me, I think. You know, it's interesting. And you know what that guy, the interactive brokers guy that said, you know, they can't, the only thing they can't take from you is what you've learned, is he believes that there will be one crash that no stocks will return from, and when everything comes back it will be different stocks and different companies. And I thought that was a really interesting idea. So all of these people that are just holding infinitely, assuming that they will get great benefit in perpetuity off of the companies that they hold, they're naive, in my opinion. I think, and that's what that guy said. He's lived, and he's, you know, close to 90, I think now. So he might be 90, but yeah, definitely, definitely life in an way. But the uh, the the idea that he had, I thought was interesting because he definitely would be affected negatively by that idea, which I thought was interesting. But you know, it's hard to really affect that guy negatively anymore. I think. Like, what are you gonna do? He came from Hungary as a kid and didn't even speak, still can broken English, and in World War II, for crying out loud. So hard to take all that success away. But you know, he still is working. Still wants interactive brokers to become more profitable. He wants to be more successful, and I admire that 100%. He wants to see what he can become. You know, at the final stages, he wants to be the best that he can be, and I respect that. Up then sideways. Don't you find it interesting that the people that shorted that original consolidation never got a profit? These people here. They were only ever given the distance of the previous consolidation. Not even. The bulk of it, though. You see the bulk of it? Captured exactly within those confines. Don't be surprised when you see that precision translated over into the next consolidation. But to most people, because it wicked and spiked out of the top, they think that that's actual movement. They should draw trend lines on that. You know, it should be like actual things that they consider as important. The market didn't respect it though. So it's like, well, it did respect the confines of that node. Like a robot was analyzing the volume and decided that it should be the consolidation size for the next time. And it's like, you know what's funny? As you can see, there was a lot of people in here, a lot of noise and everything like that. And without them, the precision is that much easier to obtain. And anybody that was shorting in aspiration of getting this kind of movement back was met with nothing but losses. And they didn't even give them a profit. The B point hasn't been hit. We return back to the triangle, something is effectively a good hedge target profit or profit target if anybody did take any hedge trades from the spike at the high. It's a good condition candle back into the range. Like I said, we could do the same spike on the bottom of the triangle and still get through the red zone at the high of day. Contrary to popular belief, the more shocking and quick and fast they make this drop, the more people think that they're missing something. So you know what happens is they short it, and they short it late, but they don't care because they don't want to miss it. And what happens is they put their buy orders right here, and guess who's targeting those buy orders because nobody wants to buy up there. They convince people to short it, make a bearish pattern, make a head and shoulders. I dare them, because people will short it. And where are they going to put their stop? Their stop is going to be a buy order at the high of day. And if we trigger 100 people to do that and put their buy orders at the high of day, don't be surprised if we go up when we hit high of day. And if you can see, it's just a big chunk of volume as soon as we get through the high. Literally, it's like all those people getting stopped out at once, fueling the push of all the assets acquired by the institutions overnight where nobody could trade it. Oh, they say sorry. We reversed it at 2 o'clock in the morning, which is hard for West Coast people to be up for, hard for East Coast people to be up for. It's a tough time to be awake. 2 o'clock in the morning Eastern time is not good for America. And that's when they picked the best time to start the run so that all the Americans can see when it runs up into the beginning of the day, they start shorting it and they fuel the price higher by trying to fight against it. Because when they short it and they exit their position, like I said, they become buyers. They try to buy lower, but instead when they're not given the opportunity, they have to buy higher to exit their position, or else they're left with infinite loss potential. Because it could go to $1 billion, or the stock could go to like 1,000,000 points, or the index if it's in theory. And I mean that short trade has exposure for infinite loss potential. Whereas if you're long, it can only go to 0. And you can only lose 100% of your money. You can go well past 100 when you're short. Now, if you trade crappy derivatives that are like don't give you flexibility, and let's say for instance, if you're short on a stock and the market closes and it jumps up to 1,000,000 points after, your life is ruined. And I'm like, well, that's crazy financially. And I'm like, well, not having the information about securities that you can hold overnight safely, or tools that you can use to prevent that from happening, people jump all over those securities because I think those securities, they're created to benefit the people that sell them. And who trades them? The people that don't have enough money to trade real securities, like make real positions. So they like the allure of putting a little bit of money in to be able to make a lot. I'm like, well, they wonder why they're picked on. Because they want to cut corners quickly, and market doesn't respect that. But I've noticed, like, if you do your homework and if you stick to your rules, if you do exactly the way that it respects, then the market will continuously provide those rewards as you continuously change and adapt with what the market expects you to be, positioning yourself for the appropriate moves of the market that day because you understand them and you're not guessing, you're not hoping, you're not waiting for other people to provide you information, you're not waiting for news, you're not waiting for earnings, you're not waiting for the jobs report like the other day. And like, gee, none of that stuff matters unless you understand exactly what it's supposed to be doing, you know? And just remember that the hedge funds that have exposure to almost every single company that there is worth having exposure to, they have control in that company, in those companies. Do not think that they get the information before we do. When they have the ability to fire the CEO because they have so many shares, they get reports from the CEO. They're the owners that they answer to. When they have preferred shares, their word goes a lot farther. They could they could do horrible things to the company and the people that work there. So it's very, very like it's not a nice thing, I don't think. I think they're a rough business, but you know, way we make it as humans. And we gotta work with it because we ain't changing it, right? You know, like I ain't changing it. I would love to make it better, but I mean, it's just like good luck with that. You'll be stepping on toes with people that are just so ruthless, and you don't want to deal. I don't want to deal with them. You know, I'd much rather just deal with the market. So much easier. You know what I find interesting about this is it's incredibly similar to what we did here. Like, let's talk about this for a second. Down, and then it went into a consolidation, and then it went up, and then into a consolidation, and then it went down. The point is it did this. It went consolidation, and it went down into itself. But I noticed that the beginning part is also there. Like, if I take this over, or you know what, I'll leave it there for now. And if I start this one here, okay, sure, I drew a circle on this part here. Well, big deal. But essentially, circle number 1 goes down to circle number 2. 1 goes down to circle number 2, and then it pops up to be above circle number 1. Make circle number 3, and it's above circle number 1, above circle number 1. And then we come down to test circle number 2. At what point is there something different about what we're doing now to what we were doing then? You know, it's like, if there is, maybe I'm missing it, but as far as I can see, all of the components are the same, yet we do it smaller at a different level. So it's meant to me, that tells me that this is meant to be understood. Because unless you understood it at another level, bigger version, different size, different levels, the only way that you could find a similarity is if you understood that that was the sequence it should be moving while it's doing that. And if you can hit the nail on the head with, hey, this sequence is actually happening right now, maybe we should let it finish before expecting something else. Huge. Huge. Reminds me of here. Where every day I have one over this. And we can see that, you know, in this sequence here, we have a method of movement. This is how we went down while we were doing that downwards movement, the red movement. That's how it worked. And when we were going up, this is the green movement, and that's how it works. So we can see the downwards movement. Place it over top. You can do that like that. It's exactly like that. You know, that's the movements. And then we go over here and we can take this upwards movement. We can see that's exactly the same right there. Now, we understand that that's the case with that movement, right? So we understand that's the case. This movement right here is exactly the same as the red movement, right? This movement right here is exactly the same as the green movement, right? So if we go back and control these back into place here, we can go ahead and see that just after it did the same thing with the same movement, and then another movement right here with exactly the same, but people will not understand this because they are not digging deep enough and they don't care enough, so they won't find that. But how on earth can you tell me that that's not something that's relevant? That the market didn't demand that we understood everything that it just did because it did it again. And what's the difference from today and that day? When we've done everything so clear in the morning and we sit here wondering what it's doing, yet it's doing the same freaking thing. And I mean, like, sometimes you just gotta zoom out and look. I mean, like, okay, that's the major thing. Like, I just did that, and we can see, we can all learn from that, and it's huge because, like, just stepping back and taking a look at what it's done and seeing what it's doing now. If you find any kind of confusion or anything at all, maybe it's part of a process that otherwise has an end. And until that process meets an end, why would we feel dread about waiting for it? Because it's part of a process. And I mean, that's how I look at it in a positive light. Because I mean, like, oh, you know, wouldn't make sense to quit before the pattern ended, would it? Well, only because people don't recognize the pattern do they feel the need to quit, because they don't recognize any kind of value in being exposed to the current movements. They don't feel the need to wait for the results. Like it's not going to move for them, or like they don't have faith that it will move for them. But those that have faith that it will continue moving for them, why would you end your day early? Or why wouldn't you take advantage of every single move that the market gave you? It's like, that's where I'm coming from. It's like, literally, why not take advantage of what it's made clear? Because it wants us to to recognize the fact that it's doing the same thing over and over again in different places, smaller and different moves. But unless you understood the moves as they were supposed to be broken down, if you looked at for moves that were supposed to be this big, it didn't give them to you. And it's like, for a lot of people, the moves that it made in here were not big enough, but it was part of showing us that it wanted to make this entire sequence again later in the day. And that entire sequence, once it finishes, it's over. Simply put, and it does have an end. And I mean, we can justify the time left in this one, I think, to see what comes at the end. Like, what are we gonna do at the tip of the triangle becomes a question. Do we have enough energy to make the spike out of the other side to meet the green zone? And in the event that we meet the green zone, are we interested in spiking into it as far as we were the red zone? And if not, then why wouldn't it want to be equal? And if not, then what if we didn't get to the B point again? Like, well, we didn't get to the 188,200, and instead of actually responding to the fibs properly, like it showed everyone, like it had the audacity to show everyone that the 61 was working. Now we can't even get to the 188. We've never even hit the B point, so it's playing some games there for sure. Look what it just did to the 161 that was supposed to hold before. After having met the green zone, it had enough energy to get through the red zone to actually make a spike larger than any other spike we've ever seen in the green zone. Like, where did that come from? Here? That's an interesting distance on the bottom, separated by that distance on the top. It's not like we haven't seen that before. It makes me look for it now in other places. Well, see that it's tried to make it twice there almost. But again, if it's something that it's going to show us so many times that I can find it in multiple different places, it's a matter of whether or not we choose to accept it or neglect it. If it's new to us, well, why don't we learn about it, understand it? Like, what are the confines of it? What is the distances of it? What are the angles of it? What is the effect on the volume? What is the effect on the environment? Or are we just going to be like, I don't know this pattern. It's not something that I know from the 1930s. Let's not trade it. Or it's not on Google, I don't understand it. And I mean, like, well, like I showed you with this range before, it's a little complex. Sure, it has a few more moves than anybody's willing to sit there through, but damn, if you ever understand this is it's supposed to be moving, can you take advantage of it? And what's funny is we saw it in reverse as well. Yeah, because the thing is, it was new. I wanted to familiarize myself with it as much as possible. I flipped it upside down and we saw it later in the day somewhere else. But at the end of the day, and we could see it again in the future, and the more we familiarize ourselves with something it chose to do, the more or the less of a danger it can become for us. Because if we recognize that it's part of a process that we're familiar with, we can let it do that process, maybe even find ourselves a part of it, no? Why not if not? That's the question. And I'm like, that's and this right here, I know I haven't really talked about 5-wave moves a lot today, but is it not true that it goes down once and then up once and then down again and then up again and then down? That's 5 waves altogether. Go 1, 2, 4, and 5. Where I can't help but notice that the counter trend moves that it has had have been incredibly similar. Funny enough, the spike out of the bottom will make it look kind of weird, but it does have this here in a weird way, like it tried. Obstructed by the public, perhaps, that are interested in trading in the middle of the triangle, but not, and also in the middle of an old range. You know, they've made it so everybody that's been comfortable in this area, the majority of the people that have traded since this was a consolidation, have been so out of line with the way it used to be here that they felt the need to trade right in the middle of it. The POC, most of the people found this the best point to trade. That's not even a good profit target. Like it's not the best profit target for people that are shorting. It's not the best profit target for people that are long. It's not the best price to enter ever because there's always been a better price. So what the hell are they doing there? Very interesting. But they're just like just herded around like cattle, and basically these are the confines that they've been placed in, and anyone that finds it necessary to trade in here has become part of the node. And I mean, not to say that there's, you know, not good trades within this area, but the expectations that it gives anything more than this area is tough. And like I said before, I'm like, hey, when we drag our stops anywhere in between the green zone and red zone, what are the odds that you survive when it gyrates from one side to the next? Isn't it easier to just have held from below? Because any time that it comes down to the green zone, you don't have to take a risk. You don't have to maybe get stopped out here. You don't have to maybe get stopped out here because you're already in. And you have the integrity to hold it. You have the integrity to withstand a pullback to the green zone because you know that's what it does when it gets into this. And we must allow it to do this. And as far as I can see, it's using the range remarkably well. And what's funny is we knew that it was a range when it stopped moving. It didn't have to show us that it was moving back and forth between this area so that now we can put a green zone in and now we can put a red zone in like most individuals will be doing. And don't be surprised if it doesn't work as well for them now because it's made so clear. It's been made so clear. It worked well for the people that already had the range, that demanded it was a range. But now that it's been made clear, people struggle with it. I don't have as much faith that it's going to continue using this range. I think we're closer to leaving the range than being in it. And everybody's just discovering it. Everybody's just discovering the triangle. They find that the triangle is something that compels them to enter. Well, clearly, because all of these people find value being in at this terrible spot. I'm like, why is now the time to buy and not over here? Why is the time to buy at not any other time of the day, but at the high of day? Really tough. I mean, like if I had to write a report on buying from there, like I would expect a really rough conversation with the people that hold me accountable for managing their money if they saw me making a trade in there. I'm like, well, it's like tough. It's not for us. This is for the people that settle for less. And you know, they're given that more. Like there's more crap out there than there is opportunities. You know, there's more pitfalls and traps and things that'll hurt you than things that'll help you. And like at the end of the day, how many times do we make the best price that offers the most movement? And how many times do we offer a crappy price that comes back and attacks the people that are associated with the range? And where can we say it attacks more people? At the spot that they literally find the most value in trading. They literally make this line, doesn't matter if you're long or short, they come back to make you into a loser so many times. that if you trade at that level, it doesn't matter if you're long or short, they've come back over you so many times to make you so uncomfortable that you must realize that it's not the best place to trade, and that there's always been better places that aren't threatened so much. But anybody that chooses to buy above the green zone has been undeniably threatened so many times. Anybody that chooses to short beneath the red zone is undeniably threatened so many times. I was just like, that's
Well,
tough.
John, if you draw a trend line from the bottom, that's basically where it came very close to.
Okay, let's take a look.
From the very, very bottom. It's just slightly right of yours, actually.
Like very, very, very bottom, you say?
Yeah, like that one there. Yeah, those two.
Like these two?
The bottom goes to 950. Yeah, Thursday, which is today. Yeah, from there.
Oh, okay, okay, okay. Yeah, that
Yeah,
one.
strangely enough.
Yours is different.
Yeah, it's a little bit more than yours.
Jeez.
But again, I'm capital.com and you're 8cap.
Yeah, yeah.
I mean, there's no way in hell I'd take a long up there, but whatever.
Yeah, yeah. Especially,
Yeah, let them feast on it.
yeah, exactly, right? And I'm
Getting
like,
eaten by the lions anyway.
yeah, right.
It's crazy when you think about it, really. It's just stupid, but
It is. It is.
shit happens.
It is. That's the price of people that don't look at the chart. I mean, where do you think they're going to land? It's like they're going to land right in the middle here because it spends so much time here that they're so unlikely to end up at one of the best prices by just buying randomly that most of the
Just
people
taking a risk when
end up in
especially
there.
when it's so high, but the ATR so low. It didn't make any sense. Like, it's just stupid.
Yeah, the ATR is dying slowly. The average size of the candle. It's head
That'd be
no.
a blue line if you take it from the high of 1305, and you take a blue line down from there. Oh yeah. Um, and the other touch point would be at around 1403.
Sorry.
Yeah.
Okay, let me look at that one. That would just be a regular yellow line, I think. Like, cause this was the channel here,
Yeah, for some particular reason, yeah.
and it's
That
like
kind
it
of
took this and put it here. I totally see that now. That's a really interesting trend line. I think it matters a lot, actually. It's good. You can see it respects it on the bottom. It respects it on the top. It has the same move out of the bottom that it had out of the top, and the move that it has in the middle is also the same size as in
There was
between.
something to that line. I knew there was.
Yep, yep. I love it when it goes the same distance on the inside like that, and then it has the same distance on the top. Like it reminds me of what we did yesterday, except it was on like a little bit of an angle, right here. Same concept. We had the spike out of the bottom, and then it shows that that was the distance of the middle all the way down, and it also produced it out of the other side. Now that was a terribly bearish pattern, so it does create an uptrend, and I mean it will be doing that with this well, but
I feel like the RSI too on the 1 minute was very close to the green on the bottom. It was an extreme sort of thing.
take a look here. Oh yeah, yeah, but still,
Still,
there's great gap between both of them,
there
and
is, there
and
is,
it
yeah.
and it and it's like, well, does it end with the
Yeah, but the 15 is slowly coming down. Look at it.
I was gonna
It's
say, does it end
through
with that?
stages here, it's coming down.
Yeah, and that's how it ends, by coming down, I suppose.
Uh-huh.
It'll be
Yeah.
a bearish divergence, effectively.
I think it's going to move slower because the ATR is so low. Give it more time to move down, maybe. Did have a big spike on the top. I mean,
Yeah. Yeah, that big spike on the top could be replicated at the bottom. I was thinking about, like, it being even on both sides of the triangle. Sorry. That back there. The spike out of the top of this triangle, it's suspicious to me that it would get the green zone. It used to be able to get the B point, but that's not a thing anymore. It's just being extra slow for the people of the POC. And like this one before, it reminds me of like a lot of like I was explaining before, a lot of people find that it adds to the collective of lines on the screen, and they think they have to comprehend the lines that aren't even close to the price. I mean, at the end of the day, they're representative of how it has moved in the past. Taking them off is not actually something that, if we could, still have clarity and have information, it's an it's a benefit rather than a disadvantage. And that's why I think color coding is really important, because every single trend line was the same color, it would look like that. And because most people, when they draw in a lot of trend lines and they're all the same color, it does look like a big mess because they don't know what each trend line means. They don't even think that trend lines have different meaning. They don't think that, anything, but like they just think it's a trend line, and it's supposed to just, I guess it's supposed to be their friend. I don't know what they think, but at the end of the day, it's incorrect. So I just, and that would bother me. I don't like filling in grade 3 math tests when I know I'm going to be incorrect. It's stressful because I know I'm going to have to deal with the repercussions of having failed. And I had to deal with that a lot in school. So, but it was easier for me to deal with that than it was for me to actually waste the time learning some useless information that I had no practical value for. And that still to this day I will not employ any of that kind of information. And I'm like, the people that do like math in their profession, you know they're used for a reason. And this is a different kind of math. It's respective to the distances, portions, and patterns, and geometry, and so on. And yeah, it's relative in this industry, but um it's not like I would cut my own windows, you know so I definitely could kind of do that, right? So it's this is like a falling wedge. We haven't really seen much of these lately. Typically they're notorious for falling out of the bottom of the wedge when they're not supposed to. And this affects more people negatively than it does positively, because if I look up the pattern falling wedge, it shows that it's not supposed to do what it's doing now. It's supposed to break the yellow line instead of this one. This line right here, I typically make it ironically a blue line, but not because it was placed on these points, but only because it would be placed on the bottom of the support of the falling wedge. And what's funny is this line was already used from here. So I'm indifferent about that, because it wasn't originally a blue line. It was originally a yellow one, but now it's being used as a blue line. But it's only good if we end up getting below it, because I'll tell you one thing. There's no way that in the event that we get below that line, that we do not get back to it. So, doesn't have to get back to it instantly, but you have to know from where and when. But you know what the target is even before it happens. A lot of people don't even know that. They don't know the where, they don't know the when, they don't know the target. They get into Tesla because somebody says to get into Tesla, then they find out how it's affecting them, and when it's affected them enough to make them feel cozy inside and they've got enough profit, then they sell it. Or because they're scared from some news article, but not because they understand the technicals on the chart or because they understand what is going to happen in the future. Because you want to know what it's like, to me, honestly, is it's like there's one way to play a game, right? And there's one way to do the math of that game, right? And the opponent, right, has you thinking that, hey, create a way to do this math. Come up with it yourself and try and implement it significantly, consistently, on a regular basis on your own study. Meanwhile, there is one way to do it to see it always clear. And the person that tries and watches everyone around them fail because they don't understand the math, they will believe it's unbelievable that the math even exists. And even when presented with it, they will believe it's unbelievable because their experiences are so negative in the industry that they can't even see them being consistent. They don't even believe it, yet they continue. I mean, what is that? That's insane, in my opinion. And I think that the only thing that would make somebody continue is because it's going to have an everlasting positive impact on your ability to continue trading. Now let's go over. This pattern just failed on command, did it not? Let's take a look at what Google has to say about this pattern. Google has to say, so we can see here, like this is a triangle and it's effectively going down like that. And this is, oops, the triangle is effectively going down like that. Triangle effectively going down like that. Down like that. You can see that's represented many times over in a lot of these other little areas there. The triangle's going down, right? Under any circumstances, page 2, do we see it going through the bottom? This is facing up, so that's not the same pattern. Falling wedge is supposed to be going down with 2 lines facing down, just like this, right? Now, what did I say about it coming back to that level? Is it not true that it came back to that level? At the end of the day, if you record if you rewind the recording, you will see that effectively we can expect a spike out of these patterns, contrary to what's presented on Google. We can go to the next page and find that it continues to only break out. And why is it the case that anybody that was to buy an expectation of this working out for them was met with a big spike? Hopefully it didn't take their position from them, right? Because that's tough.
Hit the bottom of the 1 minute chart, and also was the bottom for me in that between yellow and red volume node.
Yeah, yeah. Or,
That's weird. On my chart, see how you got your trend line going down, and it's cutting through. Mine's that's where it got resistance from. Oh, you're a little deeper in on that second one. The candle up top.
oh, yeah, yeah,
Yep.
yeah.
There. Yep.
You put it on the other high.
Yep.
Yeah, that's fine.
Yeah, we're the same now. As far as trend lines go.
And is it not true that we made the spike out of the bottom of the triangle? Not exactly the same, but it is the whole point. The whole point is that we make it even on both sides, a spike on both sides. Doesn't have to be exactly the same distance on both sides, but it is even in the sense that both are spikes and both are on one side and the other. And it's good enough for me. And as I explained, anybody that drags their stop inside of the range, like if you have a long trade from anywhere and you put your stop above the green zone, well, if the green zone is to ever be used as support again, you will lose your long trade at the point where other people are buying. So it really doesn't make any sense. And because it's like basically putting a sell order inside of a green zone, and it's like it doesn't matter if you're long or if you're in nothing, it's just not a good idea. And if it means that the entire trade is going to be a loss in the event that you cannot keep your stop outside of the green zone, you should consider the risk of holding it. And that's with every trade, not just with this one, but it doesn't come overnight. A lot of people think, quickly, because you want to see the value and in the money now and everything like that. But what's the price of doing it wrong? Not being able to do it right, making it take twice as long, making it twice as stressful, making it a hardship when it doesn't have to be. Because nobody chooses to become a doctor before 10 years because of the hardships that it would be, and it wouldn't be fair. I mean, we have the choice to work as hard as the doctor and to get as much out of it as they do, but we don't. At the end of the day, I could go on about the same things every single day for this week, and you can think that this is going to be the way that it's going to be this week, and then next month I say everything from this week comes to the change. And we do things completely differently because this is the way the market moves now and the way that we need to move now. And you might not even see it yet because it's the way that I expect it to move. You've never seen it before, and I've never seen it before, but it's the way that we have to acknowledge the market's movements. Like what is the pattern that we were seeing a few days ago where it pulls back to the ducks and then ends up not doing it? It's a variant of what we've seen at the best points before when they seized control before. But I can tell when they're playing the game, and they don't quit lightly, and they don't. It's not like they play with without any recognition of any level. Like while it consolidates in these areas, they're building awareness of every single level that they've been at, every single level we've been to, and every single consolidation that it's had, so they understand absolutely every risk that can come with that consolidation and what it means to leave it. Is it not true that when we finished this consolidation, we moved out by this much and then decided to come back by this much? And is it not true that we did the same thing? So, like I said, if anyone puts a stop inside of the range, God forbid it's used, and look at it being used. I mean, we want to make sure that the best things that we can be attracted to are being in from the extremes. Well, guess what? It spends the least amount of time at the extremes. Like if I take this bar right here and I show you the best prices of this range, what we're looking like. How many times has it been the best price in the green zone? How many times has it been the best price in the red zone? And how much time does it spend inside? 80%? Look at all the volume inside of that node right there. Look at how much volume it spends outside of the node. Look at how many people are associated with the best places to trade. It's atrocious, and it's so easy for Wall Street. So easy. Everybody will settle for less because they're working, because it doesn't matter, because they'll just recoup whatever they lost by their job and stuff. They don't take it seriously. It's a side gig. But when you do, you can see that it offers more potential than pretty much, I don't know another industry that can offer more potential than doing this right. It's very, very interesting.
It's like just spanning the range now. Mine, anyways. It's just hit the top of the red zone volume.
Yep. Yeah, the falling wedge is now playing out after having made it difficult for the people associated with it. And now I think we're quote unquote dealing with the traders, or sorry, the chasers that try to trade after the yellow break. Anybody that tries to trade after the yellow break is considered a chaser because they're late in the trend. And, effectively anybody that found value before the trend break is usually allowed to keep their position. And it's anybody that was late that gets overlapped and the market shows them that they have to endure a loss or, some stress, or it doesn't respect their position as it comes down to show them that this is the way the market should be moving as it follows the rules yet again. Just to come down and make these people into a loser yet again. The people that traded at the most popular spot doesn't like them. And it doesn't matter because everybody's doing it. Should we do it? Just because it dishes out crap and everyone's eating it doesn't mean you should too. And the everyone's eating it part is added in there because it's true. Look at them eat it up. I'm like, God damn, man. Like, if you want to settle for results that they have, then you be like them, but I'm not going to do that. And I don't expect any of you to as well, because it's terrible. It's not a fun spot. Imagine you were in from the beginning of that red line, and just imagine what the stress would be to still be waiting. Doesn't matter if you're short or you're long. You're waiting for it to go up to the red zone, you're waiting for it to go down through the green zone, and it's never been the best price, and you're just wondering, what are you doing at this point, you know? And I'm like, yeah, I could see that. Not to say that, anybody's born with the information that that red line's wrong, or that they wouldn't naturally be convinced themselves into doing it, because I tell you, because most of the people are doing it, you could say it's the most humane thing to do. The people with the training find value in other places. That's why they're there for so little, because the people with all of the money grab it up so quickly, and they don't choose to buy it in these places because they don't move it away from these places because they don't like to trade in these places. And doesn't mean we'll never leave, but it means that until all of the other people have, we will stay here. And we can count on the fact that an individual sitting at home not understanding what they're doing can only take so much of this, and we can count on it. The institutions count on it. Yeah. But so long as you allow to pull back to the people that did not buy at the right spot, and people that did buy late in the trend, we came back just for them, exactly as we should, because they have complete control. They're saying, hey, when I fill out my report at the end of the day, we'll say we did come back for them. We did make sure that they were out of the way. We didn't cut any corners. We did follow the rules, and we did get every target. We did retain exposure through the entirety of the consolidation, and we did contain everyone where they should be, growing the node, growing our ability to make this into a spot that could otherwise be a barrier in the future. When they push it on after hours volume, and this is a huge node, it's like very, very difficult for them to get back through nodes like this with the after hours volume. And when people already see that it's high throughout the day, a lot of novices don't think that, they're thinking buy low, sell high, right? So they won't be caught buying high. Yet today, if you tried to go against the trend at any given time, it's been a limited amount of time that you've been able to be profitable before you must have taken profit on that trade, or you've accepted a loss. And if not, then how not though? Like, really? So it's good to understand, everybody's perspective. Like, I look at the people that are getting absolutely screwed and I see why. I look at the people that have complete control and I see why they value it. And I see how much control they have. Not just the small patterns, not just the big patterns. Remember, they're long on all those assets. They have the long-term book. They did Benjamin Graham. They're in dollar cost averaging. They're adding money every single month to their hedge fund. They're still taking on new clients and buying more assets. But every single time there's a risk. They don't sell and fold under the pressure of their profit, giving their exposure up to the next hedge fund. No, they won't be caught dead doing that. They hedge it and they keep their exposure. They grow the company. They become better. They take on. They say, "Yeah, there's a risk. We'll bring it on. I know what to do when there's a risk. I don't give up my exposure and accept the middle from somebody else that decides it." And I'm like, "Well, I see this. I see this. I see this." And I'm like, you know what? 80% of the hedge funds aren't doing that. They're just as much of a victim as the individuals, I think. The top tier hedge funds that call all the shots. And they're syndicates, so we don't even know their names. That's the way it's going to be. That's the way it. Honestly, I couldn't see them doing it better, so it would be kind of, in line with their characteristics. Like, you see what they do to the people every single day. Don't put it past them that they're covering up a lot of things that shouldn't be, that are unethical and completely should be not, or should be illegal. But nobody knows they're happening, so nobody can make them illegal. And it's like, oh, that would be perfect, wouldn't it? Well, do you think that would be the way for the people that have all the money? Well, I wouldn't put it past them, ladies and gentlemen, because they're comfortable watching everyone else suffer in the name of their own gains. And it's always been like that. It's human. I think wrong to be like that. And given the opportunity to be in their position, I would fear my conversation with God, literally. Not that I'm religious, but it is that way. Like everything I do, it's going to be held accountable at the end of my life. Every thought that I've had, every action that I've taken. I live my life like it is that way, even if it's not true. It keeps me positive, keeps me focused, keeps me a good person, and that's the way that I take out of that. But I believe in, in that, and that's it. That's as far as it goes. Like I believe in punishing vice and rewarding virtue, basically. This is the extreme of the range. Everything past this point has been wicks and spikes. Anybody that's acquired anything from the green zone should be able to profit off of this move to where we are now, because it is undeniably at risk of returning back to the green zone. Doesn't mean it has to, but if you haven't taken off enough profit and made it profitable by this point, it's a serious risk to any profit that you do have. So it's good to make sure you pay yourself, and then you can keep your stop outside the range. Having paid yourself by moving from one side to the next of any node, it should afford you a stop at the other side of the range. Like if you've taken 3 in and you manage to take 2 out here, or even 1 out along the way and 1 off here, you can afford to keep your stop as low as the bottom of the range. Preferably outside of the green zone, because hey, if you ever have your stop above a B point, I mean, how? Like, write me a report on how that's safe. I wouldn't be able to do it. I mean, it's literally contained within a bearish target. I mean, anywhere that you put your stop inside of the middle of this range, it's likely to get hit. So what's the value of positioning yourself from the middle of the range? Well, all these people seem to find value in it, but look at what they're comfortable with. They haven't been offered anything but a move the size of the range since we've been associated with it. The market hasn't given them any kind of beautiful movement that they've been seeing that they thought that they were going to get. Tell me right now that the people in this area weren't expecting this kind of movement. I think they were. Honestly, I do think they were. But the people that had this red zone and green zone could see clearly that yeah, don't be surprised if the majority of the volumes contained right in the middle of this giant area where yeah, this is the best area to trade, and yeah, this is the best area to trade. Don't be surprised if it's dried up when it gets there. And now that we've used this range more than more than any other range today, I'm thinking we're closer to leaving it than to assuming the red zone is going to bring us to the green zone and the green zone is going to bring us to the red zone. I do not think that that's going to be the case for many more moves. So I think assuming that it's going to come back down is tough, and you know trying to keep exposure from one side to the next of the range is going to be put to the test. I think that hedges are at risk, and you'd be lucky to get one more move, one side to the next in the range before leaving it. Um, I mean, look at the time. We've got. I think it's necessary to draw on a visual representation of the imbalance because it's the last report of the day that can impact volatility, and of course, all that hard work can be put to the test on this minute. So, how can we prepare ourselves to make sure that it's not a risk for us and our positions, no matter where you are? And if you don't consider that, do you think it could be a danger that could turn into a surprise? And dangers that are surprises are worse than dangers that aren't surprises, eh? It's like at least you can face it head on and kind of try to do something about it. But the ones that are surprises, man, you don't want those ones. They're never as nice, especially if you're having a good day and all of a sudden you're surprised with this terrible thing. It's like, oh, geez, you don't want that. So try to avoid it by being prepared, right? And it's like if we could see something coming, well, obviously, we have the ability to be aware of it and kind of dodge it or whatever we need to do to or eliminate it or protect ourselves, put up our defenses. How can you defend a position that you have? Well, you can take your profit, you can get out completely if you wanted to. That's option one. That's the most typical. I call it the easy way out. That's the number one. It's called the easy way out. And then the other option is you could drag your stop up. So above your average price. So there's no way that whatever you choose to hold can become a loss. Like if you bought in here and you put your stop loss here, well, you're guaranteed whatever profit this is, this little bit right here, you're going to have that. And it can't take that from you, right? So you're safe, by this much at least. But you can't afford for it to use the range anymore. God forbid it uses the range one more time or has a deep pullback to the same spot that it did before. It'll cost you your position at the best price of the range. So is this the right option for you? Could be sometimes. It is an option after all. Third option, you can hedge it. Not always is it a good idea, but it is an option, like the last two. After all, hedging it is an option that allows you to keep your entire position. You don't have to take any off on this red zone, Where most people, they've taken off so much of their position size because they're so worried about it coming back again that they can't hold anything through the end of it. And they have nothing to sell by the time it gets up here because they've taken off all their contracts in the red zone because they're scared it's going to continue using the range, which is a valid fear. Because how many times does it use the range in a quick glance? It's like 5 or something. It's like, yeah, a lot. I mean, what if it wants to make 7? Is it going to look much different to somebody just sitting down at the computer? Nah, it's going to look like
What's
a
really
range.
relevant today is 3 drives down. 3 drives down starting at 1320, and another 3 drives down starting at 1436.
That's interesting. As soon as you said that, I noticed different ones to ones that you're mentioning, but here,
Yeah, that's
and
another
here,
example. Yeah,
and
yeah,
here, and
yep,
here.
yep,
It's
yep.
huge. It's huge. Even
Very
even
particular.
even these ones in here, it was technically 1, 2, and 3,
Yeah,
and
you can say that. Yeah.
yeah, and why I like it though is because it acknowledged the first of the 3, like immediately. It was like bang, and it wanted to go again and again and hit that level. And it was like it wanted to show everyone that unless you were taking the third drive to the first, it was like it didn't want you in. It was like you must know that this is the target, and it's going to make it very difficult for anybody that's not taking profit at that first initial point. And I could see that in there.
Again, as soon as the 1 minute came down to hit the green line on the RSI, you're good for points today. All 3 major occasions. That's why it pays to be in here early, I guess, so you can get in earlier.
Yep, yep,
It's worth more points, yeah.
yep. It will be like that, and then it'll change. Sometimes it's the end of the day, sometimes the beginning of the day, and
Yeah, for sure. But we're never disappointed really by
the
usually by
day.
the morning.
Yeah.
Like the morning, the fibs are crisp, the moves are points, the ATR's up.
Yep. Yep. Yep.
3 big combos there.
It is usually the case. Yeah. There's been some times around this 16,000 level where it's freaking brutal, but
Yeah.
other than that, I mean, here we are again. Like this is the range that marks the 16,000 area. It's where it doesn't matter what kind of index you're looking at, 16,000 is probably going to be in that range.
Could
And
still be a head and shoulders, eh?
oh yeah, yep. And what have they been good for? I'm like, that would be a spike out of the bottom of the range. And I'm like, this spike would get the B point. A bit more maybe. And maybe if I took that little bit of a wick off, it would get the B point anyways. But I'm like, well, if it tried to play that out, it could go into a head and shoulders to an inverse head and shoulders and be the same pattern in reverse and end up going up, doing this move out of here after. Yeah, I wouldn't mind that, because it would throw a lot of people off. It would use the range as a triangle. Questioning that actually, because if it made a triangle here, this movement out of the bottom could be also construed as a necessity to get out of the other side. I More usage of the range perhaps we could expect. And I mean, like, it still hasn't hit the 188 200. It still hasn't made it even on spikes at the top and the bottom. I there's a chance that they just advance it with that by the end of the day, just once they push everyone out of the way again. That's been a trend lately, and I can see that, this range, it's been acknowledged, I would say enough, and precisely enough too. It's not like we really have to define the edges much more than we have. It's been really good about using confines. I mean, we are at the tip of our old triangle here. Like, undoubtedly, forgetting about this one, a we do have a tip of a triangle right here, and it's tried to be pretty even around it. You know, because it was true that after we finished the spike out here, like we we did a spike on both sides, and they both related to coming back to the tip of that triangle. And it just makes me think, you know, and sometimes when we see these triangles, it's like, you know, God forbid we prevent it from being able to do this, or if we position ourselves where in the event that it does this, we could be presented with a loss. You know what's funny is everybody that traded at that POC, doesn't matter if they were long or short in there, they literally came up and then took it all the way back. You know, just because they wanted to overlap anybody that was short and long in that area. And I mean, like that's a tough kind of movement for people that are here, like an emotional roller coaster. But you can never say that that's the best price. Why don't we value here? And at that point, I made it clear that coming back to the bottom of the triangle was the play, not trying to buy it because we do spike out of the bottom. And that spike out of the bottom, like I said, doesn't show up on Google. Doesn't matter if it happens 40 times in a row. Because people have a negative experience with the way that they see falling wedges, they don't draw them on the internet. Their negative experience just goes into an oblivion, and all we're left with is this is how opportunities look like on the internet. Find opportunities, find opportunities. Don't worry about the danger. Just keep focused on all opportunities. I'm like, well, hold on. What about when those opportunities backfire and nobody writes about them because they're embarrassed? And I'm like, well, it's very human. Very human. And then it's like, you know, school teaches us to be embarrassed about our mistakes, where, you know, you look at the things that have required the most persistence and difficulty, and you know the amount the determination to continue despite failures. That's called perseverance, and it's valuable to any successful person that I know. So, and like even as an example, Tesla, you know, somebody interviewed him and asked him like, why do you keep going after all the failures you've had? And I'm like, do you see the failures that he has or the successes? Because what he's left with are not people talking about how many times he's failed, whether you like him or not. I mean, he's done a lot. And I would say he's for the amount of failures that he has, like the result is that he succeeded, and he didn't stop until he did. And I was like, well, maybe on some things, but they weren't worth his energy. He found something better to succeed at. And it could be like that with this range. You don't have to settle for that. You know, it could be better. And even when it finishes, even if it does double a small range, is it even worth it at that point? I mean, sometimes it's not. Sometimes it's worth being in for the doubling of this range. But if you take all your energy and waste it on this one, don't be surprised if you don't have anything to do with the actual end of the range, which so clearly could be presented with a spike like that out of the bottom. Do not be surprised if it's generated on the other side of this triangle, or at least when we leave it. Could be on the bottom. But what is it to somebody that's went long and decided to hedge on the top? Can you afford that move? Well, you should be able to, and if it knocks out your core, you should look for another hedge on what would be your new core at the top. You never stop the process because you lose control when you do. And that's why I think they call themselves hedge funds, because they don't stop the process. They don't stop the process. And if they're not in a hedge, they're looking for one, because that's how they make money. You know, they keep the assets under all circumstances, only adding to them, only, you know, seizing more control off of the successes that they've had, and then protecting those successful trades with other trades that could benefit off of the failure or decline of the successful ones. Another way I can explain it. Another way that you can understand it. But it's not something you have to learn overnight, like I said. But it's something that you would want to have to learn, like want to learn in order to learn. It's never something that's just going to fall on your lap. You could trade for 100 years and do the same strategy over and over again, but never find yourself trading against a position that you've opened. You know, it's like that's like somebody saying I'm investing in Tesla and I'm long, 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 and I'm going to find a short position in Tesla. Most people, they would think that's impossible. You want to know what's funny? The hedge funds name themselves after it, and they pay Wall Street, not the individuals. So it's interesting. Or else there would be a section on Wall Street for the individuals, you'd think, but except they're all teams for some reason. Interesting point. Used to be. Back when people had pieces of paper and stuff, they used to have the pits and everything like that. Now, if you're in there, you're not an individual. You're a professional. And you might be working as an individual, but you're just not part of a team. End of the day, I think you have to pay like 100 grand just to even get in there. So good luck with that, right? So and now there's only about 15 people standing in a room with no windows. It's about 12 foot by 12 foot. No, thank you. COVID probably killed it because I couldn't see all those professionals risking everything they have to be sitting in a room full of sweaty people, breathing over each other, shouting. The red zone again. A pullback was not as significant as any pullback that we've seen beforehand in this consolidation. Did you know that this is the smallest pullback that we've done since the first response to the red zone? Now it's interesting that we have similarities to the first thing that we've done here. Could we be closer to the last? Is another question. The last thing that we do here. And it's like, when we see that there is a method to the movements that it's been making, even if they are negligible to some, as in they're too small or whatnot, what are the odds that we get a bigger version of the smaller thing? And do you think that having an understanding of the smaller thing can benefit those that see the bigger thing next, or do you think it's going to be easier to go back and look at the smaller thing while the big thing's happening, and then try and analyze it quick enough so that you can understand everything that you're supposed to do on the bigger one? I'm like, no, 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 no. It's best you already know. Best you remember, so you don't have to analyze in the heat of the trade. And it is an advantage. It's like when you go on a camping trip and you don't check the weather, you don't get to prepare as quickly. It's like you would think sometimes the weather's wrong, but that's the way it goes. Sometimes it hails on your crop, just like they say. But you're supposed to reap more than you sow. That's the idea. And I had to add, but that's the law. That's one of the things that that the Bible actually taught, which Jim Roden teaches as well. But not really a religious thing, but it's a successful thing. It's the law of sowing and reaping. And you're not supposed to reap what you sow. You're supposed to reap more. That's the idea. But sometimes it does hail on your crop. That's the name on the game. But what are you supposed to do when it hails on your crop? The only thing you can do is plant more. At the end of the day, that. Now, just like the move at the beginning of the day, I find it suspiciously particular that it chooses to use the same kind of confines that it did when it made this move before. Same kind of movement that it did when it did this before. The same kind of B point, like this one, is right here. Yet again, we came back to make the people of the red line into losers one more time. And you want to know what's funny? Is they call this the point of control. I say it's the point they control you. Is not the point at anybody has any kind of control. People just eat it up. They just victim to the institutions every single day. They can't see what's placed right in front of them because the news is so convincing.
I put a trend line from the top there, John, and this second high here, well, the third one, it hit the trend line coming down. Yeah, I just matched those up there just like that. So it was an easy pick.
It reminds me so much of these two lines here. Like it's like we've got that same channel
Yeah.
again in
And
there.
the 1 minute hit the 15 too as a resistance line out there too. So yeah.
It's like an N wave. N
Mhm.
and N. Same thing. And it's doing the whole head and shoulders, the inverse head and shoulders thing here. We've got the left shoulder to the left shoulder to the head to the head, the right shoulder to the right shoulder. And when we look at this and analyze the movements that it's chosen to do, whoops, the head's a little questionable, but I'm like, well, does it matter? I'm like, well, at the end of the day, it's very close to having made a head and shoulders with a high and a higher high and a lower high. That's going to be the one that's the clearest and everybody can see it. And then we're going to have this one, which is like a low, but it didn't do the lower low and the higher low. I still think the inverse head and shoulders is going to play out better than the head and shoulders that's clearer, contrary to popular belief. But it's not popular belief that makes anybody rich. Skepticism of popular belief, perhaps. You know what Warren Buffett said? I don't really listen to a lot of what Warren Buffett says, but what he did say is be fearful when others are greedy and greedy when others are fearful. And that doesn't fit in line with what you're supposed to do in Benjamin Graham's Intelligent Investor. You're supposed to buy what you know. When does other people's fear and greed become a part of it? It's interesting. Maybe there's something he's not telling us. Or else everybody that buys his book should be doing well. And they should be able to repeat that process, but they don't have 90 years to see if they're doing well. You know, because you only get one shot at being able to do that type of investing and it takes decades. So joke's on you if you try and you fail because you don't really get to practice it. Why would you study something like that? Doesn't make any sense. But I can show you that if you take 1,000 trades in one day, you will soon see if your strategy is respected by the market. And I don't fear that. That's the interesting part. A lot of people worry about that. That's why they quit trading early in the day. You know, other people have things to do because they have, you know, people that rely on them for certain things and such. You might have to do stuff. You might own a company. You know, it all depends. And you know, if you're in a trade, you have to prioritize exactly what you're going to be doing. If you know you have long-term positions and they need tending, you have to find time for it. Some people, you know, they juggle the time. That's a game of its own. You know, and good luck with that too. But I can't teach you how to do that. I can teach you how to trade when you do have the time to trade, though. I'll tell you that. But at the end of the day, it's times it takes more time than people are willing to put into it, and that's I guess that would be the case with every other thing that takes that's worth putting time into. You know, you have to have the time to put into it to do the things that you need to do. Except nobody's telling you in this industry that you have to, you know? So it's all up to us how much we put into it before we decide that we're ready. And that's an interesting one. This is like a 5-wave move now. You can see 1, 2, 3, 4, and 5. Truncated the 5th wave, so far it's truncated. And we want to want to understand that Elliott wave talks about 5-wave moves like this, right? And we know that they can be part of M's and W's. He does not talk about that. I talk about that. But at the end of the day, that's the case. Is it not true that M's and W's can reverse like this? And is it not true that throughout the process of this M and W, this is the pattern that it chooses to reverse on? And it's not coming, like in my sketch, imagine it's not coming from a higher high. Like, let me draw it again. How about this? This one here versus, oh, sorry, this one here versus this one here. Is it not an M into a W? And is it not perfect in every single which way, shape, and form? But it also has this as the movement in the middle. You want to know what's interesting about this movement and the one that Elliott wave decides? This. But do you want to know what I say about both of them? They both have this line, and they both have to break this line if they are ever to play out. So does it have to make a fifth wave? No. Or else this would never work. Interesting lesson for the end of the day. But the market tries to teach us these things at the end of the day, and I can see right now, as I'm explaining it, it doesn't have to do the thing that everyone expects it to do, the thing that it just showed everybody that it was doing well in the previous days, or the previous sessions, or the 5-wave move that it just made here. You could see that it was perfect. 1, 2, 3, 4, 5. And it went into another drive, which makes it an ending diagonal, where we have 3 drives at the bottom, which is absolutely fine. It's just a little bit more complicated with extra 2 moves. At the end of the day, we just hit another B point right there.
It's this little move came off the 188, 200.
Interesting. And that could have an
And the
impact.
bottom of the volume node too. So
Oh yeah, isn't that interesting how this 5-wave move here had 1, 2, 3, 4, 5, and then it did extra, and this one can't even do the 5th. I mean, like, come on, really? That's really weird to me, because it's the same level. This one's debatably higher. Well, it is higher, and I'm like, well, you would think it would be easier to make a 5th wave, but it decided to really, and I'm like, okay, so what? It decided to screw the people that decided to trade here. It's a terrible spot to trade, and that's why, it might have respected them like this. But anybody that tries to take the 5th wave as a short trade is exposed to the entire reversal that there is to come. Do you think it's a good idea to short here? Well, I would expect a slap on the wrist, right, from the market if I was to short for there, because it's like, well, why the hell aren't you shorting from here? Why didn't you find value up here when it was like a head and shoulders or something like that? And then we're left with a head and shoulders to inverse head and shoulders. Funny, but it's actually very interesting how remarkably similar an M into a W can be to just that movement, and to how remarkably similar this entire sequence can be, and this entire sequence can be by going like this. And it's just a rough cover of everything that we've been doing, right? Rough cover, and here. So basically the components are, we've literally made this sequence twice. So we started off by going from one side to the next, and then we fell all the way down. And then we did that move again. And we took that same attitude over here. Suspiciously particular, eh? Why is it the same distance apart? Or where is that the strategy of any one individual, let alone more than 100 people, demanding that it should work like this? No, 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 no. The work of the professionals, guaranteed, that have the integrity to wade through the consolidation, because they have to manage the assets by the end of the day, or they get in trouble. They don't get bonuses. They don't get anything. So, and they don't like that. So they make sure they do it right, or the price will be paid. And it's like, I mean, they're all following rules. I mean, name of the game. If they don't do it properly, they get into trouble. And every single day it's done differently, but it's done properly. Which is an interesting statement. Like, it would be contrary to popular belief. They would think that the best traders would do the same thing over and over again. And because of their holy grail strategy, that they will be able to see every single day, even if it's an all-day up day versus an all-day down day, they will position themselves with the same strategy no matter what. They will catch the highs and the lows because their strategy finds that, and it's the same way that it reverses every single day on the low and the high, right? No. It's not the same way. Every single high and low is different. Every single one to every single day. And I'm like, well, yeah, you're lucky if they match up. It's to that point. So my argument is you're lucky if they match up, and other people literally will make it part of their strategy and wonder why it doesn't work next week. Even when they can prove to you that it did work last week. Well, what does that mean then? Does that mean that was the strategy for last week and it doesn't matter for this week because there's a new strategy that did matter for this week and that was profitable and I can prove it? So it's like, it's a choice to stick to the old ways or to adapt to the new ones. Of course, the imbalance is coming up. Blue dash line is the imbalance, and it's subject to getting us out of the triangle. So in the event that leaving the triangle was to negatively impact anybody, you want to make sure that you readjust. I mean, like, what is this 5-wave move? Are you trying to be a 5th wave, or are you trying to be an M into a W? Because I mean, like, I see a little bit of both going on here. I mean, one move away from making a W. One move away from making a 5th wave. Is it the best place to trade if it's caught between two patterns in the middle of a triangle close to the POC? No. No. If I had a gun to my head, I couldn't. But it doesn't mean that it won't leave this area. Of course it will. It just means that there have been more valuable areas to be exposed to this one than from this spot. Because you can be in from low of day and still be long for this area. It doesn't mean that you're taking a long here. It means that you're safe to continue holding along through here no matter what spike comes out of the bottom of that triangle. You're likely to endure it so long as you don't have a stop above the green zone, like I said. And at the end of the day, what's funny is the people that aren't allowed to have stops above the green zone, they have to have traded before 11:45 because not a single long trade has been necessary to take because literally, why did we not find value in keeping the ones below the green zone? Because we knew it was going to be difficult for every single long trade and every single short trade to survive within this area. Why would we want to fight both sides of the ranges? Only fight one, because you're in for infinite upwards potential. If it leaves out of the bottom, well, you better have a hedge. You won't be able to explain why why you've lost, if you worked for a firm. They'll be like, you worked for a hedge fund, you didn't hedge. I mean, like, what is the name of the game? And I mean, like, well, the other way is to fold, take the easy way out, sell all your positions, lose control, and you're guaranteed not going to make any more money, guaranteed not going to lose any more either. But you lose all the control at that point. You have to find a new entry, and the next thing you do will undeniably have some risk to it because you decided to give up the position that didn't have any risk because it was contained within your stop. So I mean, why would we put ourselves in a position where we had to find a new long trade when we don't have to? It becomes an interesting debate, and I'm like, well, it undeniably is easier to continue holding from 2 months ago. It's undeniably easier to continue holding from 3 months ago, 4 months ago, 5 months ago, 6 months ago. So, every day that we are in now, we spend catching the highs if you're long, right? Because every single day we want to have that short trade benefit for the next month and the month after and the month after for as deep as it can go before that core benefits again. If it wants to make a 95% retracement, that's fine. We won't have to catch the 95% retracement because we're still in. At the end of the day, and if you have a hedge from the other side of the spectrum, you don't have to drag your stop up so much because you're protected by something else. You're protected by the fact that if you're losing money on your core, you're making it on your hedge. So why do you need to give it so little room that it can't breathe at all? And everybody that's caught dragging their stops up and not taking accountability for their trades, it's like the market doesn't respect it, or else we wouldn't make moves like this. You know, can everybody say safely that moves like this have been very common lately? And I'm like, well, what does that mean? Here's the imbalance. And what does that mean? Does that mean that anybody that caught the right trade that was good and they bought the dip, and now if they take their stop loss, right, and they drag it up to secure some profit, what happens? Are they contained within this move? Well, I mean, if they drag it up anywhere to retain any of the profit that they're excited about, what happens to them? They can't do this, can they? If it does this, you lose your position. So is this a good option always? No. You know what was funny? Is it was a great option for the people I was teaching 5 years ago. And it worked so well. But now in this market environment, they will have had to adapt. It's true. And if they don't, and they keep assuming that it's going to come back, they're going to be very distraught with every single pullback that comes back to them and keeps pulling back, and they wonder why their stop and profit isn't working like it used to, because they fail to adapt. At the end of the day, it's true, and I say this with the severity of, you can't just write down my trading strategy and assume it's going to work for you on your own. It will not. You have to adapt, and I teach how to adapt, and and like maneuver with the dangers, with the opportunities, understand them so you can flow with the market and understand every single thing that it's supposed to do. Is it not true that we're making the M into W? Now, you don't have to be trading this, but God forbid you didn't understand it. You might be doing something else. You might have thought it was going to do something else, and you might have obstructed it from being able to do the thing that it was supposed to do. And this is what it did, the thing I thought it was going to do. And it didn't come down and do a fifth wave. It literally was an M into a W. And now we're outside the top of the trend line and at the red zone again. Having made a B point down below, it's allowed to get hit on the retest of the triangle. Doesn't have to, but it can, so I wouldn't obstruct it. In the event that you drag your stop up as a method of protection, it could cost you your position. And as I explained, the market really doesn't like people trying to capture the exciting bit with a stop. It's like, yeah, if you try to drag your stop up and secure this profit, we're going to take your entire position, and it's not going to be as profitable as at the high. And I mean, so what is the right way to trade then? Well, it's to get the low and to keep it. To understand that you earned the low and you're working for it. Doesn't matter that it comes back 95% of the way. You hold it because you can take it. And you want to know what's funny is it's so much easier for the people that are still holding from last month or yesterday or at any time before. And here's the target. If you hedged it, make sure it's made safe because it's directly in danger. Now, is it not true that we return back to the triangle just like we did the last one? What if we want to make an even spike out of the bottom and the top? Does it have to be incredibly even, or can we be a little lenient with it? I think we can totally be a little lenient with it because it's just meant to move enough to screw the most people. And look at this 61% retracement. I've seen them so many times that literally it's like I can tell that it's at a 61. So and it wants to do another 61. It wants to be a 61 to a 61, and it's guaranteed that nobody is literally paying attention to that. So they're showing off their work right now, showing off their control basically, because it is not the public that has it. They've long quit trading hours ago. Only the people that are left are the people that are hurting, trying to quote unquote make it back usually, and it's a tough spot for them. They think twice about doing the same strategy tomorrow. Ironically, it'll probably work tomorrow because it failed today. Contrary to popular belief, they don't think somebody's out to get them. So they just trade obliviously, and they assume that their opponents are just as, confused as they are. That is a mistake. If you assumed that every opponent that you had in trading was like the bank, or like the mutual funds managers and stuff like that. No, 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 no. Oh my goodness, is that ever dangerous? It's like they don't stand a chance. They remind me of like I don't know. It's like the information is limited. It really reminds me of like in a big empire organization. They're like the people that are just at the bottom that literally have to face the enemy, face the individuals. They're the people that they put in front of them, and they keep the information limited because they don't want them to have anything to do with the thing that's actually right. If anything, they want to be like the guy that was in the chat today where he was like, you know, it's unbelievable. I get this every day now where people are like, I can't believe how many lines you have. I'm like, I dare you not to consider them. Literally. And very interesting to me. Oh, we did more than the 61 too. But
I must have missed that. Someone was talking about how much stuff's on your screen.
oh yeah, no. Today, earlier in the day, I had somebody mention. He was like, he was like, good luck in believing imaginary lines, basically. Yeah, and then I had a guy yesterday or I don't know if it was yesterday. He was basically telling me that there was some jobs report, the market was doomed to go up, and it just kept going down. And I was like, well, at the end of the day, like, it just brings they bring a sour attitude to me because their strategies are so bad that they're annoyed by it and they can't see anybody else be successful. They don't even want to hear it because it's against what they're doing. And I mean, I've been there before. I've been so lost that I literally was studying something and I would hear that somebody else was against the trade that I'm on and it would piss me off. I used to work with people every single freaking day, and they would call out their trades and it's like I'm like, yeah, oh yeah. Oh, I'll never forget on the first day that I made my first trade for a firm, there was a guy who was like, "Oh, so you're getting into Google, are you?" And he was trying to psych me out of it, and it was because he was having a bad day. I only made $300 on the trade, but it was my first trade and my only trade that day, and I got out of it. And I was like, "What the hell was wrong with that guy?" He really made me feel uncomfortable. And then I learned, wait, hold on a second. I showed up here with one friend. That's all I have. So it's really interesting. I don't like people in that industry. That's why I want to make my own team. I know it's just like it's tough. Yeah, financial people are very very like abrasive and rude and I don't know. I don't know. It's tough for me. Full of vices too. Tons of vices.
Belong to this. I've been trying to get onto this Reddit thread and stuff like that. And you have to post so much stuff before anybody can listen to you or talk to you or anything like that.
Mm-hmm.
Yesterday's theme was how much people were losing.
Oh yeah.
One guy racked up, $1,300. Another guy racked up 600. Another guy racked up, I don't know. And I'm not at the point right now where I can reach out to them and stuff like that.
Yeah.
And if I could, I would, but you have to post so much, or because originally when I got on there, I obviously mentioned us, and then the thing came back and said we couldn't put it through because you haven't commented enough or something like this.
Oh,
jeez.
Yeah. What like even like things like.
You're right. There's just a million different ways that people go about doing it, right? And they just stick with their program or whatever the deal is. But it's just trying to get the word out there and stuff.
Yeah. Sorry, I just was literally going to pull up a thing and I noticed there's somebody trying to like scam people. It's like god damn. People they're literally working their asses off to try and message people in the group to I don't even know what. So beware of any kind of messages that you get. I'm not messaging anybody. And if you want to talk to me, call me because I'm always available to talk to you. Anybody, like if you want to talk to me, I'm here. Except on Mondays I go watch my kid play hockey, and other than that, I'm like that's like an hour. I'm out of the picture and it's 5 o'clock to 6 o'clock. Wow. And I'm like, it's perfect. So the market's not even open. And that's the way the cookie crumbles. But other than that, I'm available. You can call me at 2 o'clock in the morning. I won't be upset. I'll be like worried, like what's going on? Something must be important. Like you have to, like I'll be there, 100%. Anybody calls me anytime, I'll be there.
Yep. I get it. But the one thing I found that since the beginning, John, you know, we've had people come and go and stuff, and it's just being persistent. And I saw the same thing with Investors Group. Very few people made a lot of money there. Um, and to make a lot of money in that sort of situation, you have to be persistent. You know, you have to have confidence in yourself, right?
Yeah,
So
of course. Yep.
that's just the way it is. You know,
Well,
nothing's simple, nothing's easy.
oh yeah,
You
yeah.
know,
Mm-hmm.
just the way it is.
Same thing
But
with all the sports
if they
players.
lose, they quit themselves, right? It's not a matter of you or me or anybody else. It's just they just don't have the the guts to do it. That's all. They give up.
Yeah. Yeah, with me, it's like I don't expect the good things to come easy, so I understand that they will they involve me sacrificing, like they involve me taking a sacrifice in some which way, shape, or form to be able to reap the benefit of it. And I don't expect to be given it otherwise. And I don't like to have things that I haven't sacrificed for. It's funny enough, like I like to make sure that I've earned it. I don't like the idea of being given something that I didn't work for, that I don't deserve. That like it's got strings attached. Usually, it reminds me of like the mafia being like, "Oh, you want $50,000?" It's like, no, thank you. I'm like, I don't want that. I don't want that shitty deal that gives me money now, but then screws me over later. It's like, no, terrible. Well, like, but a lot of people take the 50, and it's from the bank. But it ends up costing. But and if it's not us in some way, shape, or form, I'm like, I'd rather just work hard and actually earn it, not have any strings attached, and that's a lot easier and better for me in the long run. Makes it.
Singing on the same sheet of music too, right? Not opposing to what's going on.
Yep.
It's just nuts.
Yep.
Yeah, you're the freaking man, John.
Thanks, man.
I wouldn't even dip my toes into this shit if I didn't have you to follow, man.
Thanks, man. Appreciate that.
Yeah, of course.
Well,
Ditto.
yeah, I don't want to keep you guys too much. This is the end of the day. We spiked out of the bottom of the triangle, and we'll catch you guys
Sounds good,
later.
John.
Have a good one.
Appreciate it. Yeah.
Yeah,
Take care,
anytime.
guys.
Take care. Have a good one.
You guys.
Cheers,
Bye.
guys. Catch you tomorrow.
Yep.
All right. Take care, easy, guys. Yo.